Good morning. Hope you had a good weekend. It is April 24th. We're going to be looking at the stock market, trading options, futures, stocks, watching some runners, watching BBY, SPY, and looking at some technical analysis. Live trading. Get set up here a bit. BBY filed Chapter 11 on Sunday. So we'll look into that, look into the filing, and see what's going on there. We didn't already know. Got that Yaz warm up. Okay. Okay. If this thing's working. It's morning rally. I'm not so happy. Morning BBBY. Morning Ace. Morning Apples. Apples and Aces. Ace, you already found the emoji. Hey Julian, I didn't have a big exciting announcement. You just did it. How did you just find it? Does it notify you guys of a new emoji? Alright, I'm gonna share this stream out on Twitter. Should it be provocative? Just saying BBY is bankrupt already? BBY bankrupt. Just to push people's buttons to get them in here. The power of making people feel smarter than you is pretty strong. No, don't do that. Can you edit tweets now? Edit with Twitter Blue. Ah. I always suck again. All right. Okay. Bed broken, bath bankrupt to the beyond. All right. There's our Discord. You guys want to join? Fifth fake Discord friend request from you? EK man is I blocked everyone I saw that was I guess fake in Discord, but let me know and I can do some more. I watch a lot of the recap days. That's pretty funny. Yeah, I chimed in on Discord some too today. Turn my mic down a little bit. Looks like I'm clipping for some reason. Maybe talking too loud. Yeah, we'll go over it. Love sex? Good. I like that. Okay, Julian, I totally didn't even see that play. Well done. I've thought about buying more. We'll see. I'm not gonna be too hasty to buy more, but yeah, averaging down potentially. Didn't do well since Friday. Yeah, I know. I feel a little stupid for not selling on that peak, of course, or a lot of you do. Not just Wednesday. Like Wednesday was an easy read, but even a little pop on Friday. I was actually green on a lot of it from when I'd bought, so would have made sense to just mitigate risk and close out before the weekend, especially with all of the FUD articles about bankruptcy, in case there was something that leaked and it was true. But yeah, quite the little range we have here at pre-market already. It's kind of crazy. Wish I'd been in Wish. I was in Wish. What's going on with it? Oh yeah, they had wait, what was it again? I forget. Oh yeah, insider buying. Or they I think they bought up like huge buyback. Yeah, huge buyback. Yeah, I mean bankruptcy protection is step one to being bankrupt. They're not bankrupt yet. They haven't filed for bankruptcy. They filed for bankruptcy protection, so yeah, early stages basically. But I mean, at this stage right here, they're in a better situation than they were on Friday, because now they basically have gotten rid of their obligations, their debts. They have protection from that. That's what the bankruptcy Chapter 11 protection gives you. So stock price is way down, but yeah, they're technically in a better situation. The way I see it. As far as for shareholders, is it better? Maybe not. I mean, definitely not because it's just the share price, but yeah, so they have. I shared a lot of DD on Discord today, guys. If you haven't seen it, check it out. It's Happy DD. We'll probably go over it somewhere on stream. But yeah, if you go to Discord and then go to under Happy DD, it's not DD I've written or anything. It's just DD I share basically. But yeah, we'll go through some of it. I mean, Chapter 11 is. It was one of the catalysts I've been saying could cause a squeeze also. Of course, it's a more scary hold, for sure. But, hey trader. Detached BBBY from collateral. I've heard that it does. Yeah, they basically can use that and sell that. I've heard it basically pulls. It pulls the power out of the board too, and it completely transfers it to the, I don't know, the bankruptcy, the Chapter 11 team or whatever they're called. Yeah, I think it does set up potential for a lot of stuff, and like we've said with a buyer coming in, you know, the cheaper this gets, the more attractive it's going to be. One reason that they wouldn't want it to go be under Chapter 11, and maybe this was a move by the board. I know I was listening to Roach, and he thinks that the board was basically trying to avoid hostile takeover, so they filed Chapter 11 for that reason. I mean, we don't know, but yeah, it's just basically one of the reasons why they would want to do it with it being out of Chapter 11 would be just for the cost to go through the courts to do it, the hassle, I guess, the headache, but potentially getting it for a better deal, of course. But I don't know. There's a lot of speculation that many buyers have been waiting for it to go Chapter 11 so that they can start bidding on it. Yeah, sure. I'd recommend a 1 share view car. Yeah, that is the one thing that's kind of interesting is it going to OTC, and I think that does limit its upside as far as a squeeze. I mean, we've watched Sears for a while do, you know, multiple thousands % in a day trading on the OTC. However, it doesn't mean a whole lot if this is trading at, like, you know, fractions of pennies. So the fact that you're not going to get a whole lot of momentum trading on OTC. It'll basically just be you against funds and, you know, big short sellers that can buy on OTC, buy to close or buy to open. Since they've now restricted retail from, I think most retail can't buy on OTC at least. I got soaps. John Parker, thank you for the shout out on PP show. I did see that part. You hit him up in the morning with a dono and a shout out to the Happy Money crew. I appreciate it, man. You guys were sending the love, and I wasn't able to be there. That's cool. Getty's up 50%. Market just opened. Look at the bloodbath. Getty's up 50% on a buyout. So this is what we were looking for on Bed Bath. So Trillion Capital makes a 10 share non-binding bid for Getty. So it immediately ripped up to $10. Watch this one because it very well could go back to 10 or even above 10. But it's I think it's an early. I haven't looked at it, but probably pretty early on. Spies moving up here. Didn't let's see. Okay. Well, good thing is I don't have any on margin. Whoa, big rip on Spy there. Bad news is I didn't sell it on Wednesday or on Friday. But yeah. Well, watch her go. That's a huge move on Spy right at the gate. I didn't mark any levels here. Let me see what's going on. got to move just right back to yesterday's high within the first like minute. A lot of volume on BBY pre-market. It's making me think more about all that volume on that Wednesday, that like almost billion in volume. What was actually going on? Maybe it was more to it than I initially thought. Happy Money Gang. Yeah, thanks, John. I appreciate it, man. Yeah, I would have. I mean, screw BBY for putting that filing out on a Sunday. Like, what the heck, man? If there wasn't a reason, like some takeover by Monday morning, and they had to do it by then, which we haven't had because now it's 9:30 and the market's open. Why do that on a freaking Sunday? That's stupid. Like, do it on Monday morning, do it on a Saturday, do it on the Friday after market close. Sunday at 4 a.m. like. Or whatever it was, just stupid. Yeah, what was the pre-market volume on it? It was kind of insane. Well, once 8 o'clock opened up, which is when most retail individual brokerages are able to trade, this thing went kind of crazy. That's when it broke out of this range and went nuts. Yeah, we've got more volume in like 5 minutes pre-market than GME will get all day today. Yeah, right here, look, 5 million, 5.1 million on that candle. Optimistic price target? Yeah. It's so hard to tell. It's more just about percentages. And the problem is you don't know where that percentage starts from. We might get a 5,000% move, but that could be from like a fraction of a penny. And that might be at OTC. So price target. I think it's still get up to $1. Yeah, I'm not like discounting the squeeze. I think Chapter 11 was one of the catalysts for me. One issue that has been mentioned, which is the flow is much larger, which does make it more difficult. But it's just to see where. Morning, Dennis. Really does. Yeah, I don't know. They tainted. eToro is offering 2 times leverage. Are you freaking kidding me? Are you getting margin on eToro right now? Were they not before? What? What? That is very odd. That seems very strange. No to Love Sacks? I don't remember the ticker on Love Sacks. Is it Love? I think they have Love ticker. Maybe you're talking about something else. BY is moving up here, so we had a low pre-market at 1460. I don't know what these. Why do I have these lines? These like fib levels? How do I have a 1830 in there? Where are those lines from? And then the high on pre-market was 24 cents. So the bottom to the top today was an insane trade if you were just trading pre-market. That was 64%. So as this thing gets cheaper, I mean, the percentage swings are going to get greater. Like I said, like OTC stocks and penny stocks, they have the biggest swings because the market cap's so low. Especially if it's a small float, which BY doesn't have, but it gets a ton of volume regardless. You just bought. Jeez. Wanted to buy some. Oh, there you go. Yeah, if it breaks this level, that might be a good buy. I would not be buying right here when it's testing the high though of the pre-market. I'd look for the excitement to cool down. Could still get tests of 16 cents or whatever. But that's just how I'm trading. I mean, this thing can move quick now at this point. Is there a percentage that you want in a cash account according to your notes tips? Percentage? Oh, like percentage of my portfolio in BBBY? Not sure what you're saying. 80 cents today? We could honestly just squeeze out of the gate. Turn the buy off and off in Reddit. But really, they just were confused, Redditors, and they got 2 times leverage. Funny. So I have a little clip queued up here, actually, of ABC talking on the show last night. He just caught up to it. So yeah, it's rejecting that pre-market high so far. But yeah, he's a smart guy. He actually has quite a bit of experience, I think, in bankruptcy. But I'm gonna play it for you guys. You can hear.
This is what happened in January in AMC. This is what happened June in AMC. Huge short volume. We have also seen in BBBY as well. So, but right now AMC GameStop doesn't have a big spike right now here, as you can see. They don't have it, but we have it.
So I'm not well versed in bankruptcies or anything like that, guys. I don't think a lot of the people on PP's show are either. Maybe a few of them know some, including PP. I think he kind of just gets swayed by whoever sounds smart and people like it, and which, to be fair, I do the same at times too. But at this point, he's been listened to a lot of Roach, and Roach's whatever, you know. So and he's thinking, oh yeah, this is basically more bearish than maybe it is. But yeah.
Here in BBBY, so that's why I'm still bullish. Not only just like, oh, there's like fucking bankruptcy news and shit like that. Look at this, man. This is August. This is right now.
So well, like they filed Chapter 11 bankruptcy today. You copy.
I know, but this is not like bankruptcy.
No, it is.
It's
Chapter
like
11.
Yeah, but they can get out of this thing too.
It's protection, though.
It's a protection, people.
They could literally within a week come back and not be under protection anymore and be in full swing again. There's no set time frame.
Yeah,
it's just a protection mod. Section 3.3.
They're not in bankruptcy right now.
Yeah. The fact is that it's not Chapter 7, but they are going to be heading towards bankruptcy soon. You copy. Like there's a judge and everything, man.
I mean, but like I said, like ABC said too, right? If they can, if they can find the bidder, if they turn around, you've probably seen the filing too. But you know, the Holy the interim CFO is now official CFO, right? So yeah, she did, right? Holly Atkin, I think that's her name. Yeah, here's filing here. How do I share my screen? Oh shit, maybe sorry guys. I'm just gonna throw here. Just 1 second.
I mean, I still think someone will come in and swoop this company up for sure. You know, that's just my opinion, right?
The difference
how it gets there.
The difference with bankruptcy, you actually have to pay a lot of money. You would actually have to go to a bank and borrow the money from 6th Street and say, we're going bankrupt. We need to go through bankruptcy protection. They haven't even done that. All they've done is filed for Chapter 11 bankruptcy protection. So all that means is at this point today, no creditor can come in and seize. No creditor can make a claim on the company or anything. It means all debts and obligations and liabilities are put on hold until they create a restructure. But they're using Section 363, and they're also using something called a bidding process. So that bidding process has already been dated for the end of this end of May. So literally for the next month, they don't have to pay their ABL, their FILO. They won't have to do anything, pay any leases. They're also going to restructure some of these leases, and it means that some of the debts that are owed for cancel. Like I just got a release myself, and it cost me $80,000 just to terminate that lease.
Yeah,
and I had that lease, and it was sitting there vacant for a year. And it cost me 80 grand to get out. These guys too have obligations to all these landlords out there. So this filing under the Section 363 is going to eliminate that debt. We just saw a short video on it. It's going to save them a ton of money.
There you go.
It's going to save them about $800 million using Section 363. That brings their debt down to $1.1 billion. And then they go through a bidding process. And so long as the bidding pays off all the debt, which is only $1.1 billion now, they're in a great position to open up their doors and get out of protection again.
Yeah, and then also do the turnaround too. So if that happened, you know, both dual path, I think that's perfect scenario. PP, can you approve the screen?
Yeah, I just wanted to share some of that to give a little insight. What's kind of where it's at. Let me see this next level's up here. So yeah, Bed Bath rejected that high, but it did come up and retest it. See where it consolidates at. So far it's above VWAP. It keeps just ripping and then wicking. Rip wick. Oh, not gas. The gas is looking like it wants to rally. I think it's been... oh, yep. First month's view is so cheap, spread very high. Oh yeah, I bet the spread was big. You said to have cash available and not have the whole my portfolio in stocks. Oh yeah, a cash position. I mean, people, it varies depending on risk tolerances and the macroeconomics of what's going on. I know since we've been in a bear market for a year, people's cash positions have grown. Could be anywhere from 10% to 50%. Some people are all cash. Just depends on how much risk you want to have. You know, anytime cash is out there, it can go up or down. So, I like to have, I don't know, at least 10%. Depends though. I've been heavy into certain stocks at certain times. So once I, wow, look at SPY though. Once I close out of those, I'll end up having cash, maybe up to 30 or 40%. I think a good rule, I think, is like 20%, 30% cash. Oh, SPY is pretty volatile this morning. I don't think we have much data this morning. There's definitely some this week, and then all the big earnings. Yeah, I guess, okay, so tomorrow's new home sales, and that's pretty much it. Consumer confidence, but that doesn't mean much. About to lose a ton of money. Maybe, yeah. I mean, I think a bankruptcy move could still happen. I prefer it to happen before it goes OTC. Not sure if I will want to hold after OTC or not. You know, stocks can make big moves in OTC for sure. SMX kind of moving up a little bit. So it seems like on average, BY could go OTC this week, maybe by the end of the week, or potentially by next week. There have been exceptions, of course, with some stocks that don't go OTC for months. I'm trying to just trade on the rule, not the exception. EVTL is up 4%. Pulling out of confusion. OTC is the pink sheets. It's what what was the name of that movie? That'll give you the best image of OTC. Frick, what was it? Oh, Wall Street, not Wall Street Bets. It's the movie with the name Wall Street in it, with Leonardo DiCaprio. When he goes to that sketchy like strip mall place, and he goes in and he knows all the tricks from the big hedge funds. He goes in there and starts implementing them on OTC. Wolf of Wall Street. That's it. Thanks. They're basically sketchy stocks that they're not regulated nearly as heavy. So they're just more sketchy. Typically they're very cheap, usually much less liquid. Smaller companies. Yeah. But I mean, people, it's not like it's dead. Like, people just trade OTC stocks, and people just trade pink sheets. Like, that's a thing. People just trade penny stocks too that aren't OTC. So it's not like there's a whole market there. They have less regulation, I think, and it's just easier to trade publicly on the pink sheets. Go to 30 today. I don't think today, but it could. I mean, I don't know, man. I really don't know. Like, you can't really do TA. TA was setting up for this run, and that's why I bought right. I just didn't sell right. I thought this was the beginning of a bigger run. TA was setting up for that run. At this point, like, we kind of have to wait on the TA, for me at least, to see, okay, I think we're gonna do this or this or this. We've had a huge reaction to news, so every reaction there's an overreaction, so we might get a little bounce from that. But potentially we've already seen it because we've literally bounced 60% from the lows. So we'll go up to 30 today. I don't know. Why didn't you make 60% this morning though? In a couple hours. But yeah, I think this whole week it should be volatile basically and have pretty big volume. As far as me for entering, I don't know if I'll put any more in. Like, yeah, my cost base isn't bad. I think I could probably get out even with a profit, but it's not a profit. I need much higher for a profit over the lifetime of my BBY losses, unfortunately. But now we do have a gap. There's some TA for you, and good volume this morning. 134 million, which is actually quite a bit of volume. Wendy's Alley of Wall Street. Yes, exactly. Stocks on Nasdaq liquidated. No, you. I think I should have jumped on that nat gas. You still you'll still have a position. It'll just most brokerages, most individual investors can't buy on OTC. As far as I know, I mean maybe they can. It's not as heavily traded, so you'll be able to sell. You'll be able to sell your position. I actually held some Sears when it went to OTC. Yeah, maybe it already was. I don't know. But I held Sears when it when it had it, so you could only sell it. That's when I kind of got sketched out. I'm like, I'm gonna sell this thing. That was right around when that was because they were basically, that's when they decided to limit retail from owning it. But I see Bob the bonds, yeah. What exchanges are blocking you from buying? You share some screenshots in Discord. Announcement on a Sunday. Yeah. Pretty jacked up. FRC is getting a bit of a move. I think they have earnings after hours. Is this the one, right? 424, or do they already have it? Yeah, it's coming after hours. So, might close my FRC play. Carvana's up 5%. There's another rejection on 24 cents. Or at least a wick up there. I enjoyed trading the SPX options on Friday, though. That was fun. I guess it was fun because it worked. And I was surprised because I mean, really, I've hardly ever traded those. Last time it was a long time ago. But I was surprised how quick you could actually get 100% with how volatile the market is. Like from here is where I opened it to here was 100%. Which, it's a pretty good move, I mean, overall, but lately on the SPY, that's not like a crazy move. GME is flat out of the gate. HD is still rallying up. Yeah, it kind of sold off a little bit. We'll see if that makes it up to that $10 and it's pinned up there from that buyout news. Yeah, thanks for your thumbs up, guys. I appreciate it. $20 likes. Well done. Well done. Leave Sears in peace. Necrophilia? Sounds like something I probably have. SMX. 11%. I don't like how far that one sold off though. Resistance was a support. Did we hit 24? I do have that line there. I guess so, huh? Yeah, that was that support. Resistance will become the new support. Did I just draw this line today? I can't remember. We actually had a little lower. We're kind of past. I'm getting rid of these stupid lines. We got way too many. Kind of past that though. These levels were a little lower. Yeah, we're flirting right on it though. You're right. This is in this area for sure. Yep. So it ripped right back up to that previous support. Yeah, might be a good short from here. Unless it breaks. It's breaking a little bit. Yeah, it's filling the gap. Wow. Called 80 cents again? Oh. Kind of waking out of there. 24.45 is now the high. Intraday range is increasing. Over 60% now. Max 11%. Everybody's at 20% off by the coupon. That is stock. Nice. Yeah, I've got a gift card to BBY. I told my wife she needs to go use it. Recoup some of the stock losses. We'll buy us an air fryer with our gift card. Kind of double topping here again. Got a big double doji. That is pre-market though, so don't hold as much weight. However, the pre-market today did have quite a bit of volume, so you could hold it with a little more weight, I'd say. SMX 13%. Bouncing right on that level. We're getting flat. PSX. When to get out on Bobby? When you're content that if it goes higher, you won't be regretful. 16% on SMX. Phillips 66. I'm not very bullish on oil right now, but Look at the chart. It's not great. I mean, if it holds here, maybe. I mean, I see could make a bigger range down here to 96 or even 90. You know, momentum's down still. Yeah, there's a little rejection there on BBY. These calls going for 736% IV. They're so far out of the money now. Over 100% out of the money. Jeez. Since I know you guys don't read, I will read some of the stuff I shared. That one got deleted. This one's by some random guy. Literally. The ones that get out. Yeah, I mean this week, and then if it goes to OTC next week, yeah. Chapter 11 is not what people think it means, or at least the very vocal minority of this sub. I have proof looking at this with panic and stress is what makes people make rushed and thoughtless choices. Chapter 11 bankruptcy will result in one of three outcomes for the debtor. That's BBY. Reorganization, conversion to Chapter 7 bankruptcy, or dismissal. In order for a Chapter 11 debtor to reorganize, the debtor must file, the court must confirm a plan of reorganization. In effect, the plan is compromise between the major stakeholders in the case, including the debtor and its creditors. Most Chapter 11 cases aim to confirm a plan, but that may not always be possible. So essentially, if BBY were to cease operations and liquidate, they could just file Chapter 7. So why file Chapter 11 if you don't need the potential as of the Chapter 11? Would it be much simpler and more logical? Yes, it would. Let's read that again. Reorganization. That's right. They have to provide a reorganization plan that has to be approved and be in good faith. That is not given. It will not be approved in court. Chapter 11 does not have to mean liquidation and cease of operation. It is not that simple. Yeah, if you read the actual filing too, we could look at some of it. But this was a voluntary Chapter 11 filing. They weren't forced into it by their creditors. And they specifically say it's to sell off certain assets. So it's not, yeah, it's basically what they've been doing, but now they have protection of Chapter 11. They've been closing stores, they've been liquidating already. If the judge approves the reorganization plan and the creditors all agree, then the plan can be confirmed. Section 1129 of the Bankruptcy Code requires the bankruptcy court reach certain conclusions prior to confirming or approving the plan and making it binding on all parties in the case. Most notably, that the plan complies with applicable laws and was proposed in good faith. The court must also find that the reorganization plan is feasible in that unless the plan provides otherwise, the plan is not likely to be followed by further reorganization or liquidation. SPY's coming down now. 412.87, is that? Oh, that's this little high from over here. I'm not playing it right now, but NVIDIA's probably getting squashed. Yeah, I mean, NVIDIA hasn't come down. This thing's just got that AI news from Microsoft and it pumped from that. MU, I guess, is doing a little better. I'm short on those, so. But it's a good thing I have a lot of time on those options. I mean, the time's coming down, but yeah. BY holding up all right. It's above VWAP. That engulfing. Maybe. Might be an engulfing candle there on the 5-minute. It's in kind of a little 5-minute bull flag here on the daily. See if VWAP holds. Yeah. I'll keep reading. Okay, so now that we have a little understanding of Chapter 11, what else do we need to know? Let's piece things together a bit. Remember the huge bond volume we had a week or so ago? BBY bonds flooding our bond desk. Okay. Throughout the duration of the reorganization, bondholders will stop receiving coupon payments or principal repayments. Furthermore, the company's bonds will also be downgraded to speculative grade bonds, otherwise known as junk bonds. Since most investors are wary of buying junk bonds, investors that want to sell their bonds will need to do so at a substantial discount. SPY's coming down below VWAP. Ooh. Is that the level to short? Like, I'm not really trading it right now. Maybe I should be. That's definitely a nice rejection of that high. Still in this downtrend, I see. But bounced here, so really just kind of consolidating. Morning, Mo. Let's see. Junk bonds. So why would BBBY buy back their own bonds if they knew they'd go into liquidation? Why buy something that can turn to poo-poo if you know it will? That wouldn't even make sense if it was a decision malicious towards shareholders and bondholders. Doesn't make sense, does it? Acquisitions as a means of restructuring firms in Chapter 11. Bidders for bankrupt firms are generally in related industries and often have some prior relationship to the target, suggesting they are well informed with respect to both the value and best use of the target's assets. For a sample of 55 acquisitions in Chapter 11, we find that firms merged with bankrupt targets show significant improvements in operating performance, while matching non-bankrupt transactions show no significant improvement. So it's more beneficial that they're Chapter 11. I think that's what that's saying. Yeah. Yeah. We also find positive and significant abnormal stock returns for the bidder and bankrupt target at the announcement of the acquisition. This isn't some just generic MSM article. This is data that has been proven how Chapter 11 can indeed be bullish. Does it all sound a little too familiar? Prior leadership to the target as an RC being invested earlier. Like baby, this thing RC has great interest in, which coincidentally can be sold during the reorganization under Chapter 11 as a means of stabilizing the balance sheet and fund operations. So yeah, he's saying it here, which I think that's right. That's what you were saying too, Ace. It releases baby as collateral basically. On May 2020, Hertz filed for Chapter 11 as well. Stock drops 83% immediately. Just got some pretty charts. We'll look at the other ones too, the other examples. They're all different. Like, they're all kind of their own unique way. So not to say it would apply with BBY, but yeah, this was Hertz. I actually remember trading Hertz. We'll keep looking at that shortly. Thanks guys for your likes, I appreciate it. We're 25 of them. Well done. SPY's coming down here a little bit below VWAP. IPO. I haven't really looked, but maybe some Chinese ones. That last Chinese one went crazy. SMX 17% there. The thing's pretty illiquid though. Very illiquid. Gotta be careful. 18. Bed Bath holding out pretty well above VWAP. Chapter 11 is restructure debt. Yeah, it's to protect them from having to pay all that stuff right now while they potentially, I don't know, turn around. Buyer buys them out, spins something off. I see it as they're in a better situation than they were on Friday. It just doesn't seem like that to us. Because they're doing all the same stuff, but now they have the protection of Chapter 11. It could be the first signs of them closing doors for sure. Signs of it, maybe not the first signs, but so it's scary. But I guess is it better protection for the company? I don't. As far as shareholders, it's still fine. Once it goes OTC, I'd say it's not as favorable for shareholders. But not to say you can't move, you can't make money, you can't squeeze. Like I said, I mean, there's lots of people that just trade OTC and just trade penny stocks, and like it's over, just different. The BBBY is also looking for a buyer. Who said that? These obligations have had to be reason of settlement. I think there's actually a lot of reasons, John, but yeah, lease obligations make sense. That's a huge overhead. Definitely don't dump anymore. I mean, it's still a stock, it's still tradable, it can still go up and down. I mean, I wasn't really in it for a fundamental play. I was in it for the squeeze, technical analysis, the shorts, the chart. I wasn't looking to just buy and hold it for fundamental turnaround. John Parker bought 40K this morning. Always, yeah. If I do, I think I'm gonna give it some time. Be patient with it. I do buy in more lows. I'm trying to be slow on my decisions. So you like it, John? Well, tell me why you like it. Little volatile movement during Chapter 11 proceedings, and then October 30th, Hertz stock is suspended and delisted. Doesn't mean it disappeared from people's holdings. Present shareholders kept the shares, but trading wasn't possible, and people that didn't already own some couldn't buy in. And then Chapter 11 proceedings went well. In fact, they relisted in June 30th, 2021 at around $26, or around 1,450% of the price of delisting. That's right. Chapter 11 is not liquidation, panic, and bankruptcy just because mainstream media told you so. Yeah, it's a pretty nice case for Hertz. I would say that was an exception and not the rule. But it can happen. I mean, that's kind of the point of it. It's to restructure and become a good business that can be traded again publicly. In 15 years. Yeah, do you know when their leases were supposed to expire? I think until Friday. Until Friday because OTC next week? Or why? Send out proxies, then file. You mean for the vote? I mean, like I've said before, and I'm maybe this isn't an answer to that, but oh, I got you, John. Yeah, makes sense. That's kind of what I'm thinking, but it's tough because I do see OTC stocks go crazy also. But no, like I said before, but doesn't mean it's an answer to that. They're gonna keep on carrying on, even if they think they might have to file Chapter 11. I mean, they've been saying they're gonna have to file Chapter 11 for months. They've been saying that in all their filings. Like, they might have to file it. It could happen. So it doesn't mean they're gonna, if they need to do a reverse split for NASDAQ compliance, or because they want to dilute more, like, that's still gonna play out. It came to the point where they saw it better, or they saw it better for them, or they were trying to keep a hostile takeover from happening, or whatever the reason that they decided to file. Yeah, I don't think it's like, yeah, that's my take on it, I guess. I've seen what they've done with Rev. Yeah, let's look at I want to look at actually some OTC stocks. Is it Rev Q? Can I not even see it on here? I feel like I've seen it. Is that one totally? Oh, Rev RQ. There. Oh, I don't know when this... Is this when that news came out? I don't know the timeline on Rev. Or when this thing went to OTC. Is this when it went to OTC? I don't even know. That big gap down right here. I was wondering, yeah, because they still have to submit like earnings reports and stuff on OTC, but I think the requirements are much easier, much less. Yeah, I mean, it hasn't been good for Revlon since then. I don't know the update on this, if they're still in the middle of it, or if it's, I don't know what's going on with this. If this could still end up being a Hertz type play. Revlon sheds $2.7 billion of debt and emerges from bankruptcy as a private company. What's being traded here then? If it's private, if they took it private, why is it still listed? Is it not trading anymore? Oh yeah, it's still trading. Oh. Interesting. And then Hertz, which again, both these were, I think Revlon had like 60% insider ownership or something crazy. Both of them had smaller floats. Yeah. This one went back onto NASDAQ. Was this the day? Yeah, maybe. Some max, there's 20%. Yeti's kind of selling off a little bit. BNGO up 10%. I haven't seen that one in a long time. Okay. I made some edits on that post. More things I found. This. Earlier today, Bed Bath & Beyond filed for we appreciate that our customers have trusted us. Oh yeah, what are they saying on this? Partner with an alternative platform? Oh, that's what people are hyped on. That doesn't mean anything to me. Where does it say it? You could have another platform for, you know, their Chapter 11 status, basically. I'm not seeing that. I'm not seeing much on that. Its volume this morning, though, is, yeah, 188 million. Something to remember: the flexibility of Chapter 11 in retail situations. Article from Kirkland and Ellis. Of course they're going to promote it. That's what they do. Don't need to see that. Be sold on anything. Revlon. Today's chart looks like a good bounce from the bottom. I'm looking with extended hours, so it's holding above VWAP. It's looking bullish. Yeah, I mean, we'll just need to see it stay above VWAP really to stay bullish. Doesn't have to necessarily go up, just hold some levels. This is a bull flag, nice pull and little pendant thing forming. But as you see, I mean, they don't always work out. This one on the 5-minute failed. I liked it until here and it failed VWAP. Actually, I closed here some shares. Should have closed them all, but I closed some here at 33 cents once that bull flag failed. Back here on Wednesday, breaking this level would have been an easy sign to close. You just don't know how low it's gonna go once it closes or once it fails. Here was this kind of bull flag holding above VWAP and then broke to the upside, which was bullish. This was the first sign to me to close here, which didn't. And then the second sign, if you missed that one, the second or third sign are always, I feel like, the hardest to take, because you had profits up here and you probably looked at it and you probably saw, and then once it comes down here you saw less profits, or maybe even or maybe a little negative, and it's like, I just saw it here, I can't close it here. So, but you have to erase all that in your head, and it can always go down more, right? So even if you were just profitable this much, if you're just profitable a little less, if the chart's saying it's going to keep going down, don't fight the chart. And yeah, this would have been your second exit, basically, breaking through that VWAP. And you saw it here, you just start to get bullish again, thinking it's consolidating, but really it's not at a level, it's below VWAP. And then end of day, you'd get hyped with that VWAP move, but it stayed below it, so maybe not much. Then if you look at the whole thing, you're seeing, oh, there's a head and a shoulder, and that is a bearish formation. And then if you zoom out and you're looking at it even bigger, on the hourly, you have another whole head, shoulder, and here we are. And how that played out with Chapter 11 news, I don't know. Like SPY's maybe making a little double top here. Is that today? Yeah. I might try SPX options today instead of futures. I just shielded you guys from a gnarly sneeze. SMX 17% now. Fine, moving up there. See if it's wicking and we're actually double topping here. Still haven't flipped bullish on the MACD on the hourly, which tells me it's still in a bearish trend, or potentially still in a bearish trend. We have kind of these tops forming here, these bottoms, but we're still found support here, resistance here, so it could still be in this kind of consolidation area before more data comes out. We've got pretty big data, I think, today and next week. New home sales tomorrow, durable goods on Wednesday, retail inventories Wednesday, and then Thursday GDP, initial jobless claims. So that could definitely move the market. Friday PCE, that's probably bigger even than the jobless claims and GDP. So yeah, end of week, market will probably just dance around till the end of the week, more or less. MACD. Yeah. If we get a close tomorrow, like higher than today, we'll have a RSI divergence here too. But again, TA on it's going to be, it's not. I mean, you can. It's just it's a lot of catalysts coming up with news and OTC and all this stuff potentially. So, can't even see it though. There we go. Yeah, the MACD's been bullish for a bit. RSI is not believing this move. Oh, I have more charts actually to show you. Kind of interesting. Another little test on VWAP. Just taper off, get out. Okay, so read that one. This is the statement from the filing that should give some insight. In the statement, the company, this is from the bankruptcy filing or Chapter 11 filing. It said it voluntarily made the filing. So that's my first cue. It was voluntary. It wasn't from the creditors. They didn't force them to do this, which is definitely good. To implement an orderly wind down of its business while conducting a limited marketing process. So this is pretty standard, a wind down of its business. Conducting a limited marketing process seems kind of interesting to me. Like, what are they talking about here? Why would they be marketing? What does this mean? I guess is there something they're marketing while they're filing Chapter 11? To solicit interest in one or more of the sales. So yeah, I mean, the answer is right there. Marketing the interest is to sell some or all of its assets. So yeah, it's a voluntary filing. and they're trying to market to sell some or all of their assets, which could be literally closing stores and selling product, or selling part of the company, I think. Rising wedge into the 413. Major resistance. Yeah, we're seeing that resistance for sure. Looks like double top in there right now. Yeah, I like that. I've got some SPX puts queued up, ready to go. It does look like it's rejecting it though. Might front run it a little bit. We got 411.50, yeah, thereabouts. 1137. We'll see though. I'm curious if it breaks out here. But so far it's looking like it's rejecting. Potentially a little double top. We don't know they released earnings. That's a whole other catalyst of events that could cause volatility and volume. And I still don't have a clear idea on if they have to have a certain amount of time frame from when they say they're going to release their earnings, or can they just release it anytime they want? They don't have to announce before. I'm pretty sure they can announce any time as far as like trading, like during the day, but I'm not sure if they're able to do it without saying they're going to do it. Restructuring sell-by, maybe, and that's kind of why I was just reading that part of the filing. Like, I think that's a possibility. Oh, maybe going long here if it does break. 1303. Ollie Atlin has a pretty good track record. Good to hear. Turn this Yaz down a little bit. Oh, yeah. Let's see. And it just wicked. Earnings definitely gonna be a good catalyst. Thinking about getting out of these FRC calls. Reducing my risk. Calling for a 1 o'clock turnaround. CJ. This thing's kind of moving out of its... Oh, that was a breakout there on FRC, actually. Back to these highs. Never too late for pre-earnings run up. I have not seen his tweet and interview about BBY. Is it something worth watching? Especially see before end of week. I don't think. No, they don't have to tell you before they're gonna go to OTC. It could have opened up this morning, trading on OTC. Price 413.50. Oh, starting to get engulfing candle. I might grab those puts. A little early. Where is it on Discord? Ooh. See if that was the right entry. VWAP so high, I just might bounce on VWAP here. Oh yeah, pretty big red candle there. Jeez, shouldn't have hesitated. Try and get a little bounce for a better entry. Okay, they're just consolidating here for a touch. I'm not seeing the Kramer March retail sales revised to -0.6. Previous was -1 point percentage point. Twitter. That Bed Bath up for grabs, 6 billion in sales. Investors looking into purchase BBY. Oh, yeah, no. FRC's making that little pre-earnings run. Considering getting out of my play, I guess. Look at it. I did open up SPX put there on the daily. Didn't get a good entry. I saw it double topping it. This is what I've trained for. No, this is what this was my trigger, but I hesitated. Anyways. Yeah, I'm at max profit basically on my price on FRC. Now that I have to just wait for that short leg to lose premium. BY is moving up here. We break out of this bull flag, we'll probably get a gap fill today, honestly. Be crazy. Nice, TJ. Sounds good, man. Sounds like a plan. Yeah, little green potential MACD crossover on the 5-minute. SPY, pretty big flush there. Little inverse beta on the old BBY. What's up, Ryan? So I could take profits now on this SPX put. Kind of have a price target in mind. I think I'll wait for it. I think a move to 411, probably the support we have here. Crazy it's doing it all in like just a few candles though. It's pretty aggressive. I'll show you guys this for this is why spread sometimes I still like them, they're safer plays, but so right now with FRC's move, see the profit, theoretical profit right now is 58 bucks. But this same play would be worth 198 at expiration, which is in whatever, a few days, a week, whatever. So it benefits me to wait, but it has to stay above this price. So that's where it kind of becomes a dilemma. It's like, oh, maybe I should close now. All right, here's a little bounce on SPY. I think I'm gonna just hold on though. Yeah, I think I'll just hold on. Nice, Al. Well done, dude. So BY did kind of break through that resistance. This resistance, which was, yeah, that's actually the support from back here. So we're not really that much lower. I mean, this thing's been priced for bankruptcy. Like it's kind of been said a lot. So it can always go down, but it's basically priced where it's at. All right, so here's a good example. Box DQ, 196% right now. This is on the OTC. But look at this thing. Like, can you even get in and out of this? Maybe. BY moving up here. 23.50. Down less than 20%, guys. I don't really watch other financial YouTube channels. I mean, I'll watch some videos. Like, I'll watch some of, what is it? Trading Fraternity. And then I'll watch some of Zip Trader. And then I'll watch just like how-to and informative type videos, like trying to learn candlesticks better, learn patterns better, just like that kind of stuff. Most of my YouTube is just trying to learn, I guess, how to acquire a skill. Humble trader booing. Yeah, actually, I've watched a couple humble trader videos also. Yeah, no, I like her. I think she's got a great point. Oh, I'm out of it. Wow. So that was almost 100%. Yeah, that was what was it? 390 to 600. So I don't want to get greedy and like go for a full 100%. Thing is, I can't really day trade anymore. Pretty big flush there though. Could have waited for that support, but I'm happy with that. That's a big flushy flush. Rallyto. Yep. Yeah, I think Zip Trader, he's hilarious, man. I got respect for him for sure. Yeah, it's wicking kind of on that support there. I have enough brokerages I could just trade on different accounts, which is I've never wanted to have to do. Thanks guys for your likes. Appreciate it. We're at 35 likes on the day, not bad. It's 10:45. We got Bed Bath & Beyond with a big bounce out of the lows of extended hours. We are up over 60%, I think, from the low there. Yeah, 62%. Right, meow. So that's cool. Still down 20% of the day, though. All about perspective. I like my sell on there actually. On SPY, I think that was a good one. BBBY all in, baby. Woo! All in. Coin has been selling off. What is the deal with this? Crypto been selling off? Coin hasn't really been moving with crypto though, so. Oh, there's a class action against him. I wonder if that has some weight. Skills started charging rent. Does that not show up as oh, there you go, so you gotta bounce that 411. Does that not show up as a little dancing guy? Little dancing ace? That would be thoroughly disappointing. No, it's just a little man. Okay, then I'll do some more that are just not moving. For some reason I thought I was gonna be animated. Morning, fellow traders. Morning, experienced bag holder. All right, kind of rejecting here again. That breakout, so still seeing it as resistance. Bitcoin's been coming down. Create qualifications. Where rent? What? There is even tons of applications. FRC is up 10%. See, little A is not animated. Yeah, he's not animated. Supposed to be doing his dance, but I don't think you can actually get that. I don't think you can get that on YouTube. Okay, I have an order out to sell the FRC. Not sure if it'll fill or not, but caught that move really late on the trigger, but still made pretty good on that little down move there on SPY. I was pretty fortunate. It's engulfing on the hourly too now, huh? Actually underqualified. A little bounce around 411. At best, still hanging out there. You caught him time sold early. Yeah. The way it goes, can't get the whole move, and we shouldn't be trying. Get GME bouncing again on that channel. Don't like those supports. Coin just broke through at 60 especially. Not looking very good for it. See if SPY's gonna make another move. Maybe setting up a bear flag here on this 411. This 413 in. I don't know if we're gonna get a 413 test again. At least not with a move like this after. Probably not. I don't know what gap you're talking about filling either. Yeah, the chart was giving me a double top here. I don't like to put time frames on it, like, oh, by 1 o'clock. So that's what I was seeing, and then this started to look like it was going, but then once it wicked, that was a pretty good indicator for me that it was actually rejecting. Don't know if it's going to make that big of a move, but a move back down to support at least, or even a move back down to here, which it made. So even that little move could have been a nice trade, but it kept going for the flush. What I like about futures, so futures you can trade as much as you want. You don't have to. You're not limited to day trades. No PDT or anything. So something to consider. 410.90. It's not showing up here. See a little gap down here at 408. From what day was there a 410.90 gap? It's all filled in. Yeah, I know what you mean. I know what you mean, Ace. This yeah, this isn't bad at all. It's bounced huge out of that pre-market for one. Yeah, the momentum is more bullish than I would imagine. I kind of thought a gap down and then market opens, it's gonna keep going. So I thought it gapped down like 20-something%, and then probably more selling once open, but it did. We're at 20% now, but it gapped. Now the momentum's up, which is kind of cool. Chart a couple days ago where there's head and shoulders and steady growth. What do you? I was looking at a chart where there's a head and shoulders and then steady growth, like a head and shoulders, and it failed and went up. That looks like a bear flag on SPY. Let me think. AMC did that, I think. You're talking about on BBY? It's April 17th. I don't know what steady growth you're talking about, but yeah, this head and shoulders. Yeah, intraday this is a little bull flag. I know, Ace. GME's fixed. Yeah, there's just head and shoulders right here. I might have to get some more, might have to get futures on this drop if it keeps going. If it breaks that level, breaks to the upside, I guess you could get calls, but probably go short if it breaks the low. Bank and I going back, forcing shorts to cover on stop loss and drop down. Up buying puts. Trade stop loss. Nice. Yeah, I could see a move back to VWAP. I mean, 412 or so. Maybe a little higher. If it does get back up to 413, sure, that could happen. I don't think you're going to have a drop like this after that, though. This was aggressive, which doesn't matter for futures, but for options, that kind of volatility, of course, increases the premium. Yeah, head and shoulders, and then, did I say steady growth? I guess the gap down, and now these candles being green today that's pretty good. Pretty good sign. That maybe we were right that this has been priced for bankruptcy. Nat gas, gold back off. It's just too bad I wasn't on the right end of this trade. The short would have been great on BBY. Sure, there's some little squeezes here and there, but that trend to the downside was nice, easy to hold. Oh, you're not talking about today. You're talking about the Adam and Eve bottom? Specific name? Google? Was it? Yes, that one. So you need this can't be lower, I don't think. I can look it up again, but you've got the V. You kind of all broke down, really. Or was it on the daily? It was more on the daily. But yeah, we had that pump, so that kind of broke down that pattern, I think. Let's see. That was the one you copy was talking about, which I was just curious about. I've never heard of it. But yeah, I'm not holding that with weight because we had this huge pump here. This isn't looking like that pattern anymore. I can check though and see. I mean, I guess you could call this whole thing the V. The issue though is that this is lower. Compute the high from the highest peak between the two bottoms to the valley, multiply it by the above pair. Yeah, I mean, it's not really gonna make a TA pattern more, most likely when you have a gap from news. You might start to build a new one, but this lining up with some TA that was happening back here, that's I don't really see that. Thanks guys for your likes, I appreciate it. 11 o'clock, we've got EU close in 30 minutes. We're at 42 likes. This is also subscribe hour. It's 11 o'clock. You turn that red subscribe button to a gray one. Hit the bell. SPY's moving down a little bit more here. I hate shorting at the lows and longing at the top, but sometimes the breakout is the play. We'll see. See what happens here. If it does break this low, not just a wick. I mean, this is a pretty big sell-off we had here. There's a nice little bear flag forming. S is up 5.5. Buy at the low. Oh, it's breaking through there a little bit. It did the same thing up here, but it was just a false breakout. So we'll see if there's a false break, then maybe a rip back to VWAP. Looking like a little bit. Have a wick here. double doji candle. So I jumped in YouTube stream on Discord. If you guys want to come chat, you're welcome to. The minimum expectation for tips has risen from 15% to 20%. Companies are calling workers back to offices and outsourcing remote jobs overseas to cut costs. Bitcoin could hit 100,000 by end of 2024, Standard Chartered says. Wow. 34% of Americans 45 and older have said they will have less than 250,000 for MarketWatch. Said they will have less? When? When will they have less? What? CHF JPY eclipses September peak to hit highest since 1980. What's CHF? That's that China's? CHF is the dollar? Oh, Swiss franc. Oh, Swiss franc. Swiss franc and Japanese yen. Highest peak to highest hit since 1980. Dallas Fed Texas Manufacturing Index of General Business Activity, negative 23.4 in April versus negative 15.7 in March. SPY still just consolidating here on this bear flag. Did wick below that support, but came back up. Only 8% of U.S. adults say they or someone in their household owns or leases an electric vehicle. 53% of Americans say they don't have any emergency savings. Russian Foreign Minister Lavrov tells UN Security Council, as was case in Cold War, we have researched or reached the dangerous, possibly even more dangerous threshold. Dangerous, possibly even more dangerous. Desperate tie, yeah. BBY is gonna rip, that's right. That's right, man, you got it. Yeah, we don't know when GME's next earnings even are. Oftentimes you'll get a pre-earnings run-up. I don't know if GME will give us that, but the chart's been consolidating and then kind of turned to that bearish consolidating downward channel. So until it breaks to the upside of that, it's looking like it's going to keep melting down. But it moves so slow, it's hard to even play options on it. I closed out of my puts this day. I guess that was Friday. Or no, that was Thursday, which was like an awesome exit, but hasn't bounced. It's looking to get more at the top of this channel, but it's just kind of retested down here again. Yeah, that's right, Carson. And haven't done anything yet. Their first court hearing, I guess, or whatever, is at 2 o'clock. So Might have some more information after that. What do you mean SPX options give way better pay? I mean, no, the underlying is much more valuable, so is that all you're saying? I bet you are, Ace. I bet you are, man. Happy, now sell? Dude, I'm short on NVIDIA, I'm not long on it. Good thing I got enough time, because this thing has just been held up so long. What I do want to sell is maybe my Nordstrom calls. Not today. How short? Very short. No, I've got options on. I'm not short the shares. BBY back down to VWAP. Break up here. I'll probably close some of my. I'll close my IRA shares just because those don't get wash sales. I can kind of come in and out of them. Those are the ones I closed the other day. I'm moving down. Ooh. See if it wicks out of here, if it actually is going to start going. Thanks, Tree. Thanks, man. Yeah, I've got to put debit spread on a video. I have like a month of time still though, so. Oh yeah, this is looking weak. Let's see. Oh yeah. Do it. Scared. I hate playing these like this. Gotten a Turka today? How's it treating you? Oh, yeah, might be a false break. Little spring test. Turka's down 6. Maybe a good long on the SPY there. Might be the dip. Yeah. Alright, I'm waiting. Short on BBY? I don't. I wish I did. In volatility, SPX gives better pay percentages? Really? I know it's going to move bigger because the underline's much higher. So naturally. Percentage-wise, though, you're saying? I'd be surprised if that were the case. Or if it is, I guess why. I do SPX, I mean, as much as I can. That's what I traded today. It's got a, you know, you have the tax benefits, of course. So that's the main reason why I do it. It's not as liquid, so your spreads are wider, which of course there's a cost to that with all the slippage. You know, SPY options are like a penny apart. Yeah, bullfighting for sure. $260 notify me? Alright. Any electric bikes? It wants to get to short 410. It does, doesn't it? Going long on a short call? You mean short on a call? I mean long on a short call. ONTX going. Bed Bath Beyond's below VWAP. See if it holds this the bottom of this bull flag. I just flirting down here, man. Long on a call for a short period. Oh, I see. I got it for a little bounce. Yeah, maybe. I mean, it's looking like the opposite right now. Oh yeah, there's a little flush on SPY. Oh, and a green candle. Bed Bath kind of breaking down here a bit. Yeah, I'm gonna close these ones on the IRA. Could still be in a bull flag. Certainly. Yeah, it's looking weak. MACD's still bullish, but I don't like seeing it below VWAP here. Buy's coming down too. just wicking a lot though. Might just wait for the bottom and go for the bounce. Okay, those are the shares on that account. I wasn't actually planning on closing anything today, but I don't let wash sales scare me out of realizing losses. Okay, back out. That is the biggest advantage we have as individual traders and investors is our small positions. We're able to get in and out of stuff quickly and without affecting the price. You know, big funds, big money managers, their hands are tied behind their back, basically, because if their positions are so large, they just can't do that. They're not nearly as nimble. So Interesting. Little wick here on BY and SPY. No, I close it. I close BY. I'll maybe pop back in, honestly. Like, I don't feel like I can't close it, sell it out, and close it, sell it out. Don't need to be tied to it. I think it could still have a big rally. And I might even be buying back in today, I don't know. I like this 14 cents for a buy. Don't like that it's breaking this bull flag and it's below VWAP though. Buy reversed. Look at that. Catchy SPY. Catching everyone. May 23, 20 calls. Careful, careful fun. They didn't say BY closed 306 stores after declaring bankruptcy. I mean, they've been closing stores. They've been closing stores. Close area 2, John. Yeah, I mean the dip to rip this morning was legit. The thing that sucks about this now is like it could rip, and the rip most likely will happen after hours on news, so it could be gaps. That's why having some exposure overnight might be nice. So I very well could be buying back in today. We'll see. We'll see though. Then we just basically got the most bearish news that the stock could have seen. So, you know, what news could come after hours? I guess that would cause it to dump more. Buy moving up. Probably move to VWAP. 0.25, nice. Yeah, I like the bull flag was making, like it was holding VWAP. I wasn't trying to time it. Wasn't trying to time a top because I wasn't planning on selling today. But yeah, we did have this kind of double top here for me. Yeah, BY did file for Chapter 11, Iron Stark. So, Chapter 11 bankruptcy protection. So we should get a conclusion to some questions. I would think on BBY soon, because yeah, now the clock's ticking on stuff, and it's going to be in new people's hands, I believe. It's not yet, because I think they have to go to the courts, and the court date is for today at 2. I think that's maybe their first appearance. I'm not sure how it works, but I'm assuming it's somewhat of a process before the protections are implemented and fully in place. Ready to stop pauses? Yeah, it's good. It's good, if nothing, just for that, taking the emotion out of it. But of course, the downsides are that they get triggered when you don't want them to. So you still want to be in a play, and it just triggered it on a volatile move, still on an uptrend. Then I guess you just have to be willing to get back in it. I don't use them as much as I should either, Ace. Honestly, like, I just started using them trading futures. I didn't even it's funny. If you can use a mental stop loss, that's better. But if you're not able to control your emotions, it's time, then yeah, just the normal one's the best probably. I would maybe even take a short on it if I wanted to day trade it. I'd be scared to hold a short on it overnight though. Or yeah, for sure, if you're not able to watch all the time, then I would definitely be using stop losses. If you're out working or doing whatever and not just on it, yeah. Or even you can just have mental stop losses, but then when you aren't able to be available, then just set up some stop losses. Which I've done that before when I have not been available. I've just left and set some stop losses. BBBY still kind of consolidating down at these lows, these 411s. Get it back up to VWAP. BBBY coming down a little bit. It's down 30%. It's at 2030. Low on the day. I guess was that like 1880, 18 cents. That's pre-market, I think. Yeah, it's like 1898. Pre-market low is 1460. Yeah, I think so, T-Dub. I think there's a lot of situations where it could still rip. It's just how high does it rip? And yeah, even after it goes to OTC, you could still have big rips. Just from what level does it rip? And how high does it rip from there? Yeah, maybe a long here on the futures actually on SPY. Something about that just looks bullish. I don't know why. What's going on? When in doubt, go long on SPY. Inside bar, maybe? I don't know. I think just that wick down there and now kind of an inverted head and shoulders, maybe. Oh, RSI divergence, maybe too. No, not a divergence. I think I move back up to VWAP's coming. Why? Because it says the bear flag. RC kind of giving it back a little bit. Big volume on this thing this morning. Do they have news? Oh, I saw some speculation on FRC. There's a Wall Street Bets post. Someone has a large position on there. They're thinking that the assets they hold is a lot higher basically than the last report. remember all the reasons, but yeah, it's kind of interesting. Jedi. It's a word on BBY. What's entry point? Whatever risk you're willing to take if it goes to 0. That's your entry point. Low engine IWM puts. Ooh. Month of time. Not looking like good PCE data. End of week. Probably not. I might actually play this bear flag out. Might just wait for the bounce. BBY at 2017. There you go, potty. Better take a potty, man. Don't poop on your keyboard. That's the worst. And you're just typing in like poop keys. Nobody likes that. I said, I guess entry point. At whatever price you're willing to hold for it to go to 0. So, if you're willing to hold from here at 20 cents to 0, then this could be your entry. Risky. Inverted head and shoulders forming on SPY will be looking for a rip to the upside soon. I saw a little head and shoulders forming, but this candle is starting to get rid of it. I get a little flushy first. Okay, A. Yeah, chart looks nice. Tree. Looks like it's very illiquid though and sketchy. And I need a noise. 454. I don't see a gap up there either. Oh, there it is. $44 likes, guys. Thank you. I appreciate it. I think that's 44. Might be getting our move here on Le Spy. We are kind of getting a RSI divergence building here on the 5-minute. Okay, I'm playing it for the upside. I'm trading the futures on it now, though. Won't use up any more day trades. I don't want to have to sit for theta decay. Hoping to make a bet on BY. I missed the 1600 today. Good in for a quick swing, like a intraday swing, or like multiple days. I don't know, man. This thing could honestly, it could keep selling off this week. Like it's really hard to know at this point. See what end of day brings. See where it closes. I would say if it gets back to pre-market levels, then that could definitely be a good bounce, or even this like 1648 level that it bounced off 3 times in pre-market. If it gets here, look for buying opportunity maybe. But the best sell on this entry might be today, and then tomorrow it could be even lower. So Okay. Are we down 0.21% on the SPY? BBBY slowly retracing back to open. 19 cents is where it was. Our MACD on the 5 minutes flipped bearish. We're right under the 9. We're under VWAP. Yeah. Everybody's phone. Do it. Roku? Oh, you had options on it, huh? Yeah, usually the best time to sell options are in the morning. The first hour or so. Usually. Yeah, longer trend is definitely bearish on Roku, man. Do a quick out at 16, at 24. Yeah, I mean it has potential to get squeezy and go crazy. It's a risk though. Could be delisted really any day. And then playing the odds on OTC, like, yeah, I don't know. I'm just trading futures on it now, CJ. I got my SPX put this morning and closed that one out, which I maybe could have kept holding it. I don't know what the decay is like on these dailies. I haven't looked at them enough. Yeah, I could have just held it. The decay is not bad. Spread's tight enough. Where I sold it, kind of interesting. I sold it like right here on this candle down, and it's more expensive now. So even though it's been consolidating, it's low down. It's gained in value. I guess because it's probably in the money now. Is it in the money? Let me see. Yeah, it was. Yeah, it's really close to the money now. I had the 41.25, but BBY breaking that little level, coming down a little bit. Is kind of an intraday bear flag. Liking the divergence on SPY here to the upside. This keeps coming down and this is flat or even up. 19 cents on BBY, down 34%. Getting closer to that 19-cent level. Something for a certain price at low. I don't think it's quite that simple, T-Dub. Yeah. Yeah, this was a nice one, CJ, right here. This was 100% in, 10 minutes. But you had to trigger on that double top. That wick, it was green, and once it reversed was a good indicator for me. Double top on that resistance. I entered it way late, and it's partially because of you, actually. That's why it's important to trade your own way and don't listen to other people. But yeah, it still worked out for me. It was like 80%. BY coming down more. Let's see. Getting to the opening price here. You think someone buys away whether it's a buyout or M&A? Yeah, I think they'll. I mean, I think it'll carry on. As far as if shareholders have value after all that, I'm not sure. But there's value there. There's brand name. There's assets. I mean, they're doing, over $1 billion in revenue a quarter. It's not like they don't make money or don't bring in revenue at least. All right, new low of the day on BBY, down 36%, 1873. Still got quite a ways to go actually till we hit that pre-market level, which is a ways down there. 12 more percent to kind of the support from pre-market, and then 22% to the pre-market low. This would have been nice. Well, actually, let's see if that would have been an advantage. No, that wouldn't have been an advantage. I was thinking it'd be nice to be able to sell right at 4 a.m., but not necessarily. We had this rally. Yeah. So little bounce there on BY. Just wicked a bit right at the low, more or less. We're all gonna die. Yeah, we have a new emoji if you are a member. Happy crew member. Little Ace Ventura dance around in his tutu. You can type colon hype for quick access, or you can probably just see it on the. Does it show up under the? I don't even know. It might just show up under your emotes, your emotes or whatever. All right, BY kind of flushing below that low. Fly also hanging out at the low. Throwing Hail Marys, baby. Both age of 87 in bed. Been 87 years. Yeah, very top to the very bottom, sure. There you go, some hype dances. Yeah. I'll add some more. I'll add some more today, actually. Let's see what Jedi is doing. Jedi. Oh, Spy's flushing. So now let's cut losses or wait for So with futures it's nice because if you're willing to ride it, you don't have to cut losses. Because you don't have any decay, so but if it keeps going against you, it gets bad, of course, because you're on margin too. Sometimes I'll take my long and flip it short, which I might do now even. Which I don't, sketchy to do. I don't like to do it, but almost like inversing yourself, but it's really just if the play didn't work out in your direction, it's probably gonna go the other way. Okay, so I tried it. See what happens. I like it down to 410. We got 410.83. I don't think this is just a false breakout now at this point. 410.83, 410.55. Put that in there. Maybe. BY bouncing a little bit on that level. on 18 cents. There's a little flushy on SPY. I'm kind of, let's see what I took, what kind of loss I take on that. I'm wicking here on this level back here. Sucks about futures though is it is expensive to get in and out. Well, pretty big wick there now. Wow. So over trading can get expensive. I need to be looking at the futures chart. Yeah, if it breaks this level where it's at like right now, then I think 44.10, 51. But this is kind of a temporary level right here, at least. Next move down, futures would be 41.38.66. Then the last stop would be down here at 41.34. So I'm like, I think the momentum's still there. I don't think it's reversing yet. Oh, no way. I missed the Zip Trader text. Look at this runner right here. How did I do it? Such an easy trade. He literally texts you and it just goes crazy. You have to be quick on your text. Why did that take so long? I mean, I guess he doesn't get in trouble with this because he's not trading him. But it's kind of crazy. This is Zip Trader's text this morning on this one. There's a video out about it now. Was it AEMD? Is that the one he's... Yeah, they're taking profits on this one, putting it to that one. Charlito. I hope he doesn't get in trouble, man. I don't know. Like,
those who manage risk.
Oh, that was his new strategy he was talking about. That makes sense. All right, SPY's bouncing here a bit. I kind of want to close out his contracts. I don't know. That's the technicality. So yeah, you don't. He's not pumping and dumping. So he doesn't have a position on it, but he's selling. He's selling access to this information. Clever. The bounce.
With us, senior markets correspondent, to take a look at Alteryx, Loop Capital upgrading this stock today. You have all the details on the report. Tell us all about it.
Yeah, actually, Loop Capital actually upgraded the stock to a buy from a hold, and they did keep their price target at $65 here. But after completing some
About Tesla, yeah, I tracked
tech
Tesla.
checks, basically checking the industry in itself, they do believe that the company has the ability to not only grow their sales or keep their sales momentum for the next couple of quarters, but also for the next couple of years. And that's where the value for this company could come from. They also checked some of the global system integrators within the industry, and they have already indicated that a lot of the their customers are really demanding the products or services that are coming from Alteryx as well. So this is really a situation where the company may have seen a bottom when it comes to a sales cycle, and we might start seeing it ramp up over the next couple of months or even a couple of years. And that's why Loop Capital
probably have
is
a bounce,
little bit bullish on
fill this gap,
stock
and then
here.
you
But
grab a
what's
short
actually
there.
very interesting here, Nicole,
I can
is kind
remember.
of the stock's range or its trading range.
that's
You
it.
can
Yeah,
actually
Phil.
see
I
around
think we're
the
going back to
resistance area and
101,
support
but probably
area
really
that
back
used
to
be formerly
68
now
double
it's in the
digits or
support
so.
area of around $50 to $52
But that might be a
range,
while.
and it's trading at around that range right now. And we do see earnings coming out on Friday, so this stock could be a very significant mover. It's actually moved about $5 to $6.
You have to sign up for it. It's like text alerts. They actually don't cost money, which is surprising.
Significant earnings announcement this Friday, and the market's definitely keeping their eye on it.
Right, and we know that this whole area of analytics is just an incredible, much used, growing area overall.
Zipdra's mom, Zipdra's cousin, Zipdra's uncle, all sketchy dope.
Definitely. So if we know that the range could be fairly significant, we can actually utilize options here. Now, they only have monthly options, so we have to go out a little bit. So I am looking at buying a call vertical spread here. This is actually a bullish strategy. I'm looking at buying the May 19th $55 calls and then selling against that the May 19th $60 calls for a debit of $1.50. The max loss for this trade would be $150. The max gain would be $350. So a nice risk reward ratio here for this trade example, and the break even would be $56.50. Now, knowing that we do not have weeklies and you want to be able to try to maybe make an earnings play, Nicole, if this goes in the right direction, you could also look
Kathy's
at
timing on stuff
before expiration,
isn't always the best,
just to take off some of the risk in this marketplace, but also utilizing that chart showing the support area that the stock's trading at right now. That's kind of the catalyst or the reason why this trade example is being implemented.
Understood. All right. Thank you for that. Kevin Green, good to see you. Appreciate it. Thanks, Kevin. Good luck there at Alteryx. Coming up next, time for our 360 round. We're going to preview the earnings from McDonald's. We just heard from Caleb Silver, all-time highs from McDonald's. So what are we watching for most closely when it comes to this earning report that's due out tomorrow morning? We'll get all the details, what to expect from this fast food giant trading 360. We'll be right back.
BBY maybe double bottoming here. It did make a lower low, but all right. Little bouncer on BBY. I just at this next support level. I actually did close my short. Just wait. I'll wait on it. I think it still could hit a lower level, but maybe try and go for the bounce. I guess we can go after him, or we'll go after him. Yeah, maybe. I mean, it's a pretty smart plan. Like, even though the techs are free to do and everything, he's gonna. I mean, his channel is gonna blow up. Like, it's gonna go crazy. And there's probably already algos and funds that are jumping on board. But again, they can't go too crazy because of position sizing. They're trying to buy so much. All these ones he's pumping, like, there's not enough to sell, and we'll just, yeah. I. I can't consolidate the lows here.
The ego on you.
Yeah. Fire Marshal Bill, just making claims. Remember, for 2 months. Nice. Did it? It gave an alert for that. Uh-oh, you found a cheat. You found a cheat. Well done. I need to update the little badge thing too. I was like, SPY's gonna keep coming down. I don't like the downside potential as much as the upside at this point.
A company with high visibility like McDonald's has, but also I think bigger picture, this is a company that's benefiting from the fruits of a number of years of digital investments that it's been making in the experience of the future, self-order kiosks, digital menu boards, mobile app, delivery, and also sort of moving up the continuum in terms of the quality of what it's offering. So we're hearing about a better burger platform, which is going to be a more uniform grilling and a better bun. So just improving on people's expectations every time they come in, and I think that's going to be
SPY's probably going to flush to this level again.
Nature of this company.
Meltdown like this is a lot nicer on the futures.
Yeah. We'll also be hearing from Chipotle this week too. Nick, let me ask you this. When we talk about pricing power, for example, Procter & Gamble, right? They said they raised prices and offset some of the weaker demand. Currency headwinds, which I sort of didn't expect to hear, but I heard it from Coca-Cola. Are these some elements that you're watching closely when it comes to McDonald's?
Absolutely. Pricing power is one that we've been watching for a number of quarters now. And frankly, I think we were all surprised at the ease with which, McDonald's was able to take, around 10% price increases with very little pushback. In fact, transactions have remained positive. I mean, I think the key is that, the loyalty program, they've been able to utilize the loyalty program to really keep the value.
Oh, there's a little bounce up on BY there.
The targeted set of consumers as opposed to in the past. Running national advertisements that would cannibalize, higher price check for with
It double bottom. It actually made an RSI divergence on the 5-minute.
I think that's been a major win for McDonald's.
We're seeing that play out right now.
As a whole, frankly, because that
UOP's at 21.62.
Sort of a wider price war. So it's been very interesting to watch, and it's actually been a pleasant surprise at how easily they've been able to take these price increases.
All right. Thank you. Nick Setien, Wedbush, Sarah
Thanks for
Henry,
having me.
Logan Capital. Thank you. Thanks, friends, for being with me. I'll see you later at 2 p.m. Eastern Time. I'm Nicole Pedalides. Keep it right here. Fast Market is next.
$16.50, like you said. Yeah, I mean that's a low test. My first level was this 16.50. Yeah, that's even a little low. Support, I would usually try and go just above it, like in case it doesn't quite get there. You get people front running support and resistance. So doesn't mean it couldn't still hit there. But I don't follow me. Do your own trades. Just showing you the support and resistance that is there that I see. Yeah. SPY still consolidating on these lows. Oh, it might be in our bounce now. SPY bouncing up there. Bed Bath not making it to VWAP yet. Okay, I added some more emotes. I'm gonna have to look through there. Not all those look very good. Have to find some better ones, but oh, 2 of them don't work. Aspect ratio has to be 1:1. Ah. SMX up 7. First Republic 8.5. So I did go long on some futures here. Start seeing that green candle. Let's see. Anything about Roku? Kathy bought in at 58. I don't like Roku. There's a pretty good bull case for it, I guess, but I don't know. Fundamentally, I don't like it. As far as the chart, it looks bearish to me. Yeah, we've broken through this support. We've got a bearish MACD right into the 9 moving average, but we have earnings in 2 days, so really just doing an earnings play with it at this point. And I have no idea what the earnings are going to do to the stock. What's under 18 cents, Kenny? Yeah, there's a few people that migrate back and forth, for sure. So the judge at AMC has to put out a special magistrate to the case. Really? Is that bullish? No, Mooncakes is not from here. I never talked to that guy or heard of that guy or seen that guy until I went on PP's show. And then he thought I wanted to talk to him. I think he just wanted to stay on longer. I was like, I don't want to talk to you. Whatever. Yep. Bull flag did fail. We came down to retest at the bottom. Kind of bounced a bit off the bottom. And there is a RSI divergence now in the 5 minute, so not too bad. It's a short time frame. For a grind, maybe back to VWAP. Yeah, those are them for now. I gotta get some more. People are definitely crazy. Buy more? There's no way I can answer that for you. Depends on your risk tolerance, your risk management. Oh snap! You guys are gonna go crazy.
Anything as far as
caffeinated.
Yes, there we go. All right, thanks to Jenny Horn, market
I just went full Ricky Bobby right there. Did anyone notice that I just went full Ricky Bobby?
All right,
these guys are getting all hyped up with how Jenny looks too.
Contributor here on the network to help us break down what he's looking at. As we mentioned, Alex, big week 4 earnings. Mega cap tech is probably going to lead the way. They've already had some solid gains. So
I actually ended up watching a lot of it.
And I think if you look at Coke's results, yeah, they beat. You know, it was a good quarter for them, but when the stock is overbought at a technical level, just under all-time highs, maybe, you know, it's not surprising to see not that upside reaction because maybe it was already built into the numbers.
Yeah, and I think that the consumer staples, if you kind of separate them, are a little bit easier to sort of project what those numbers are going to look like. In
I might close out of my long.
A Procter & Gamble, let's say. Higher prices really
the trend
drove
is down,
the
so
earnings. As Kevin mentioned, you had kind of both sides, higher volume
you get some bounces
and
in here
higher
and there,
prices helping Coca-Cola. But you're talking about a name that's done okay.
Momentum's
You're not talking about a
away.
name that lost half of its value in 2022. It didn't lose that much relative to, let's call it, Meta, for example, which of course has gone like almost 3x off of its lows, but it's still like, you know, basically half of what it was. So just the volatility, as Jenny said, is just way different in some of these, but I think undoubtedly the primary risk factors, be that to the upside or the downside for this market, it's been very, very range bound, is going to be those mega cap tech earnings. We do, of course, get some of the macro data towards the end of the week. Personal income and outlays will be one that's interesting, but I mean, we have it up on the screen.
Yeah,
this is the risk on the week, and you get you know, 4 of them moving in one direction.
Yeah, Julian, I actually did close out up here. We broke
that. A couple unchanged moves.
Or after,
this
after
can really dictate where this market, particularly the NASDAQ 100, goes from here.
Tom, Meta started the year.
W just got to wait.
The opening price, 122.82.
Classic W weight pattern.
Yeah.
There.
I know, but
put that percentage on there.
Short it with
me. I think that's the concern
like
about a lot of investors. Like they feel like they've already missed
the whole index.
Move. You know, traders looking at some of these names. You got Meta Platforms.
What
year-to-date change up 75%. I mean, that will be the concern. If
you should me watch
there's
IWM
any
more.
weakness or miss out of any of these companies, if they're not, they're
that gas
susceptible
moving
to
up.
maybe falling.
I agree completely. Even though
no, I like that. I think that's a smart trade. Got
chart,
a double top here on the daily and
still high,
much
still
bigger bear flag going on.
But yeah, it's rallied
pretty early on it,
What's
which
that?
is good.
It's got to be 80 or 90%, right?
That gap's kind of worrying,
so
but
far this year, and you know,
those are big percentages.
I know.
If you have any doubt about their earnings, but Meta's been putting out a good stream of good news. They went from a good stream of horrible news to good news. You know,
you should be able to delete your shorts. I don't know. I don't know the rules on it.
Investors love that.
Yeah, and that's probably my next question here, Alex.
You've got to be able
these
to.
Earnings results from some of these names is the fact that the blueprint's already out there. Meta's already done
that was a little
the last
false
couple
break, I
quarters
think.
as far as earnings goes. So the blueprint's out there. Does Microsoft, Google, Alphabet that we're going to talk about later on today, Amazon,
on SPY, I don't know.
That route, start talking about efficiencies, because those businesses still make money, so they have to focus on that aspect of it. Maybe not the growth. They pull back on some of the, you know, their spending.
You weren't
maybe
able to delete your short.
More layoffs, definitely for Google, Alphabet. That might be in the cards. Is that the way that these companies should handle this earnings
moving up a
season?
little bit, maybe.
I think we first got to start with defining what success is, because we're talking about massive moves, you know, off the lows for Meta. But as Kevin said, I mean, 385 essentially is the high. But I don't even think we need to go to there. We can just look at when everything started to feel like it was unraveling.
Can't delete the shorts.
There was massive moves in 2 names that really highlighted that. One was Netflix, which has made substantial recoveries in back-to-back.
Sorry, that was maybe too loud.
Or 40% being the quarter last year.
Oh, that's interesting. I guess there was an agreement that you had to sign or whatever before you were able to do shorts. Maybe that was in there. I didn't read it.
250. So we haven't even got to where the crash was. To put in perspective how far these names really fell. So I look at it as like it's really hard to say, is it relatively overbought or is it relatively oversold? Because it just comes down to, you know, where is your starting point? Because I can make an argument that Meta is still very much discounted.
Yeah.
And at the same exact time, I can say this stock has had the most insane run and is so overbought. So to me, you have a market at tension that is trying to figure that out. What Meta do we hear from? Do we hear from the Meta that's really focused on its core business, is going to be efficient?
Yeah.
Is it going to print free cash flow like it had in years past? Or is it the one that is saying those things but then is quietly still investing a ton of money into things like AI and you know, metaverses and things like that
we're just making
investors
wreck
just
these last few days
right now. Yeah. In the case of Amazon, look, it's expensive to be Amazon. They're going to have issues in tougher times when labor costs are going up and the cost of goods sold is going up. But they're a company that has proven time after time that they're focused on the long term. And so it's really hard to gauge on what they're maybe going to say this quarter around. Alphabet's the interesting one, though, because they've watched Microsoft, which we're going to hear from again, outperform in kind of a cutting-edge space of AI. And I don't know that Google search, for example, is really going to be disrupted the way the street is anticipating. But that's the conversation right now. So Alphabet's going to have to address it and how they manage that, both by tampering down fear, but also hyping up what they're doing is going to be a key takeaway. So
GME down,
if you were going to
down
rank
to the
these
teens,
in order of most interesting to least
1992.
interesting, Microsoft, Amazon,
Been a
Alphabet,
slow
Meta.
melt,
That's
down
the order
2.5%.
This is the read-throughs you get from them.
And
still
maybe
just
some of
wicking
the
in this
commentary
channel.
from Meta's already out there. Now let's see what these other companies are
I
going
get
to
some
do.
calls
But,
at
Kev,
1940.
if you look at it, a lot of it boils down to
Do I have any money left after BBBY's
games.
Slaughterfest?
Did it bottom out? Because there were estimates out there that it would continue to fall through the middle stages of this year, calendar year, and maybe bottom out in the fall. But if that actually stabilized and turned around a little bit, as companies may be pulling back on CapEx spend here, that maybe we haven't heard the bottom of digital ad spend.
If you need a glaring reminder about how
That's weird, BBBY.
these companies are on
Weird days, I didn't realize
spend,
that.
go to the company
That's definitely
profile
sketchy.
Meta, hit up the company profile. 91.9% of their revenue comes from advertising, Tom. That means they will live and die off digital ad spend. That's where they get their investment from, or lack thereof. Now, Google,
no, yeah,
Meta's
I think
gonna
the
make money.
velocity have to
It's
pick
not
up.
like they're going to be unprofitable. It's just a matter of how they compare. I mean, they've got a PE that's 24. It was a lot less than that before. So, like I said, the numbers have come up, but with a 384 all-time high, it doesn't have to get there, Alex. What if it goes to 300? You're a 50% winner if it goes to 300.
Right. Yeah.
Yeah, you'll take that just fine. But like I said, you want to see, and like I said, the first one that comes out will affect the rest of the group. Is digital ad spending picking up? Now, there might be a little micro story in there. Snap may fall behind some more competitors, because if you had money to spend on digital ad spending, do you go to Snap or do you go to Meta? Right? People are starting to make choices as the numbers get smaller.
One last thing. I know Kevin's making the point that it doesn't need to go back to all-time highs, and I completely agree with that. But let's take it one step further. The stock's
New low there on
211.17 right now. If you're an investor in Meta, on the other side of earnings, if this stock is 211.15, you're happy. That's a risk factor that is no longer on the table.
I heard people weren't able to buy it high. Do you have any screenshots you could share on Discord? I'd be curious to see
$90 to $200.
What you guys are talking about.
Just maintain the value. That's a massive win.
Yeah, and
thanks for your sub, Osvaldo.
Was the one where the stock went down to multi-year highs below $89 a share in that quarter before ramping up so far this year. But Kev, when you look at the data that's coming out this
BBBY
week,
or not to buy,
on the schedule here, what are you most focused on?
Probably personal income and outlays. I think will be because that's the inflation. That'll be that's during a Fed quiet period. So that'll be we'll play overreaction theater to income and outlays.
Volume.
But how about first look at first quarter GDP, right? Obviously, we'll be judging the overall health of the economy by that number as well.
Yeah, and expectations are that we're not going to go negative in GDP this year. Maybe that soft landing comes into play, recession. But we did mention Coke, at or near all-time highs post-earnings. But let's take a quick break. We're going to talk McDonald's when we come back. That hit an all-time high today ahead of their report tomorrow morning. We'll take a look at that name when we come back right here on Fast Market.
Spy flushing there.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select Style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns.
Yeah, this isn't really all that much lower on BBY, really. I mean, that's some of the worst news that they could use for a stock to drop. SPY wicked down to 410. Now we're coming back up to the levels it was just at. 410.60. 4.9, let's go. I don't think it's gonna break this low today. Suppose it could, but this will be next support, I think, down here. If it makes it before any 2409 stuff. Oh, now you're joking. Now that it wicked, now it's a joke, huh? Now it's a big joke. Now that went the other way. Are the rumors true? Yeah. Not rumors. BY themselves filed Chapter 11. Bankruptcy protection. It was voluntary. So they're actually, I mean, I'm not a bankruptcy attorney, but from my understanding of it, they're actually in a better position now than they were yesterday. That said, I mean, I don't know a whole lot. We don't know a whole lot behind the scenes, but just looking at their debt, and now that they have basically protection from it for the interim until they either liquidate everything or are able to restructure. So, yeah. But if it is to prevent a hostile takeover or something like that, then it kind of sucks for us shareholders. But we just don't know yet. But I think we should start getting some more answers on Bed Bath now in the next week, probably this week. Should have a lot of answers. SPY, solid bounce. It goes down before OTC and I'll just stop trading. Got out Friday after hours. That was smart. Back in around 18. That's true, yeah. I think 2 Eastern. I think that's their first bankruptcy court. I'm not sure if we'll be able to view it or hear it or anything. I doubt we will. I don't think it'll be publicized. You were up early. Alright, BBY kind of giving up the rally back to VWAP for now. MACD's still bullish though. I mean, just lost some of that steam.
If you've gone to a McDonald's any time in the last few years, they've invested a ton into ways to reduce
I held my longs through
labor
this.
costs by automating things.
When it starts getting choppy, I just
digital
sometimes start over
kiosks and
trading.
things like that.
I just take little losses here and there.
Because of their
By the time the move
scale
actually
and their
happens, I'm
locations and
just
being
getting back to almost
seemingly
break even sometimes.
everywhere, you know, within
Better than
reason
losing money, but
of you know, so many people. They're able to
don't wanna
negotiate
overtrade.
pretty, you know, aggressively with delivery services. They're
It's
able
nice
to
engulfing on the
continue
5
to
minute for that
offer,
candle.
you know,
I like
product
it.
that
I
is
still like it for a while.
relatively in good shape when it gets delivered. It's one of the reasons pizza dominated that market for so well. Is it delivers well. It's in the box. It stays hot. McDonald's is able to do that because of their location being prime in many cases for delivery. Through their loyalty program, they got about 25
I have margin
million
for more
active
contracts.
members. If
Interesting.
you go back to the third quarter,
Might be able to
that
trade full ESs again.
continues I know Kevin talked about this with Chipotle. Once you kind of get into that world, you see it in Starbucks as well, where you're using the reward system, when you're using those apps, you're more likely to be a recurring customer. You're more likely to go back. And so you look at McDonald's, they can continue to grow digital orders in delivery, even if times get worse. And this happened in 2008, 2009. they're able to be somewhat resilient because it's cheap.
Yeah.
They're the lowest price point.
It's good enough, you know?
Yeah.
Right.
You don't feel great about eating McDonald's, but you'll do it.
Right, especially when, you know, you can go there and spend $5 to $10 on something as opposed to 15
Especially
to 20.
families.
Yeah, exactly.
What percentage of people eat at McDonald's but don't say they eat at McDonald's? I'd like to know that.
Kevin says a lot. We have this conversation every quarter because I haven't been to a McDonald's in years, but because I have more options because I live in a big city. At the same time, you know, somebody living out in a suburb, that's probably where they go a few times a week.
I go there every weekend morning to buy breakfast for my mother-in-law that can afford any breakfast in the world, and she wants a McDonald's big breakfast.
Yeah. Look, on the way to a golf course, you need to get a quick snack. There's nothing better than a sausage egg McMuffin.
There you go.
And what percentage of parents go for a Happy Meal and go, throw a quarter pounder with cheese on there for me, just because you're right there.
Right, in the drive-through, because that's where their traffic has continued to pick up. But Alex, implied volatility at or near 52-week lows going in this report. The option market's only pricing in about a plus or minus 2.5% move in the shares. So not much anticipated as far as movement goes post-earnings.
Yeah, this is where it gets tough because it's hard to find the miss, right?
Yeah.
Everyone seems to be positive on this name. The stock price reflects that. The low volatility reflects that. So clearly, when you have that sort of a situation, the asymmetric risk or the big move risk seemingly is to the downside.
Right.
But that doesn't necessarily mean that it's the most likely occurrence or the most likely or highest of probability events. So you look at this and you just can make the argument so clearly for why McDonald's is going to continue to deliver for investors. Keep in mind as well, they're not pumping up CapEx the way that some companies have, like Meta, that's really worked against them. Yeah. They're keeping their renovation stuff relatively flat. They've obviously made some efficiency decisions through layoffs recently as well. You start looking at, how they're approaching all of this. You know, this is a company that seems to be very aware of where their position in the market is, but you got to pay for it. Yeah. They're about a 10%, 15% valuation premium over their peers in the space. Yeah. So you got to bear that in mind. It's seen as a safe investment right now. It seems like a company that's positioned to continue to be shareholder friendly through buybacks and dividend hikes. But you got to pay for it. Yeah. So that's always going to be the trade-off right now, Tom, is you're not buying a stock that's at a discount by any means. You're buying it at a premium.
Yeah, and you got an option
strategy still climbing up here.
In this one. And as you mentioned, I've seen
Bath looking a little bit like a dead cat bounce
for the last 3 weeks at McDonald's. Seems like 1 or 2 a day. Most of them.
Oh no, they're still in our side evidence.
$300 a share. So what are you looking at here, Alex?
Yeah, so a couple things. Obviously,
this is like a bear flag now
for this name. All-time highs. You're not going to have a resistance point to the upside that you can look at the chart and try to find. And so for me, whether or not it's truly your thing or not,
buy making a W.
Psychologically, big round numbers tend to be targets for people. You see 300, maybe you've been an investor in this, you're like, I'm getting out at 300 because
bullish.
Why not? It sounds good.
Over the 9.
And so just along those lines of thinking,
might take profits
I use that as an upside target, but it also, if you want some math involved,
I don't know, this is a resistance here, though.
Basically where the market maker move targets to.
Okay.
So you have a couple things converging around that level. Here. But I looked at something that's very customizable. For someone who has a different opinion, they can probably make subtle adjustments to this strategy to better fit what they see possibly happening. And so skewed call butterfly, we're buying a $5 wide debit spread and we're selling a $5 or $2.50 wide rather credit spread here. It all converges at 300. $1.25 debit means $125 in risk. To find the break even, you simply add that debit to the $2.95 strike. It's the biggest option of this. That's really the crux of this trade. Is that $2.95 call. So $2.9625 is the break even on this. You need something to happen, Tom, but we got an earnings event here that a lot of people are excited about. Maybe that's the event, and it needs to be, quite frankly, with this only being this week.
It's totally
is
failing
the event to get this over the break even, and in an ideal
my
world,
wishes
right to
and
$300.
dreams.
Yeah, so let's break this unbalanced call butterfly down, buying out in the April 28th weekly series, so only 4 days till expiration. On this particular trade. So you're buying one of the 295 calls, selling 2 of the 300 calls, and then buying 1 of the 302.5 strike calls, paying roughly about $1.25 debit, as Alex mentioned. There's your risk, $125 on this one. But even Kevin,
that was me. I just closed up
302.5 because he unbalanced it. It's still a double as far as profitability goes if it goes above that 302.5. But this target's 300.
Yeah, this is an entire
new low there.
Money butterfly. So if you look at the theta, it's still a little negative because of the debit and the out of the money. But if it moves into that cone, right, into that between 295 and 300, that theta is going to turn to positive theoretically each day. But so yeah, this is just a bullish play with $1.25, $1.20 risk, and you're playing for a move right towards at or near 300.
Yeah, and by making that unbalanced, you're lowering your cost entry point or risk on this type of position too.
I'm moving up more.
But the goal is for it to move that one standard deviation
Cap's
grind
8
higher
million.
over the next 4 days towards that 300 strike. All right, good look at a call butterfly here in McDonald's into earnings on this one. Thanks to Alex Coffey, Senior Equities Contributor here on the network, helping us break down markets and McDonald's. But coming up after the break, Kevin and I will be joined by Landon Swan from Lightfolio for discussion on UPS, which has risen about 13% so far this year into their quarterly report ahead of the opening bell tomorrow. Stick around. Coming right back.
Who was saying they'd buy it at 5 cents? So IONS has their PDUFA tomorrow. So catalyst tomorrow for 50% either way on this thing probably. You guys are looking for a sketchy spot to throw your money for big action, one way or the other. Oh, the fake happy was? We were talking in Discord? Lunch hour. Oh, ABC. Yeah, I was guys talking about averaging in. Think it's cheaper. Yeah. Why not?
Ordering stuff and UPS is going to be okay.
Even on OTC, like,
I think you're reading.
Still gonna
we've got this is
be traded
kind of
and
like a bellwether for the whole economy. UPS and FedEx.
That happens.
They tell us what shipping is doing, and the economy today is a lot of it is.
You said
by shipping.
Big profits at 15%.
E-commerce, I think, is the biggest factor in this, and when we look at
all right,
well
CJ.
E-commerce just overall is doing is sort of a consumer macro trend. At Lightfolio, we track company-specific mentions, brand-specific mentions, but we also look at.
Yeah, I like this
trends
break
and
this
people just
resistance. I
talking
almost
about
closed
buying things
my longs,
online in very
but
generic
I think
language.
I'll wait.
And that e-commerce
Wait until
trend
reversal.
is down about 8%. It's on pace to be down about 8% on a year-over-year basis for the spring. So we're early in that stage right now. Obviously, spring is just getting going, but we're about we're losing a little bit of steam here, and so I think that is a little bit of a concern for UPS.
Beth might be wanting to make a move back to VWAP though still.
Overall, so that's one of the factors.
Still have some legs.
Like I talked about e-commerce versus going out to the stores themselves. So that's a little bit weighing on them. But when you look at UPS versus FedEx just overall, I mean, there's quite a stark difference in our data. So happiness alone is one of the biggest things. I mean, you're talking about 58 versus 44. That's a big difference in two companies that really couldn't be much closer, right? I mean, this is like Home Depot, Lowe's almost. Like this is the same company basically when it comes to what they do. Obviously they're not exactly the same, but this is a very big difference in happiness. And so UPS winning this by quite a bit. If you look at the stock prices though, FedEx is done better recently than UPS, reflected by their PE ratios. UPS is down about 15. FedEx is up to about 20. So they've had a good last year. I mean, they broke 100 billion profit for the first time ever, and that compares to pre-pandemic numbers of about 75 billion. So they're on a good run here, and they're investing into automation. They're offsetting a lot of the labor and benefit costs that have been going up, labor shortages. All of that's going to be offset by automation, which I think investors are certainly going to love, because if you look at what FedEx reported, they had slowdown in demand, but they offset that with more efficient services. They're cutting flights, grounding planes, reducing different things, and so reducing office space, and raising rates. So they're getting more efficient. I think UPS is going to follow suit there, and that's what investors expect. When we look at total mentions of people talking about it either from purchase intent or web, and I think actually web could be a little bit more valuable here because a lot of times you're going to the website to track your shipments, to get a quote on a delivery, that kind of thing. They're both down a little bit, but FedEx is down more. UPS holding the line at -3%, so that's pretty much flat on a year-over-year basis. FedEx is trailing off a lot more. So between the two, there's a clear winner for me, and that's UPS. But it's just a question of what's this economy going to do? It looks like we're slowing down a little bit. Everything's starting to point that way. But if investors know that and it's already priced in, then that lowers the bar and it gives them some upside on the earnings report. So it's going to be interesting to see what they report. But overall, I like to kind of compare these two, and between the two, clearly in our world, UPS is winning.
Landon, I think you hit it on the head. I think this is a Home Depot Lowe's comparison where one is starting to slowly but surely dominate the other. I think what UPS is doing in very subtle ways, targeting higher margin customers than just going for pure numbers and house to house and building the house. They're doing more healthcare, they're doing more automotive, they're doing more small business, they're doing more business to business, and slowly but surely their margins are going up. Now,
sucks big one.
They can't do anything about. If the economy slows, overall consumer traffic is going to slow, and there's nothing you can do about that.
The same week as last week.
The move post-pandemic to do less online and more in stores.
Research OTC rules.
They can't do that. But this is an
closer to the money.
efficiently run company that continues to work on margins and more higher margins and do a good job. I think you're right, Landon. I think
still no news on earnings.
But sure, domination of this company.
Only flying I see is the AK with the
FedEx is starting to
Chapter 11.
Yeah, I agree. And you know what? I think you hit the nail there. I think it's a bit of a quality.
The Sunday thing was kind of jacked.
Right? Yep. I think FedEx.
Why did they do it at like $30?
More on quantity.
And buyback. This is when they should be buying back shares. They should have a massive share buyback and completely just lock it down.
With delivery, and that shows in those happiness numbers.
But they can't.
And that's a really big difference, 58% versus 44%. You don't see that kind of a difference very often in two companies that are so closely aligned in what they do and how they do it. So I think that that is one thing that's going to carry this company forward. We always talk about purchase intent and web visits and things like that. That's a very near-term kind of metric or indicator that tells us what they're likely to do when it comes to the current quarter reporting, or maybe a little bit of guidance as well. But happiness is one that really carries over more long term, and to have a difference this high tells me that between these two companies, no matter where they're looking at now, and again, UPS's data is looking stronger now when it comes to web, purchase intent, and all that. No matter where they're at now, in the future, they're going to grow much more quickly than FedEx. So again, between the two, it's a no-brainer for me. And I think honestly, like, you could take the e-commerce and the whole market out of it, the economy out of it, if you kind of did a pair trade, and I would be all in favor of a long UPS, short FedEx pair trade.
And as you mentioned, FedEx has outperformed a little bit, but your data's pointing to UPS doing better, especially on that happiness scale that you mentioned. Do you have an earnings score going into this report?
Yeah, because of some of the consumer trends going against them, and again, zooming out and looking at looking at just how they're doing, they're pretty neutral. They're a +2. So it's not like we're banging the drum saying UPS is killing it. We're just saying between the two, they're the clear winner, but there are some concerns that are weighing us down. So we're mostly neutral going into this earnings report.
Yeah, and I think, traders and investors should always focus on these companies, because anything in the transportation industry kind of, parlays into the health of the overall economy too. But great data as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of Lifefolio, breaking down the data for us. Kev, your thoughts here? As I mentioned, as these stocks have moved higher, this isn't a typical earnings season as far as implied volatility levels, because it seems like everything is compressed. We've got the VIX down, near 17, 15-month lows at this point. So we're not seeing a huge pop in option premium, but there's definitely, an anticipation of a plus or minus move in these shares.
IV percentile in UPS right now, 24%.
Yeah.
So at the lower level, not thinking about blowout levels of implied volatility. Therefore, that should dictate part of your strategy, right? I don't feel like you need to worry about long Vega here going into a report where you're already at the lower fourth quartile of implied volatility. So that dictated my strategy. If you're thinking range bound, well,
buy still climbing up.
I'm
got BWAP 411.88.
You can get me, direction is
Bed Bath still at the same level.
Right, Tom, but you
little
want
bounce
to
from
be
the low
on the right side of implied volatility as well. So what I did here, and because this stock has run a little bit,
CJ.
and there is some uncertainty. Remember, a lot of the stocks we're going to talk about here for the next couple of weeks, they're all good. They may have good earnings, they may have average, they may have bad, but none of them can hide from a market sell-off. If the overall market sells off, UPS and FedEx are going to be caught up in that. So is McDonald's, frankly.
Right.
All these companies are going to go down if there's a global sell-off. So what I did, Tom, double calendar, right? When I'm not sure which way something's going or don't have a real strong opinion, I give myself the opportunity to be successful in either direction, Tom. And the 1 week calendars, I'll go with the call side first, Tom.
We have bull flag on FRC.
May 5th, April 20th.
When are their earnings?
Call calendar, trading right around
today after hours?
25 and 30 cents, so relatively inexpensive. There's a fairly good sized move in this stock. I've got the range here about, what's that?
I see one of them to sell, bye-bye.
$17.50 on the upside.
Yeah, I think so.
205 call calendar trading about, I had it 30 cents. It's now trading about 25 cents, Tom. That's the call side. Now, if you want to go to the put side, I did 205 on the call, 187.5 on the put side, Tom. The May 5th, April 28th put calendar, that's trading about 35 cents, Tom. So if you add the two together, you're talking about a chance in either direction for under $1, about 65 cents total debit. For both of
well,
these,
they could have made a deal to sell it off to pay their debt, right?
Now, surely, if you're bullish, you could do the call.
Could have carved it out, spun it off, whatever.
You could do both if you have no opinion.
Yeah,
and taking some of the proceeds to pay off the debt.
Plus or minus $8 move either way in the shares.
So that could be the case.
We did about 17.5.
Right, so let's break this down. We've got the individual names up there, but then Kevin's got both of them combined. Buying the May 5th weekly 205 strike call and 187 strike put, and then selling the same strikes in the April 28th weekly options, a 205 strike, 187.5 strike put, paying roughly about a 65-cent debit net total on that. There's going to be your risk, $65 per spread. The idea that you want this to grind lower towards 187.5 or move higher up towards that 205 strike for this to expand in price. You're buying a cheaper implied volatility on an aggregate basis on the May 5th, about 36% on aggregate, that implied volatility. On the April 28th that you're selling, about a 52% on aggregate implied volatility there. So you have that discrepancy that you're taking advantage of this. But the idea is that you wanted to move towards either of those strikes, Kev, but you still have, you know, a pretty wide range for this to trade in, above 210, maybe even up to 215 on the upside, and down below 180 on the downside, where you can potentially remain profitable on this trade. You've got 11 days till your Mays expire, only 4 days until your short options that you have some assignment risk on into expiration on this type of trade. But a good look at a double calendar spread where you don't have to pick a direction, you just want it to move either down or up.
And this is one you can be patient with because it is Monday. So you've got 4 days. So if you don't get the move right away, be patient and see if it moves over time.
Right.
Up or down.
Yep, definitely. All right, good look at a double calendar there in UPS into that earnings tomorrow morning. But coming up after the break, we're going to take a look at Google parent Alphabet, which has risen about 20% so far this year and reports quarterly results tomorrow after the close.
We're going bankrupt.
It's coming right back.
You guys were calling out Upwork this morning. What was the reason? That new all-time low on it? No, it's getting there though. Turnaround advisors. Yeah, it might be going bankrupt. For some cash could put ideas, but market's kind of at the highs. Not a great time. $44.11.74. Basically right where the 50 MA is. Oh, you're talking EMA. Like Lumen's starting to get its pre-earnings run up, maybe. I like this chart. RSI divergence. Oh, SPY's coming down a little bit here. Little red candle. See if it bounces on this 411 area, 411.37 for support. yeah, a little flush there on BBY. Red candle under the 9 moving average. The cow out of the ice? A crazy analogy. Why can't he move his legs? Nice, Dennis.
The back half of 2022, there was a pretty significant contraction. The other thing is you have to think about the cloud. The cloud component of Google's business is encroaching now about 7% of total sales. It's becoming more of a bigger component of their business.
Great question.
Less so concentrated in ad revenue. Now, of course, you got to consider ad revenue is the biggest component of their sales, but nonetheless, you know, the quarter expectations are quite low. I'm not saying it's going to move like Meta because it's coming off it's not coming off a low base like Meta platforms was.
I'm moving up a little bit.
But it certainly will be interesting the way the price is setting
moving on this
up.
consolidation.
Looking at a weekly chart, as well as the fact that there's underwhelming expectations for earnings and as well as top line sales growth, very moderate at 1.2%.
Yeah, George, I think that when you look at
howdy, this is
like
fine.
search,
Everything's
that
fine.
has been so dominant, and suddenly, you know, slowly and then very quickly, Microsoft comes in as a serious competitor. Now, their numbers aren't big yet, but their numbers have the chance to grow. But George, this is still what, like you mentioned, a digital ad spend story, right? If these numbers start to work their way back up from digital ad spend, all's going to be well with all these companies. Am I right? And the last thing is
real.
Their 10-year average earnings ratio is 30.1, currently trading at a 23.3. George.
Yeah, I think that's a good point. I'll start with the latter. Looking at the trailing, it's around 20 times earnings. I mean, that's very low. Even looking at its 5-year multiple, which is around 26 times. So it's trading at a discount compared to that historical benchmark.
Bound share went through. Nice, well done.
The profile of Google, forgive me, is still close to 20% on a net income basis. So they're still very profitable. They faced a profits growth challenge last year. And I think the digital ad spending across the board for all these companies is going to improve. You got to think about YouTube. That's another component where digital ad spend is going to help Google. The other thing is you have to think about the competition, which is starting to be a challenge for Google in search. But you know, Google still has an unofficial monopoly, let's call it, in search. So they still have such large market share. It's going to be tough to essentially erode that, especially from companies like Microsoft. But nonetheless, look, if you look at the EBITDA, which is the earnings growth on a forward basis,
for sure, having guess works
by close to 8%,
well.
where last year it contracted.
I never get people to want to come on and chat, so
basis, unless they really,
it just ends up being me.
You know, this may be a situation where the stock just continues to grind to the upside, but you know, you have to look at the resistance area, which is close to 110 as a barrier. It has to break above that for potential continuation.
All right, great stuff.
A little rejection up there. We'll see.
That's George.
It's holding these longs on SPY.
Yep, thanks, George. Senior markets correspondent here, breaking down Google Alphabet into that earnings report. That's tomorrow after the close. So, Kevin, it seems like a lot of analysts and a lot of the street seems to be pessimistic on Google Alphabet, and they've got 85% of search.
I know. But where can 85% go, Tom?
Yeah.
Right?
Yeah, that's true.
Therein lies the easy, you know, the low-hanging fruit to go after the search. Because if you take a
BBY
little
coming
bit,
down again.
That's a big pile.
1820 is the low.
I think Google Alphabet
low
is
a
a dominant company in so many different facets. And like we said, from a PE perspective, it's cheap.
Yeah.
So
compared to their historicals,
yeah,
for sure.
10-year historical over 30, now trading 23.
Right.
So just from that level, but this is going to be all about digital ad spend. That's what it's got to be. That's got to show up for these companies. So many, you saw it on the board, so many of their companies use advertising to make money.
I think it's going to be more about the conference call. Will they take that blueprint from Meta and start cutting more workforce? They've cut 6% of their workforce, or 12,000 people. Meta's announced 24% cuts to
Did
theirs.
Meta trademark year of efficiency?
I think he has.
There's a
earnings
new year of efficiency.
But that might be the key, I think, to this earnings report. Watch the data that the conference call gives you, because that might set the tone for the moves in this stock. But I wanted to look at a strategy here, Kev, that takes advantage of some upside as an example, right? If you think this thing's underperformed, maybe some of these names, and it's going to provide, maybe some upside in, about a 3.5-week trade. I looked at out in the May monthly cycle, so 25 days till expiration, buying that slightly in the money 105 strike call, and then against it, sell the 113 strike call on that one. So you've got an $8 wide call vertical to the upside. It's basically trading about a $3.15 debit on that. There's your risk, $315. If it goes to 113, Kevin, that's about just above the 1 standard deviation move that they're pricing in. This is where it tops out above that 113 strike, but you've got plenty of upside on this one.
And you got time.
A lot of volume today still on Bed Bath.
Duration on this.
This
is a very fundamental upside call vertical.
367 million already
you
today.
Don't worry about implied volatility too much.
It's only half over.
You're looking for a move into that range.
About
Anything
closing
above there, you can max out at your top level.
Futures.
This
I'll
is,
keep it open.
if the covered call is options 101, this is right behind it. This is 102, right? So it's a bullish play, getting deltas without using the stock, using long, one call, short another.
Yeah, and the 105 calls are trading about 460, so you're reducing the cost on this trade by selling the 113s. That's got about nearly $1.40 in option premium.
And there you go. If you're going to sell something, have some meat on it, right? I mean, make sure you're getting paid for any risk you put on. If you're selling an option, that tops that spread out. Make sure you're getting something for it.
Yep, and it's above that 1 standard deviation move, but you're reducing your cost. You don't need a blowout quarter to be profitable on this. You just need it to move higher by a couple % above that break even of 108.
Do you have to wait?
All right, good look at.
You talked to the wise owl.
Call here.
He traded changed like 3 times in a couple days.
That's going to do it for Kevin and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
BBY is coming down a little bit. Don Lemon to leave CNN. Don Lemon. Use von der Leyen. Our critical infrastructure is under threat. Google announces AI-powered capabilities in Chronicle security operations. More than 1/4 of Americans have no money saved for retirement. Oh, what? Tucker Carlson left Fox News? Fox News Corp's down 5%. Carrier in advanced talks to acquire German Weissmann. That's a long-term hold I like. I've held it before. See, look at that. The acquiring company, usually it's bearish news. He's down 3% today. I'm moving up a little bit more. Nearly 40% said that children currently in elementary school will be best off with a job and healthcare if they want to avoid being displaced by artificial intelligence. Consulting firm Bain is reportedly offering new hires $20,000 to become yoga instructors or go on safari for a year. Huh. Bed Bath coming down again. Probability of a China-Taiwan war next 5 years. 51% say it's between 10 and 50%. That's kind of confusing. There you go. $300 loss. Yeah, sometimes it's worth taking a loss, even on options. Turka. Yeah, we've looked at Turka. Turka is pretty sketchy. I traded it, I think. ECB Schnabel, 50 basis points are not off the table. Wow. Is that when this happened? Too early to declare victory on inflation. Said that at you maybe said that here. That might have been what triggered that sell-off. Seasonality back to 1928 shows that May through October has the lowest average and median returns in any 6-month period of the year, with the S&P 500 up 65% of the time on an average return of 2.16%. Yes, this is the sell in May, go away. Still fall. Taiwan says tracking Chinese carrier group off its southeast coast. Halting to begin second wave of layoffs, cutting several thousand jobs. Forty-two percent of general workers gained a job through nepotism, whereas those in Gen Z, 70% had a job from nepotism. Nepotism.
Nepotism.
The practice among those with power or influence of favoring relatives, friends, or associates, especially by giving them jobs. Huh. Microsoft moving forward, we will infuse generative AI capability into our customer and commercial offerings. Oh, there's a candle on SPY. I'm gonna cut out there. Take my profits. Genius Brands, let me buy Turka. Yeah, that's what pumped it the other day. That was actually really old news. That's what this was from, I think. Was it that long ago? Yeah, that's, let's see, where was I? Just saw it. Yeah, that was pretty old news. I'm getting ready to flush, huh? I think he's gonna make it to BWAP. GME down 3%, 1980. Might be hitting that 1940 support today. My higher family. Amelia. Yeah, I guess a lot more people do now. Isn't that what that's saying? More people get hired from nepotism. I don't know which gens are which. It's so confusing. I'm moving back up. You might cut too soon. I wait for VWAP. BBBY making the common M pattern for money that we're taking. See if it bounces here again on this level from earlier.
From their 52-week high and still significantly off its high, but also not really much off its low at this point, up 7.5%. They are the second largest telecommunications company by revenue and the largest by subscriber count, but they are expected to post some modest earnings growth for the first quarter as expansion of their postpaid and wireless business slows, while they are also continuing to lose market share to peer T-Mobile. Now, their earnings growth will likely be due to some stagnant revenue as well as less robust subscriber gains. Across the board, this has really been the case for wireless services. We did see the same theme when AT&T reported last week, but revenue for their wireless service, which accounts for almost half of their total overall revenue, is forecasted to grow just 3% at its slowest pace in nearly 2 years, while earnings per share expected to come in around $1.18 per share, which is up about 8% from year-ago levels. Now, their operating revenue is also expected to grow ever so modestly. Another name, Alex, where I wouldn't say that Verizon is much to be excited about, but they are still able to grow, even if it is slightly. But as we know from AT&T's results, when they saw their worst day since 2002, that the street tends to punish when they're not able to put up pretty strong growth metrics, even for some of these more stable telecom companies.
Yeah, and the interest rates being on the rise has not helped them either. It's competition for that sort of income investor looking for a place to park some capital. But this is going to be a pretty important quarter, it seems, for Verizon investors, particularly after the disappointing quarter from AT&T. But from a trading standpoint, from a
let's see some hypes in chat.
It seems to be sort of more rise in the story at this point, or even a telecom story as a group. And that story just isn't as big as some of the others on this list. So I'm going to say downvote, but absolutely one I'll still be tuned into and curious as to what they have to say. Next one on the list, though, is Spotify. Now, this one is one that volatility could be delivered on. It could be, and Spotify is a really interesting chart on a year-to-date basis with shares up almost 70% since the start of 2023. We'll also down about 4.5% from its 52-week high, and shares are down the most significantly of our group of stocks we're discussing today, about 1.5%. But we did see some analyst activity ahead of their quarterly update with Deutsche Bank raising its price target to $130 a share from $115 with a hold rating. And according to Deutsche Bank, Spotify's global monthly active user numbers are strong, suggesting some potential upside for their premium subscribers beyond what the street is currently pricing in. Now, this analyst is confident that their premium subscriber estimates of 207 million and 225 million for the first quarter in 2023, respectively, could actually come in outside of what the street is. New low of the day there on BBY.
Congratulations. You are a shareholder of BBY. It just hit its all-time low.
As a result of the strong U.S. US dollar, which they said will likely remain a headwind now for the
18.12.
remainder of the fiscal year. And that is something to consider
I
when,
don't
of course,
count pre-market
looking at
as
Spotify, given that
part
it
of
is
that
an international
calculation.
company. Now, Spotify, like I said, is up over 65% on the year, up a whopping 88.5% off its 52-week low. But again, this is a name that does involve a lot of subscriber figures, Alex, and those names tend to be more volatile when they report because there's just simply more to sift through on their earnings.
Yeah, this stock also is still in its growth phase. It's not a profitable company consistently. It has really formidable competitors, the likes of Amazon and Apple. There's still a lot of question marks for this. As great as the product is, and as has big of fans as the users of this product.
Hello, everybody.
Spotify. I'm going to say down about
Hey, Benjamin.
From a macro read-through standpoint, there's going to be some. But a lot of these questions are going to be answered as well by names like Microsoft, by names like Amazon and Alphabet and Meta throughout the week. So from a tech standpoint, from a growth stock standpoint, I just think it's so far down that list that it's not as interesting as some of the ones later in the week. So I'll say downvote for that reason and upvote for UPS because UPS, from a shipping standpoint, there are a few names that have this type of exposure. I mean, it's really FedEx and UPS, and so I'm really intrigued as to what they're going to say because I think there is macro read-throughs. Will it spill over into what we feel about Amazon before we hear from that? There's going to be a lot more potential market impact, I think, from UPS than in Spotify.
I completely agree, and I think UPS is typically seen, at least as in FedEx as well, as somewhat of a barometer of the overall.
A little flushy there on
in terms of how
buy.
well the shipments are
Not
going,
to be
as well,
alarmed.
how healthy that consumer is. They are
No
expected
problem.
to report their first quarter results tomorrow. Of course, we are expecting to see revenue around $23 billion, which would reflect a mid-single-digit year-over-year decline. Higher price realization should help aid, though, their top-line growth. However, average volume is likely to trend lower in this first quarter. In the fourth quarter, we did see total revenues fall about 3% year-over-year to $27 billion, with an 8% decline in their international segment due to lower volume and that softness we're still seeing in the China market. On a consolidated basis, UPS posted a 5% rise in their average revenue per piece and a 4.5% drop in their average daily package volume. So with the very big surge we naturally saw during the pandemic as a result of the lockdowns we saw and names like UPS really benefiting, they are facing some pretty difficult comps. So delivery volumes are expected to be down on a year-over-year basis, but it's interesting to see that UPS, who we closely compare to FedEx naturally, has underperformed pretty substantially. Shares are up about 12% in 2023, with FedEx up a whopping 33%, and FedEx has been really taking a lot of cost-cutting initiatives. So we will have to see if UPS is able to follow suit and maybe catch up to FedEx a little bit here on a performance basis.
Yeah, they had been the outperformer as well, as they're more domestically focused, where FedEx a little bit more internationally focused. So when you look at sort of how they performed, it's sort of been a catch-up from FedEx standpoint. But to your point, they seem to be holding the momentum right now as we hear about China reopening and the rest of the globe kind of catching up. What does that mean for a company like UPS that's been more domestic focused? But excited to explore the technicals both on UPS as well as General Electric, GE. So those will be the two upvotes.
Yeah, both names, I would say I wouldn't be shocked to see a ton of volatility, but both do have some significant volume to these earnings events. So we will be diving more into the charts, as well as looking at some example trades in both GE as well as
bouncing there on that 411.
Stick around. Next Gen Investing. We'll be right back.
I didn't even have Jenny on. So sorry. So sorry. As you take it down. There's no point in selling here. Where did we bounce? I don't know. I mean, this is one spot to bounce at. Where we kind of double bottomed. Next spot would be here. 16.5 cents or so. Then back to the pre-market low. Voice is just so soothing. Her voice is just so smart. It's just such a smart voice. Supreme Courts allow state law climate suits against oil companies to proceed. Oil companies facing lawsuits alleging varied environmental harms from greenhouse gas emissions. Only 8% of US adults say they or someone in their household owns or leases an electric vehicle. I think it's even less than that, but Walmart is the most popular grocery store chain nationwide with 25% of the market share as of last year. Impressive, Walmart. Yeah, with how high inflation got, we noticed that Walmart stayed pretty cheap. I think that probably has helped with their bottom line. Good recessionary play. But groceries and specifically, they're able to keep the cost down on those, I guess, because the pricing on them stayed the best. Sashimi. Who will be next? I don't know, but I think I'm gonna start cruising on Reddit looking for a good short. Start to be the contrarian. Oh yeah, that's true. We already have that one. That one's probably going to 0. And GME, they've just seller boxed at a high price. So that's kind of worthless. See me Thursday. Oh, it is Thursday. Sorry, I thought you were hyping up. But it's not Thursday. New all-time lows in Bed Bath & Beyond. Glad we could experience this together.
The overbought area. So kind of two conflicting views here of what's going on with momentum. I think that if we do get some kind of breakout above that red trend line on the RSI, that would be interesting because we're already
yeah, I closed out.
in terms of price here. That would signal
I might get back in though,
we could be
honestly.
due for another leg up.
I think there's definitely
like I said, look for some potential
upside room. It's
resistance
a much better short though. It has been. At these levels, level-wise, it's better for a long, but don't really know where the bottom is.
Node that I mentioned,
the
around
ego
that
on
95
you.
level, is in confluence with our yellow 21-day EMA, so that could be another place to look for a stopping point for price.
Yeah, Rick, and sort of difficult to gauge this earnings. 52-week highs in today's session, so an outperformer, no doubt about it, and I think that's exciting for a name that has been, I would say, has fallen out of favor somewhat as of late, but definitely seeing some upward price action, and the technicals matching that as well. So, Alex, when trading this name, considering the fact that we're at 52-week highs, walk us through then a more neutral or range-bound strategy, sort of utilizing the strength we're seeing overall today.
Yeah, this is multi-year highs for GE. It's been quite the comeback, but it's also been quite the fall over the years as well. So bearing that in mind, there has been optimism surrounding this name. You talked about the aviation in particular, gaining a lot of kind of headlines and excitement, and we'll see if that can continue into the earnings. But I think the bar has been set pretty high based off the rally, and even good numbers may not have a ton of upsides. Into that belief, maybe you believe
You're a gifted member.
Say, well,
Congratulations, Julian. You're back in Happy Money Crew. We do have some emojis on there. You could guess what the theme is of the emojis.
And so I looked at selling an iron butterfly, which is effectively selling a straddle.
Yeah, sorry, I closed out here. I might be back in. I mean, it's got a lot of upside potential for sure. But there's not really a floor on it at this point.
Crux of this trade is selling the straddle. So right now the stock is $100.04.
Yeah.
That's the last trade. Well, we're selling the 100
Increase Mullen.
straddle. So right at the money, and then buying $6 wide wings.
Jimmy,
So we're able to collect a
covered call king.
Credit. The break evens on this particular trade, you
What's
simply
Jimmy the
subtract
king of?
350 from 100 and then add 350 to 100. That's going to provide
You
you
go
a
below
range
40% again
for
this week,
The risk
maybe.
profile does a good job of illustrating that. The break evens will be 96.50 and 103.50. So near sort of that downside target that Rick talked about around 95. But then also outside of that,
I've short AMC and done well. It's a volatile stock, goes up and down nicely. The chart is hard to read though at times for sure. Definitely
but 350 credit means $350 if you
against what TA would show. But
more importantly, defined risk here,
with their lawsuit or whatever coming up, I think it's probably safe to say it's going to go down quite a bit with that.
Or the 106 strike to the upside. So
Be
this
some
is
hope.
one that's looking for very, very limited price action post earnings. See what happens.
If you're willing to hold this thing to
Another
OTC,
name that's seeing some similar strength today. I mean, ever so slightly is
or
UPS.
for more of a longer term, you could definitely see value.
Outperforming the overall market, and actually on a year-to-date basis, we're only about $2 off of our yearly high here, Rick. So another name that relatively
There's a new low, Bed Bath & Beyond, 1768. 1654 I'd say is the first support from pre-market.
Walk us through what you're thinking.
Yeah, and looking at the chart, we can see once again price is in a rising wedge.
Tesla I think is in a nice short. Right now it's down. I think it could get a little bounce before a good entry, but yeah, I see it back down to maybe double digits. It's back down to that $100 level. Could take some time though. I mean, we're kind of waiting on the SPY to capitulate a bit.
So looking at this,
get into the double digits maybe.
We're seeing here, we can see that the blue trend line
Genie.
is where we have a rather steeper, shorter-term uptrend. So you can see that we're kind of forming a triangle. If you look at our red trend line and our blue trend line there, that's kind of the more near-term pattern that's playing out. Price is above the value area in terms of the volume profile study. That means we're above where 70% of the trading has taken place, which is demarcated by those two thick yellow lines on the right side of the screen. So that means we're going into an area of more thinly traded prices here. So that could be a sign sign that we could be in for some fast-moving prices if we break to the upside there. Until we get around that 205
I want the
mark,
long
where
on
we have
that
the
gas
next
here.
volume node, and also near those previous highs. So we're trading near the top of this pattern. That's not a bad sign for the bulls there. Our moving averages are all trending upward. Our faster moving ones are above our slower moving ones. So all signs are pointing toward the uptrend. You know, still in play here, except for one thing, is that we're seeing some bearish divergence on the RSI.
I don't know what his cost
means
basis
price
was.
made new closing highs, but the RSI did not. It was actually trending downward at the same time there. So that's one potential fly in the ointment, but it's not unusual for this to happen heading into earnings. I think that's something that is really important to keep in mind, that oftentimes trading will slow down a little bit when we have this big uncertain event, not trading, excuse me, price action. So we can see that the RSI did lose a little bit of steam there, but everything could change once we have this earnings event. In terms of support,
I mean, yeah. Last week actually, I had more shares than him.
That's the 200 mark. That's about where we had our previous highs, and we are still kind of grinding out higher highs and higher.
So yeah,
lows
I think overall I've probably lost.
Chart here as well, still. So
Lost more just because I've been in and out so much.
Rather good for bulls. To the downside,
Unfortunately,
we've got some support
and my
here.
ins should have been shorts and they were long.
EMA, which is roughly
That would have been a great play.
with our blue trend line there. So around the
FRC above
192
VWAP
mark
here.
would be a place to look for some potential support in this one.
And Rick,
But yeah, I don't think he's, I guess, realized any losses at this point. So
as we're sort of kicking
much
things
bigger
off
number to look at.
this week, that RSI, it's not unusual to see momentum start to wane a little bit, given some of the price action we're seeing just into these.
Oh wow, my MU put is
given
back.
The volatile nature we typically see when it comes to earnings.
Back
Market
green.
is pricing in a near $8 move for UPS shares, which would be a pretty substantial
The
move.
beauties
even
of
for $195
being close
stock.
to the
But we'll
money
leave it there.
and lots of
Appreciate all
time
the insight on the technical front.
and do all this. I opened this thing up here,
Now, when looking at this name and considering
all the way down here, came all the way back up, and now it's back in the money.
Looking to utilize some of that.
That's also the advantage of low IV.
Yeah, and simply just looking at the current stock price around 195, you mentioned the just under $8 move. You just add 8 to 195, you're going to get somewhere around 203
The video's coming back
to the
too.
upside. The closest strike available in this week's options
You gotta
were
vote
the
these.
202.5 calls or puts to the upside. And so I looked at a strategy that would look for that to be kind of what happens. Maybe you see a continuation of the move. Maybe you see a move kind of to that market maker move to the upside, sort of what options are pricing as a
I mean, it could have averaged down to 17 with covered calls.
And I looked at selling the
Some people made their share totally free with covered calls.
2 times and then defining the risk around that to create a skewed call butterfly. That is a risk profile that benefits from an upside move.
Finally making its move to VWAP.
What you'll notice is it's skewed.
I didn't have the patience.
We're buying a $5 wide spread while we're selling at the same time a $2.50 wide spread. If we're able to do this for $1.25 or really anything under $2.50, it theoretically eliminates the upside risk if these were to be all in the money, offset through assignment and exercise.
If Rips, you're gonna retire?
Simply offset for a $125
I haven't seen AMC calls cheap for years.
2x the risk here in that case, or basically a doubling
Those aren't cheap.
Of the risk.
What calls are cheap?
What you'll see here is
still triple-digit percentage IV, which is pretty cheap for AMC maybe, but still very expensive.
To be profitable at expiration, the expiration is super short term, just going out to this week, the same as what we did as well in GE. So both of them are true earnings trades, just going out to this Friday's expiration. This one a little bit more bullish. It is leading the price up to 202.5 and would benefit from a move higher. In the case of GE, Jenny, we surrounded the stock price and are looking for a very limited move.
Yeah, and I think that, 2 different ways to look at earnings events that are both occurring tomorrow before the market opens. So it feels like everything is happening tomorrow before the market opens, but this is just really the beginning of what will be a very busy week of earnings. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at all things PepsiCo, who also reports tomorrow, with shares nearing all-time highs earlier in today's session. We'll dive more into those numbers coming up next.
PepsiCo. AI shares down 7.7% after Wolf Research cuts to underperform. Bill Ackman said Biden should declare he's not running for re-election now. Doing so will open the field for the best potential Democratic nominee and give him or her the greatest opportunity to build a constituency. I know that word. I've never spelled it though. Constituency. What the heck is that word?
Constituency.
That's what it was. Constituency. I've never seen it spelled out. It's so weird.
Some of that steam is starting to wear off here a little bit. They did report revenue coming in at 11 billion versus the street's estimate of 10.87 billion, and the adjusted earnings per share came in.
It's like he got some new lights.
Versus the street's estimate
blinding himself.
Cents. We are starting to see and continuing to see the price increases that they
I know, breaking VWAP.
Starting to be reflected in the revenue side of the business, even though we're seeing volumes kind of leveling off here, especially in some of the bigger markets. But they did see net sales rise about 5% year over year, and organic revenue actually increased about 12% year over year as well. Now, once again, they've been hiking their prices to try to offset some of the higher commodity costs that's been impacting their business, but they did note that transportation costs is starting to come down pretty dramatically, and that's another area where they could see margin expansion here in the near term. They also saw 3% volume growth year over year, but once again, that was really kind of driven by some of the other markets that are out there, like the European markets, things of that nature. North American markets were actually flat when it came to volume, and we are expecting, or the company is actually expecting, projected organic revenue growth for the year to still stay between 7% and 8%, and comp earnings growing about 4 to 5% year over year. So they reaffirmed their guidance. So overall, we saw a pop in the pre-market session, but once again, selling off here a little bit. They had some commentary on their conference call around other impacts on rising commodity prices in their business that is not related to transportation. And also, this was actually a quarter where they had negative free cash flow. And that is something that you rarely see when it comes to Coca-Cola, but they do attribute that to currency fluctuations as well as divestiture in some of the businesses that they operated in, such as Russia and some of the other smaller units of the organization.
Kev, real quick before we say goodbye then, do you think that's what's being circled here and focused on by the market? Because everything that I see seems like a pretty strong quarter for this company. Bounce back in volumes, as they obviously had their first drop in volumes the previous quarter for the first time in a couple of years. Yet all the while they've been hiking these prices, so they have pricing power. They were at least maintaining sales volume in the key North American market, but including international, goes up 3%. The only really sour thing is this sounds like is this negative free cash flow, which they did have an explanation for, yet I see a stock that isn't even in a green candle.
Yeah, so Alex, a couple of things here to note here, and I know that we are wrapping up. First and foremost, yes, I do think it's the free cash flow number, one, and then two, once again, they had some caution on the call around rising commodity costs in some of the other areas of their business that could impact margins. You are starting to see volumes starting to level off. That's also not good. You want to be able to see volume growth as well, and if they are not seeing that growth, what are they going to have to do? They're going to have to cut that eats into margins. Last but not least, from a technical level, it's trading close to its 52-week high. We actually have the chart up there right now, and you can actually see that this is showing a little bit of an area of resistance. So not surprising, we might have a buy the rumor, sell the news type of event. It's going to be very difficult for it to continue to breach or continue to go on this trajectory to the upside without large volume. I think it's just taking a little bit of a step back, and investors are probably looking at some of the other areas in the market that might be underperforming, that might be good value areas for them.
Yeah, there's not enough here to get us excited about Coca-Cola. 5% growth is impressive, but it's not a tech stock that's showing 60, 70% growth here and maybe lost 70% of its value. So maybe it's all priced
rejecting
in,
that VWAP break.
We'll keep an eye out. As you said, they did have a little bit of a more negative commentary going forward, or at least some concerns that they raised.
BBBY
we'll
looks like it wants to make a new low
as expected or not. But Kevin Green, thanks for the update.
1761 is it.
The TD Ameritrade Network. Bring back in Jenny. It's time for FOMO. Not going far here. We're just going to Pepsi. So talk to me about, obviously we know the differences, okay? It's not all beverages. We know Coca-Cola is the more flagship. At least that's the joke Kevin likes to make.
1760. We did it, guys. Congratulations.
The Jack and Coke, Jack and Pepsi type of a
We
situation.
just made an all-time low on BBBY again.
I've been working here too long that I'm making these Kevin jokes. I think it's rubbing off on me, but I do think there's something to be said about that. That Coke has some brand power, but so does Pepsi. And it's one thing that I think is to be excited about from Coke's report is the fact that they were able to uptick their volume even with raising prices. We'll have to see if that's also reflected in Pepsi's results
if you remember
tomorrow morning. Another thing to be excited about is that Pepsi is seeing
1759. There you
strength.
go.
I know we're not necessarily seeing outperformance on the session today, but earlier actually in the trading day, we did see shares touch new all-time highs. Now, they're not expected to close there, so it doesn't necessarily count
1757.
Still, all in all, a name that's pretty much right around
10,000th of a penny at a time.
We are expecting them to post
1,000th of a penny.
17.2 billion. This would be up by about $1 billion.
I don't even know. It's a lot of decimal points.
On adjusted earnings of 138 per share, which would also be
hype?
modestly higher on a year-over-year basis. Now, we did see sales that will be closely watched as a gauge for consumer resilience, really, as
the economy coming down, making all-time lows, down almost 40%. SPY's ripping up through VWAP.
Deal with some higher pricing. We are seeing, the strength that we saw.
They filed Chapter 11 bankruptcy protection on Sunday morning.
Also important to keep in mind then for Pepsi's results. Now, their outlook will be important for investors looking to see
Number
if their
777
results can lead to any sort of revised guidance now for the remainder of fiscal
1774.
The company in the prior quarter did say it expects its North America beverage and convenient foods businesses to remain resilient, while international markets are performing better than expected, just given the easier comps they're able to lap now on a year-over-year basis. PepsiCo last quarter did forecast 6% organic revenue growth for this year, among other outlook measures, so we'll have to see if they're able to even maintain that like Coca-Cola did this morning. Another area of strength, though, has been some of their more healthy options. They do have lines of juices like Tropicana, Naked, and other juice brands that have performed really well, I think showing that consumers are shifting more of their habits to be more health-centric.
No, comments aren't worthless. They're worth 17 cents a share right now.
I do think it speaks to the fact that chips are still doing very well at grocery stores, and those sales
I did close it.
for a name like PepsiCo, Alex.
SPY ripping up here. I'm gonna just hold
of the rum and Coke just a little bit further.
Easy hold. It's futures. There's no decay.
Maybe you prefer a Pepsi or a Coca-Cola, and if
didn't
you're going to the store, you would choose to buy that. If you're at a restaurant, they probably only have one of them, and you're just going to get whatever
Murder
they have,
Fest for
and you're
sure.
not going to notice. Unless you're like
if you're not in it,
fan,
it might be one you want to look at for upside.
And you're going to think it's Coca-Cola.
A lot of squeezes happen around bankruptcy. Going into the OTC, once you're in the OTC.
And you're probably just going to have it and enjoy it.
Yeah.
See, I'm going to know that it's Pepsi, but you're right. What can you do about it? You're just stuck with it. Like,
For those that have taken huge losses on it, it's
and restaurant chains
pretty ugly to look at or consider getting into. Already you're back into, but
right, you're never going to have the option.
Fresh money.
That's a huge portion of the revenue
I'd keep an eye on it.
Companies, and so yeah, of course, going to the store, buying that case of pop or buying the 2 liter or whatever it may be is going to be a huge piece too. But McDonald's is partnered with a brand, you know, stadium's partnered with the brand, and that's just how it goes. And so a lot of these negotiations, we're not even a part of. We just get whatever the restaurant or convention center has. But let's talk trade in this name, because undoubtedly there's optimism swirling in this space. Be it Coca-Cola wasn't able to really make anything of it. It was a strong quarter. There's a feeling that the same is going to happen for Pepsi. The price performance has been incredible. But for what seems like years now in Pepsi is the snack portion of the business, you know, named Frito-Lay, of course, has been a powerhouse, and they've done their best to kind of just, you know, try to keep pace with Coca-Cola on the beverage side. But let's say you're optimistic on this and you see an upside in the future here for Pepsi. I looked at a call calendar to the upside as a possible way to take advantage of that. The stock right now trades just over 185. There is not a ton of volatility in this name, as one maybe should probably come to expect for a consumer staple, but still some. And it looks like the market maker moves about $3.5. And so the closest strike to the upside in that case would be the 190. So I looked at a week over week 190 call calendar. And the beauty of this is only $30 in risk, so a 30-cent debit on this. This is by far the smallest trade from a risk standpoint of any of the three that we've talked about from an illustration standpoint today. But this is the one that requires the most precision in order to potentially be profitable. There is a point on this chart, and it's 190 in this case, can be customized, it's highly customizable, in which this has an apex in its profitability. But it also has risk to both directions. A huge, massive outperformance to the upside is not going to be beneficial for this, and a drastic underperformance to the downside, or quite frankly, a non-event to the upside, not really going to be beneficial for this. So you need the move to happen. That's why the risk is substantially lower.
Yeah, and I think that, you know, when looking at a name like PepsiCo, given the volatility we're seeing this week, we keep saying that these are not the most exciting or volatile names, but I actually think that's welcome to kick things off. I think we need to like slowly grind into what will be a very busy week and what is considered the most highly reported week in terms of earnings this quarter, Alex. So I'm okay with the slow grind into it, but we'll be sticking actually with our earnings preview theme. Coming up next, we'll be discussing Polte Group ahead of their earnings, which are also expected tomorrow morning. We'll dive more into the home builder, some of the performance they've seen coming up next.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETF.
SPY just grinding up through VWAP. Bed Bath looks like it's maybe at a bottom for the day. I was trading that futures contract like it was options. Should have been more patient. Got a 413. Bed Bath & Beyond vows it can pull off a sale. Here's what it means for shareholders. Yeah. Yeah, this might be the bottom for the day on BBBY. Might pick up some shares. IRA. Takes so much time to log in. Starting to move up. See, still has another low to go. If you're counting extended hours, though. I'm still grinding up too. Just reading this article you shared, Ace. I guess Bullion shared.
Week in 5, so let's see if we change the vibe here. And also the NASDAQ is down 37 points, down 0.25%. The Russell is down just 1 point at this time. For some of the biggest story in the market, Renita Young is with us, senior markets correspondent here on the TD Ameritrade Network. Now, we've been watching Bed Bath & Beyond. This one has been struggling for a long time and now filing for bankruptcy. What's the latest?
I think it's the inevitable day that people were seeing right now. So Bed Bath & Beyond, Nicole, over the weekend, they filed for Chapter 11 bankruptcy protection, and it was 2 filings that went through New Jersey courts to petition to close up shop with the 2 main brands, which are BBBY Baby and Bed Bath & Beyond. They want permission to auction these 2 stores off. Now, 6th Street has agreed to lend Bed Bath & Beyond $240 million for a debtor in possession financing agreement so that the company could have cash to maintain its operations through the bankruptcy process and so that it can pay its workers, things like that, right? But for now, Bed Bath & Beyond has 360 Bed Bath & Beyond stores, 120 buybuy BABY locations, and they do plan on remaining open as the company works to liquidate all of those assets. Now, if there is a successful sale of the business, that the company will pivot away from any store closings that are needed to be able to implement a transition. But the company believes that the dual path process, the possibility of a full bankruptcy and the possibility of a sale, he believes that that's the best way to go. And the company, by the way, when we look at the debt load that this company has, it's still quite substantial. As of late November, it had about $4.4 billion in assets and $5.2 billion in debt that outweighed the assets, as you can see. And then it has between 25,000 and 50,000 total creditors, along with 14,000 non-seasonal workers that they would owe a salary to.
All right. Obviously a big mover today, 38% lower. It's been going down throughout the day. I mean, this is why when people want to play or buy or bet, bankruptcy stocks, it's so dangerous. I mean, you must know what you're up against. I mean, this is a terrible, terrible day for the shareholders. Let's talk about Tesla. Now, this has been, obviously all over the place, down. What's the latest?
A couple of things happening with Tesla. The company did give a CapEx forecast, and there is a board fight brewing over a seat or a nominated person.
You just sold your calls right there.
So first, the company gave a CapEx forecast expecting 2023 CapEx to range between $7 billion and $9 billion. That's
juicy
higher than the
400%
previous
IV I can
forecast
pay.
of between $6 billion and $8 billion, and it's all because of the what the company is calling the capital-intensive projects, the rising cost of materials, the increasing supply chain and labor issues that have come through the pandemic, right? And then we have the board seat battle that's brewing with Tesla and the chief technology officer that's been nominated. Now, Tesla shareholders Monday, they were told by a company to vote against the nomination or the actual appointment of the chief technology officer because they believe that he's going to be an insider who's trying to come over to the board side and make decisions that will impact the company more than the shareholders. And so they want to keep from replacing an independent director with someone who has those high risks associated with them, right? And so that's why the group is calling on board chair Robin Denholm to overhaul the board and what it calls a truly independent director way. It wants to continue to have independent board directors. So we'll find out. This is really a developing story, Nicole, so we'll find out a little bit more about what people on the board and analysts have to think about this, whether or not they will change the direction or change any price target hikes.
Shouldn't be sweating if it's paper trade.
Yeah, I feel like I should learn the names a little. I mean, I'm not really familiar with some of these names, but they're voting against the election. They're being told to vote against the election of J.B. Straubel, and that would be to replace independent director Hiro Mizuno on the Tesla board. So very interesting and obviously a developing story.
1243 is going to reject there.
Yeah, Tesla up 30%.
They have an engulfing candle.
1 year down 52%. All right, let's take a look at the bigger picture. Guess who's here? Ben Evans is here, Senior Portfolio Manager, Head of Fixed Income and Macro Strategy at New Edge Wealth. Thank you for being with us.
Great to be here, Nicole.
The banking sector has been front and center. Tell me a little bit about what's on your mind, in addition to, obviously, the earnings that we're waiting on.
Yeah, for sure. The liquidity position of the banks, right, and how much of the deposits went out where. It showed last week that a lot of banks were reporting that deposit flows were very modest. So the focus, of course, today is on First Republic. That wasn't part in the eye of the storm.
Bed Bath is starting to curl up, though.
Really, and what's going on? Because if you look at the weekly
bullish
data from the Fed that came out again on
over
Friday,
the 9.
it does show that deposits continue to decline. So money's on the move, which means that the economy at some point gets an impact from this, and whether it's positive or negative, that's what we're trying to figure out. So part of the banking earnings is really about looking at what's the money in the banks going in and out, and what can we tell about it?
And really for First Republic, bond prices suggest rocky road ahead for the bank as it readies for the first quarter results? I mean, what are you going to be looking for specifically in, First Republic, as you go through the numbers for this company and a lot of these regional banks?
Yeah, you look obviously at the net interest margin, you look at the deposits and loans and
Let's go
whether it's
$1.
changing. Then you probably think about like what
let's
the
see,
bond
how
prices
far-
are indicating is
how
that
far is
there's
a dollar
stress
from here
coming
now?
because the bank has to raise its capital, raise reserves because it's worried about more deposit outflows and losses on its loans. Now, in the case of First Republic, there's some detailed analysis out that a lot of the loans that they originated were interest-only loans, but they were fortunately made to ultra-high net worth
434%.
individuals who are able to pay off those loans quite easily. So there's not a subprime problem there. Nonetheless, it's a issue because it's a big loan book, and it's indeed at the wealthier states and bigger states. Where the economy has an impact. So I think people will pay real attention to First Republic's dynamic there because it did experience a classic run on the bank, right, where people actually went to the bank branch to withdraw money.
I mean, when you look at it, up 10.5% today. I mean, talk about volatility, right? I mean, and also, I mean, I think it's worth noting, I'm going to switch gears here, but I think it's worth noting, folks, I mean, this was a $150 stock and, went down to these levels that we're sitting at now at around $11. I mean, it's really amazing what has gone on here with this name. That being said, I do want to talk to you about the basics, like earnings and economy, but I know that you look at other things. You're watching Bank of Japan.
It's kind of
you're watching the
semantics.
low level of the VIX.
Filing for
What
Chapter
are some
11
of
is
these
filing
things
for bankruptcy.
that you're watching that are sort of a little more big picture telling
to-
you?
So it's
most.
really amazing how 10 years ago we're in a somewhat similar situation right before the taper tantrum with this Bank of Japan,
Tomatoes
the
and
Fed
potatoes,
following with its
both
meeting,
grow on the ground.
and all the communication issues that came along
there's
at that
a-
time. And we were too in a
there's a
low
bit,
vol
golfing
environment. We were
candle.
coming out of a year of really low interest rates.
And we're in a
the
low
old
vol environment
buy.
right now,
Right now, right? So, and the Bank of
Might start
Japan
grabbing
overnight
some
had some
shorts.
headlines that they may looking at an exit at some point. That would be a big deal because they have really injected
Might be early, but I'm gonna start
incredible amount
scaling
of
in.
money in their system and into the global system. And then against that, we have the Fed coming with inflation on Friday, which is a big important point because has this latest move, this latest situation with Silicon Valley start to really impact the services core PCE number, yes or no? If we're getting a more like definitive answer on it, I would say that would
Feels
be
early, but
moving because people then look at it saying,
can't deny that
Fed,
golfing
you are
candle.
getting to a conclusion of your tightening cycle and things start to change.
Yeah.
And the rejection of that 412.
And as you talk about these different elements, we're waiting on something like McDonald's. Now, McDonald's is going to tell us so much, won't it? It's a global footprint. It could tell us about foreign exchange. I mean, you could name it too. The labor market, the supply chain, inflation, pricing power, pricing pressures. What are you expecting to be the takeaway from some of these big cap names? I mean, we've already gotten some in. What are you learning or what are you watching for?
So on the one hand, McDonald's is like this global reopening idea. If China is really reopened now and all the Chinese tourism comes out and starts to affect
Volume's
like
still really
McDonald's
good.
as an example, it will show up in that data.
A lot of volume.
In addition, it will show up in the sense of like we have slowed down in the US, we have slowed down in Europe.
Problem with the short here is we're so close to VWAP.
Going on. Obviously, McDonald's
Gonna
is a
be
story also of having
definitely
completely
support.
pulled out of Russia and Eastern Europe. It's a bit specific to that company. Of course, food inflation is a big deal here too because McDonald's is very sensitive to that. Now we've had data out in Europe showing that
Yep,
very
there's a little
sticky
move up
food
on the old
inflation.
Bed Bath.
Is that happening in a bigger scale? Being
Yep,
that
green
McDonald's
over
is a
9,
cheap
bullish
food
MACD.
provider, right? So
We do have
I
an
think if you
RSI
think big picture
divergence still in the
macro
5 minute.
as an example of that, it's about talking about a global economy, therefore global inflation, global reopening.
Right. I mean, and you saw that. I mean, what we've been watching with Japan, I think, is a big story. What do you tell folks and investors at this point? They already have somewhat of a winning year clocked in, but there's a lot of volatility. Some people sell in May and go away. What do you tell investors to do here?
Yeah, that sell and may go away is maybe prudent in a way of thinking if we're having a very low vol environment and we're getting changes in the economy, there's caution here. Right? You cannot just be full in risk on or you take some off the table. I think the tech earnings this week will be key too because obviously as those come out and we see that they are not really seeing major challenges to tech spending could change things. What I would tell investors is that you do not have to be out of the market. The T-bills are high yielding, but it's not to be fully in there. We deal with it
A little
with
day
debt
trade
ceiling,
on it.
right, which we can affect T-bills. So it comes down to a lot of diversification plays here. Diversification in with high tech stocks that have outperformed so much. Diversification in T-bills. You don't want to be all in that. So I'd say you balance out even more between growth, value, emerging markets, and treasuries.
You open a spot short too?
As we're kind of coming through a phase
Yeah, I
here
feel
of
like
inflation
I like what's
starting
doing,
to come
but
off more. Central
still
banks
seems
are more
feels
and more
early.
pausing on
I don't know how close it is to BWAP either,
perhaps
but
the Federal Reserve.
whatever, I'm
you can
scaling
then
in.
make a decision how to diversify from that balanced portfolio to a next stage.
Right. And you were talking about the VIX, which
can
really
do
only
it.
represents 30 days out.
Yeah, I mean, if you
but
want to move here, it's not
when
too
we see
bad.
what's going on with bond yields, you mentioned bonds and treasuries, and the 2-year still
10%,
above
12%.
that 4%. I think a lot of people are left scratching their heads.
It's somewhat reflective of where Fed policy is right now.
Yeah.
But if you take the absolute level and you compare it to where the Fed funds rate will be, then there's probably up to 100 basis points of rate cuts that's still there. So the market is very convinced that the Fed reaches a level that's high and has to pretty quickly thereafter cut
Then
rates.
cut the rates. Do you think they'll cut rates this year or next year?
The communication's been really clear that they're going
You
to
want
cut
to-
rates probably by next year,
Whoa.
but not this year, because I think they really
It's
want to
getting
make sure
volatile.
inflation
Right.
is on the
Volume
right
must be picking up.
trajectory down.
Yeah.
Yeah.
If that's not the case, then they would make the mistake that they did in the 70s, right?
So moving up off the
where that
lows,
issue comes.
1757.
All right, Ben Evans, thanks for being with us.
18,
Appreciate it. Glad that you're able
69,
to be on the show with us. Ben Evans, new
36% down.
Later this hour, we'll go in and look at the growth of AI, what it means for the mega cap tech stocks such as Microsoft and Alphabet. We'll talk about that. And further glance here at the Fed's fight against inflation, what it means for earnings. Our panel settles the debate. Coke or Pepsi? Ha ha. All right, I'll take a look at both stocks. Up next, we'll look at a bunch of the healthcare sector picks. Our next guest
Busy
will make the
typing.
case for names such as Medtronic and Abbott. Stay with us here on the watch list. We'll be right back.
Too much info. I was trying to figure out what TMI means. Oh, no way, we can watch it. Maximum number of participants? Are you guys in on this the court hearing? Oh man, I can't get in. Dang, I didn't know it was gonna be live. It's on a Zoom meeting. I was trying to get in. Oh. Maybe I'll wait, maybe someone will dip out. Maybe that's why it's starting to rally right now. What are they talking about in there? It's got to be streaming somewhere. Let me check. No one's streaming it. Dang, I wish I would have grabbed it. Any of you guys make it in? I don't know if that's why it's, I mean, not necessarily at all, but that's just what I've started thinking of when now it's live. How many people can even have in a Zoom meeting? I only have like 8 people.
Our next guest, Keith Gangles with us, Portfolio Manager, Gradient Investments. Thanks for being here. So we're in the thick of earnings season. We got a crazy busy week this week. What are your takeaways so far?
Yeah, I think earnings have been generally better expected. I think people are pretty fearful, so they had low expectations going into the earnings season. But it's early, right? I think half of the earnings in the S&P 500 report this week, so we'll see. Obviously, we got big tech companies coming up this week. That'll be a key driver for the overall market. But so far, so good in the earnings. Again, I think that's partly due to the fact that expectations are really low, and the companies have met them so far, and it's guided okay. They haven't really accelerated yet, but I think that at this point in time, with people worried about the economy slowing down, going into recession, they've been good enough.
I don't like how close it is to VWAP, but...
So better than feared thus far. We'll have a slew of the tech names, too. What are your thoughts on some of these tech names?
I don't get much move really done today.
You know, people love these names.
Already
In fact, they even ran to them from safety,
range
for
trades
some safety during
this
the time we
this
had
long.
this weakness in the regional banks.
Yeah, it's a space we actually like a lot. I mean, big cap techs worked well going into this year. That space last year was unliked. Valuations have become very reasonable. They're good cash flow generators. Now with this bank situation going on, people actually ran into these tech names. You don't have to worry about banking situation. They have strong balance sheets, good cash flow.
They have it.
Again, valuations are reasonable. And I think going forward, this week will be very important to see what they report, to see if that momentum can continue. We think it will. It's a space we like, and we would be adding on it.
All right, let's get to some of the names that you like. You have Medtronic on your list. Tell us a little bit about this one.
Yeah, we like the medtech space in general. Medtronic's been a name that's been an underperformer almost about 2 years. We think they finally turned a quarter. They've missed 2 out of the last 4 quarters, but this last quarter, they actually had a beat on EPS, a beat on revenue, and guided up. Expectations are very, very low on this company. Organic growth rate for this company is a little bit lower than the space. They're growing anywhere between that 4 and 6%. The rest of the space is growing 7 and 9%. But we think this is an opportunity to buy a high-quality name when you look out. And, you know, if you look out a year, we think this company continue to get back into that, you know, mid-teens EPS growth, get back to the high single-digit revenue growth rate. They just got approval on Friday for their 780G, which is a diabetes play pump. So they've been an underperformer in the diabetes space, but that may get them back into the game, which could be a key driver going forward for them.
Okay. Up 4.25% today at 89.39. What about Abbott? I mean, we talk about being a COVID test manufacturer. Now what?
Yeah, that was last year's story. And the stock actually didn't do very well, even though they're beating revenues based on their COVID testing, because everybody knew at some point in time that would come to an end. And that's coming to an end. Last week, they were one of the companies that had a really good report last week. They beat on EPS, beat on revenue, and guided in line, to the point I made earlier that people are expecting a guide down. They actually guided in line. The stock had a really nice reaction. They're growing again. Their organic growth rate is 7 and 9% going forward.
Just so
they have a division, Libre, which is in the diabetes space, which grew 18% last quarter. If you look at the space in the U.S., they're growing 35%. Outside, they're growing mid-teens. So this is a name we like a lot. They have solid, good footing, good cash flow. Fits well into our portfolio.
If this will work.
Right. You know, I was looking at Boston Scientific earlier today. I'm just confirming it did. It hit a recent 52-week high in this past week or so of $53. Boston Scientific and Dexcom also on your list.
Yeah, and they both report this week, so we'll see what they report. But Boston Sci, we like it a lot. Again, this name's growing at that 7 and 9% top line growth. Their organic growth is actually accelerating. Margins are getting better. They executed last year, and we think they can continue to grow this year. They're a well-diversified company in the med tech space. So they got cardio, they got vascular, neurology. So it's a bunch of different areas that they perform well in. Again, margins are increasing. This name we like a lot, and we think when they report this week, they could provide a little upside, guide in line, and that should be good enough for this stock.
And so in the meantime, when you have all these sort of med tech type names, healthcare overall, is that a favorite area for you? And what else do you like? You mentioned you like tech, right? I mean.
Yep. So I'll start with med tech, or excuse me, with healthcare. We like it a lot. People are worried about the macro slowing down. We think healthcare is well diversified. They can do well even in a slowdown or if the GDP picks back up. It's an area that's not very discretionary, right? If you need to go get some kind of medical device, you got to get a stent or something. That's something you do regardless of what's going on in the economy. So that's why we like it. But now the pivot, we do like large cap tech a lot. That's one of our favorite areas. We covered it already. We said they generate a ton of cash flow. They're good companies. Valuation's very reasonable. We're starting to see a shift back into technology names, and we think these large cap tech names will continue to take market share.
Let me ask you this, you know, there's a lot of volatility expected for these markets. We're waiting on a lot of jobs reports and, you know, Fed and lots of earnings. So we may see some swings. I mean, who's to say?
I got it. I freaking got it.
That being said, if we are to pull back some, I mean, there are some people who think 10%.
She is our Senior Vice President, Investor Relations and Treasury. And we have Julie Strider. Where's Julie?
Yeah,
she is a Vice President of Communication. We've also seen, Your Honor, that we submitted 3 declarations, or maybe 4 declarations. Ms. Geyer will clean that up for me. The first was Ms. Holly Etlin's declaration. She is the recently appointed Chief Restructuring Officer and Interim CFO from Alex Partners. And we have Mr. David Kurtz from Lazard, company's proposed investment banker. And we'll get into those declarations as we proceed. So if we could please share the presentation. Briefly, Your Honor, and I think you've heard from folks, but the debtors professionals, Kirkland and Cole Schatz, Lazard, Alex Partners, we're being advised by A&G Realty Partners, T Street Advisory Group on Communications, and Kroll is our proposed claims and noticing agent. Go to the next slide. You've heard from folks, the ABL facility, Davis Polk and Greenberg, as well as FTI Consulting. And then the FILO is Proskauer, Dwayne Morris, M3, Houlihan Lokey. I'm sure we'll hear from Mr. Hillman and Mr. Huebner throughout the course of the day. As far as a business overview and a little bit of history here, Your Honor, this is a 52-year-old company that, I don't say this lightly, is an iconic brand. And it all started pretty humble beginnings. In 1971, Warren Eisenberg and Leonard Feinstein here in New Jersey opened the first what was then called Bed and Bath. And they started this company with $100,000. And it was humble beginnings. The stores were 2,500 square feet. But they had left another retail company because they saw an opportunity where department stores were lagging and specialty retail really had a chance to become something. By 1985, they had 11 bed and bath stores, and they had moved out to the West Coast. By 1987, as the company was expanding and changing, they were spending money on merchandise, not to make the stores pretty, but they decided to change their name because of the treasure trove experience at the stores, hence the beginnings of Bed Bath and Beyond. And it's important to note that in the 1980s, and I think this will be thematic throughout what we talk about, in the face of significant competition, Linens and Things and many other stores that came into this space, these people in this company adapted, and they opened its first superstore in Springfield, New Jersey, and that was 20,000 square feet. And the superstore experience and the merchandise that was available really gave the company an edge. And that adaptation was important because it led to wild success. As you'll see, in 1992, the company was first listed on NASDAQ, BBBY. In 1999, sales exceeded $1 billion for the first time. I think it's important the company decided that rather than using newspaper circular advertising, we're going to use these coupons. And it became a rage and a craze. And I'm pretty sure my mother-in-law still has, I'm not going to say dozens, thousands of coupons. And she did call for advice as to how to utilize those coupons, but we'll get there in another moment. In 2003, the company had grown, as you can see on the map, to 575 stores in 44 different states and also in Puerto Rico. And the growth continued in 2007 with stores that were opened in Canada. And we'll talk a bit today about what happened in Canada and what's going on in Canada, but those stores have been closed. 2008 was an announcement of a joint venture in Mexico. 2018, sales exceeded $12 billion, and there were 880 stores operating across North America. And the company had grown every single year. And we will talk about what happened in 2019, which was the first year that the company experienced significant losses and led to everything that has happened to date. Clicker may be lagging a bit behind. Apologies, Your Honor. There we go. The two main brands, I think everyone's aware, Bed Bath & Beyond, linens, house appliances, air purifiers, anything you can imagine, formed in a racetrack type setting as the founders had envisioned, so that if you went in to get a mattress linen, you were not leaving with just a mattress linen. You were leaving with lots of other things, and I remember that well at college and law school. And then Bye Bye Baby, prenatal, postnatal, strollers, whatever it could be. And the registry there, one I was familiar with when we were having children. And again, many, many, many trips to Bye Bye Baby on 7th Avenue. The company currently operates 360 Bed Bath & Beyond stores and 120 Bye Bye Baby stores. And that was part of the transformation plan that Ms. Gove put in place when she took over during the summer of 2022. And it's really the transformation plan that we had sought to implement, and we'll talk about briefly with some of the equity capital that we were fortunate enough to raise. On the organizational chart, Your Honor, you recognize we have 74 debtor entities. I just wanted to quickly note the non-debtor entities, so Your Honor is aware. Those first two boxes at the top are Canadian entities. Those are part of a Canadian proceeding. We are close to being complete with winding down all Canadian operations, but we will be presenting a motion for coordination amongst the courts, something that we've done in similar circumstances. The bottom left are the Mexican joint ventures. Those are not part of these proceedings. And then finally, Oak Insurance Company, that's our captive insurer. So we did not include that entity in the filing, nor could we. From a governance perspective, Your Honor, I did want to note that we've added 3 different independent directors to various of the company's board. As you'll see at the top, which we note is the sole note issuer of our 3 series of unsecured bonds that Mr. Mayor is representing, we added Carol Flayton as a director. And then at all of our subsidiary entities, we added Pamela Corey and John Foster as independent directors. And they will be working together to investigate pre-petition matters and to deal with any conflict issues that arise in connection with the filing. And Kirkland & Ellis and Cole Schatz will be jointly advising them on their investigation, which commenced prior to the filing of these bankruptcy cases. The capital structure, Your Honor, is relatively straightforward. At the top, we have the ABL that's secured on the inventory in a first priority position, as well as cash and other items of the sort. Behind them is the FILO facility. That's the 6th Street facility. That was entered into in 2022 in the fall, designed to provide the company with liquidity to implement Ms. Gove's turnaround plan and buy inventory. And as we note, that facility was increased over the course of the last couple of months in connection with the equity raise. And as it sits here today, $547 million outstanding. We also have letters of credit and finance leases, and then, as I mentioned, the 3 series of unsecured bonds. Why we are here, Your Honor, I talked about the company adapting back in the 80s and 90s and moving to the superstore experience and the enlarged space to deal with competition. And while the company has weathered the recession of 2008, as well as the challenging competitive environment in the 80s and 90s, the company did not adapt to the retail e-commerce boom. And the founder was quoted in an article saying, "We missed the boat on the internet." And the problem became such that competitors were doing same day or day after pickup at the stores or delivery. And in order to implement that over a period of time, takes resources and dedication. And the company at the time, back in 2010, during the internet boom, did not put the resources in. And ultimately, I think this really is one of the reasons why it led to the ultimate demise of Bed Bath & Beyond. And if you look, in January 2014, right, the internet really started taking hold in 2010 with the explosion of Amazon. But in January 14, Bed Bath & Beyond stock was trading at $80 a share. When you look at 2018, it was down to $14 a share. And that represented a loss of $15 billion in value. And I think a lot of that is attributed to a failure to adapt, which is really, really important in a retail environment. Has that been fixed? It has been fixed. The question became, it was a little bit too late. Right there. So in early 2019, Your Honor, the company reported its 7th consecutive quarter of declining same-store sales and its first annual loss and sales decline in 30 years. Profits were down 48% year over year. Again, its first unprofitable year. And so as a result of unprofitability and unrest, there was an activist campaign, as you can see. And that led to the CEO of 16 years stepping down and an overhaul of the board of directors. And several of the board members that were appointed in 19 remain on the board today. And then in November of 2019, a new CEO was appointed. This was a former merchandising expert at Target. And he came in and had a different vision. And he was going to move to private label and really kind of retool the business, which was successful at Target, at Bed Bath & Beyond with many different private labels. And unfortunately, as we'll talk about, it missed all expectations, and the consumer was not interested. The consumer wanted the KitchenAid brand. The consumer wanted the brand that it had come to know, and it did not have an ability to understand or comprehend the expedited nature in which these private labels were introduced. So on the next slide, and we'll get into some of this, but we just wanted to highlight that there really were both internal and external disruptions. The activist campaign reshaped the board and management, and then the shift away from private label products, really caused harm to the business. We had a share buyback that I will address for $1 billion because people thought that the intrinsic value of the equity did not reflect reality, and it ultimately ended up causing the company to burn significant cash that otherwise should have been used for operations. We had another management change. Ms. Goff took over in the summer of 2022, and we note the shareholder action at the top on the right related to the meme stock craze, which we will also speak about. And obviously, COVID is part of the story, Your Honor, as you're well aware. I know you presided over the Modell's case, which happened right when COVID happened, and I had a similar experience with Pier 1. We were in court one week, we were home the next. It was devastating from a retailer's perspective, and it was the cause for a host of consternation across the industry. And then also we've had supply chain issues that caused deterioration in product and a host of problems that led us to where we are today. Just briefly, Your Honor, the pitfalls of private label, I think we hit it very well in Ms. Etlin's declaration. We tried to move too fast, too quick into a whole new strategy that effectively lost sight of the consumer and the consumer's preference. And implementing 9 different private label products as quickly as we were trying to do just didn't take hold. And then, of course, the pandemic to pile on. And it really caused a lot of disruption. Now, private label products carry higher margins, but if you implement it over time, maybe you reap the rewards. But we went too quickly, and it proved to be a problem. It also strained the supply chain. As we note in this slide, it's longer lead times for private label products. And as you're implementing that and then dealing with the pandemic, the supply chain was highly disrupted as a result, not just because of the private label, but because of the macro environment. And as a result, as we know, we ran short on 200 of our best-selling products, costing the debtors an estimated $100 million in sales.
I read somewhere there was unfulfilled orders that year?
Unfulfilled orders, yes. I think close to $200 million. Yes. COVID, I don't need to belabor, but COVID caused the company, obviously, to shut down all of its locations for a period of time. It's a difficult time for any retailer with workforce issues and furloughs, as well as not understanding local mandates across the country where you have stores that you want to be able to operate. Maybe you get emergency relief to do so. But it caused major disruption at a time where the company really could not afford that disruption. I mentioned, go back one, the $1 billion share buyback. That occurred beginning in late 2020. It was at a time where the company had $1.5 billion of cash and $1.2 billion of debt. And the company endeavored on a share buyback program again because they believed that the intrinsic value was priced too low and that it was going to increase ultimate value for shareholders and for the company. It proved to be a cash drain on the company at a time where no one anticipated that COVID was going to wreak havoc that it did, and proved to be very disruptive from a business standpoint. Then the meme stock madness. Ryan Cohn, well-known meme stock investor, seized on the opportunity at Bed Bath, similar to GameStop, as well as others. He purchased a 10% stake in the company with a large call option, and then March to August, he exited his position, and as soon as he exited, literally overnight with securities filings, the stock tanked and caused it to crash pretty significantly. And on the heels of that, see the shareholder action for $1.2 billion securities fraud that was filed around that time. So now Ms. Gove takes over during the summer of 2022, and I say all the time, she had the job of turning around the Titanic. And when I tell you, I don't think I've ever met someone with more conviction, dedication, and perseverance than Ms. Gove. Every single day, she works because she cares about the people and she believes in the thesis. And she's still doing it today. And that's why all of us are going to do everything we can to help her turn that Titanic around. And she really went back to basics. And she removed several of the private labels and went out and sought to repair vendor relationships. Now, the problem, after not using those vendors, the KitchenAids and the Califons, they go place their products elsewhere. And so bringing the vendors back into the mix, it takes time, it takes resources, and it takes confidence in the business, all of which Ms. Gove was tasked with doing in a very short period of time. But she also announced an intention to close significant underperforming stores. And frankly, that's how we got to the footprint we have today, because it was her vision that a company could be restructured around the base that we have in place, the 360 or so Bed Bath stores and the 120 BBBY Baby stores. And you also see, very difficult reductions in force, as well as reductions in overhead, all of which was spearheaded at Ms. Gove's direction. Some of the initiatives that she undertook to help right the business, there was the raising of the 6th Street FILO. That was in the fall of 2022. There was a sale process. Mr. Kurtz speaks about this in length in the course of his declaration. Lazard has left no stone unturned, reached 60 different parties, 30 of which signed NDAs, some of whom are still looking at the asset, many of whom have dropped out of the process. We had a first at-the-market offering that was $75 million, helped rebalance inventory and address the balance sheet. Ms. Gove had a fall supplier engagement. She got everyone together to try to build confidence in the business. And then we did launch an exchange offer that unfortunately failed in 2022. Unfortunately, following the holiday season, the all-important holiday season in 22, there was no reprieve, and there has been no reprieve throughout the course of 2023. And in early 2023, we received a notice of acceleration of the application of default interest. And frankly, all the professionals in this room were tasked with preparing contingency plans and potentially being in front of Your Honor all the way back in January. So how did we get to the end of April? We had two different parties approach the company interested in investing. I know it's wild for a restructuring lawyer who's preparing for Chapter 11 to appreciate this concept, but two different investors were interested in buying equity in the company. And the reason that the Hudson Bay proposal was so attractive, Your Honor, was because based upon where share price was, depending upon the time of the tranche of commitment from Hudson Bay, the company had an opportunity to access up to $1 billion of capital. And that $1 billion of capital over the course of a year, so long as the stock price stayed above certain minimum thresholds, would have provided Ms. Gove and the team with the money and the resources to turn that business around and implement the various pillars that Ms. Gove sought to implement back in the summer of 2022, including getting all the merchandise and the inventory suppliers back into the company. And that's the reason why the board thought it made complete sense. And frankly, it's the reason why I think we were able to convince our lenders that back in February, we needed to pause. We needed to de-accelerate the loans. We needed to amend and modify the credit agreements. And we needed to take an opportunity to capitalize on this once-in-a-lifetime opportunity to bring equity into this company and see if we could access the remaining $1 billion. And the reality, Your Honor, as you've seen in the pleadings, while we were able to get over $300 million from Hudson Bay, we ended up not keeping the share price at a certain point that we were able to access additional capital. As a result, the Hudson Bay deal terminated. Just to note, Your Honor, because this was part of the calculus and convincing our lenders and ultimately the board making a decision, Joe's vision really focused on three buckets: customer-centric focus, again, right-sizing the operations, closing additional underperforming stores, and investing in inventory. And it was with these three pillars and potentially $1 billion of capital from Hudson Bay that we really thought we had a chance to turn things around. Now, on the heels of the Hudson Bay transaction terminating, we actually were able, yet again, to pull a rabbit out of a hat and get another ATM equity transaction with B. Riley Securities. And again, kudos to Ms. Gove, Mr. Caston, the Lazard team for pulling this through. It allowed us to sell up to $300 million of shares at a time through the market that we were able to capitalize on, and we were able to secure additional equity proceeds. And yet again, our lenders modified, amended their documents to allow this to happen so that we could get more time, because this really was a function of getting more time, because at the end of the day, if we ran out of these opportunities, we all knew what the Chapter 11 would ultimately look like, notwithstanding the sale process that we're running. And so we did take advantage of that. As far as where we are now, Your Honor, and the path forward, I think it's pretty clear in the pleadings that obviously the company has significant overhead and cost, and we need to minimize that burn as quickly as we can. And as a result, we have affected and are in the process and seeking authority from Your Honor to run a dual-track process. We are going to commence the wind down of all of our open locations, but we are not, under any circumstances, giving up on a going concern, some or all of the remaining stores. And there would be nothing that would make me happier than be able to stand up here in front of Your Honor in a month or 2 months' time and say, we found a buyer for 200, 300, or 400 of the remaining stores, get all of our vendors together, we're going to start a new inventory program, all of which we will continue to explore. Because frankly, I think the generations that come should have an opportunity to go to a Bed Bath & Beyond with their mother, with their wife, or their kid, just like I was able to. And no one on our side is going to stop working until we've run out every single ground ball. And you can have our word for that. And I want to assure everyone out there that would like to shop at a Bed Bath & Beyond again that we are committed to doing everything we possibly can to make that come to fruition.
If you can do that, there will be a lot of happy people, including myself and many other people here. That's what we're ultimately here for, and try to do the best we can for the various stakeholders. And I see where you're headed.
Thank you, Your Honor. Thank you, Your Honor. Just briefly, I'm going to cede the podium to Ms. Geyer to talk about our DIP financing. We did have a pretty healthy agenda. I'm hopeful. Many of these are non-controversial. We'll try to go through them quickly, but I do think it makes sense, if it's okay with Your Honor, to take up the DIP financing first.
That's what I was going to ask you, because that's the order. I was willing to ask the parties what order they wanted to go in, and it thinks the DIP should go first. Let's go first.
Yeah, we'd like the DIP to go first, and then we'll follow the agenda in order.
Okay.
Yeah.
Good afternoon, Your Honor.
Good afternoon.
Lee Geyer from Kirkland and Ellis on behalf of the debtors.
Yes. Got some pleadings from you and some pretty long orders and.
Thank you, and it's just me putting them all together too. So I've been pretty tired. Your Honor, there is obviously an army involved to get this number of papers prepared, but this is sort of the point of it all. How are we going to pay for it? How are we going to get through these cases and get to what should be a Chapter 11 plan? So perhaps we could get the less interesting parts out of the way regarding the declaration. On this slide, I've just listed the various docket numbers. I'm sure Your Honor noticed the DIP documents sort of trickled in throughout the day, and so there's a lot of docket numbers involved. But the most important one before we get there is actually docket number 10, which is Ms. Etlin's declaration in support of the filing of the cases and the various first day motions. I was wondering if Your Honor would this is an appropriate time to go ahead and put that into evidence.
Okay. Well, so
whatever your preference is.
I handle that is to say that, and that you're talking about docket number 10.
That's correct, Your Honor.
Yeah. Ms. Etlin's declaration in support of the first day motion, and the way I do that is I ask if there's anyone who is participating who has any objection to admission of that declaration as evidence, and whether they cross-examine on that or need direct testimony. I ask about that as a matter of course, so I'll do it again today.
The U.S. trustee has no objection, Your Honor, and we hope that we won't have the need for cross-examination.
Okay. Anyone else? All right, so Ms. Etlin's declaration at docket number 10 is admitted into evidence.
Fantastic. Thank you, Your Honor. And then also on docket number 36 is the declaration of David Kurtz of Lazard, our investment banker, in support of the DIP motion as well.
And I make the same statement as to docket number 37, the second Etlin declaration for the DIP motion.
No objection, Your Honor.
And having heard no other responses, will admit that docket number 37 into evidence.
Thank you, Your Honor. And then finally, docket number 37 is the declaration of Ms. Etlin again, but in support of the DIP motion. So, same person?
Yep. Yep.
No objection, Your Honor.
So just to confirm, Your Honor, do we have docket numbers 36 and 37 admitted into evidence? Just want to make sure. I apologize. It very well could have been.
Yeah.
Probably, almost certainly is. My brain saying the wrong numbers out loud.
You're talking also about Kurtz's then at 36?
That's correct, Your Honor.
All right. The same statement.
Yes, Your Honor. No objection.
Having heard no other objections, number 36 will also be.
Thank you, Your Honor. I think we are done now with the with at least the DIP declaration.
Okay.
So.
They may not have been exciting, but there's a lot of stuff.
There's a lot of exciting stuff in there to read. I will not read them directly to the group because I have a lot to get through today. Okay, so I wanted to back up for one moment before the petition date and sort of take us through a bit of the time, taking it from where we were in February through the petition date and then what we proposed for the debt financing. I think it's helpful to see the numbers as they changed, and effectively the FILO came to sit where the ABL position was. The FILO sort of took on more and more of that role. Here in February 2023, you see the FILO facility at $475 million. That was after they injected $100 million of additional loans, sort of subbing out the position of the ABL to facilitate the equity transactions that Mr. Sussberg went over earlier. So they were at 375 originally, then they were at 475. And then as we got to, and you see obviously that sizable over-advanced position that the debtors were in as of that date just prior to the infusion of the equity capital. So when we reached the petition date, well, you can see there's another ABL over-advance. That was a new over-advance because last week we found ourselves returning to the over-advanced position. There were critical obligations that the debtors need to pay. These included payroll, rate, taxes, not items that could be delayed. And so the lenders joined together and both approved, and by both I mean the ABL lenders and the FILO, approved this ABL over-advanced position, which of course had the effect of putting the FILO lenders an additional $54 million behind. But the company got these critical funds that at least to sort of land into Chapter 11, but they're not done because we still need additional So this is the petition date. And here we are showing what we proposed for the debtor in possession financing. So see the $54 million and $129 of the ABL facility that sit above, and then now we have introduced the DIP facility. This is the funding that we need for these cases. And I'll explain later why we need it right now, but just wanted to show visually sort of where it would sit in the stack. This is $40 million of money, along with $200 million of pre-petition FILO loans that sort of get rolled into the DIP. On the next slide, there's key terms to highlight. And you can see here again the $40 million of new money, reference to this rescue loan. One of the most important things that when we look at this roll-up is that there's actually $96 million at stake, or there's $94 million at stake, because you have the $54 million over advance that was done just prior to the filing, and then this additional $40 million. So when you look at them together, you're really talking more about a 2-to-1 roll-up, and we previewed that in our papers, but I think it's an important point to sort of level set on what may otherwise be like a more what people might find a more interesting aspect of this DIP. And the second point to make, I think, is that these are retail DIPs, and particularly in a potential wind down scenario, as we are facing here, if the going concern is not found, you often see full roll-up through the creeping ABL roll-up. You know, here we are in the slightly unusual position of having this term loan of new money provided. But what you see is very similar to what we have in other retail deals. You know, even my last retailer in a similar situation was Pier 1, and they had effectively the same ratio involved. Then finally, although the roll-ups do need to occur, the roll-up does need to occur upon entry of this interim order, we do have, I think very little harm comes from it, simply because there are not really significant unencumbered assets, and the assets that are there, you know, most of those are subject to final entry of the order. So we will still have the final order to really take up those issues. A couple of other points on this slide is just to highlight that there are very fair economic terms here. Mr. Kirk negotiating would point out that there is a very reasonable origination fee, and the rate on the DIP term loan is actually lower than the pre-petition FILO. So the more that is rolled up, you're actually paying a lower interest rate. So
it's basically 5 plus the 7.75. Is that what it is?
Exactly. Yeah. In terms of the rate. So the pre-petition FILO interest rate, so for the purpose of adequate protection, is at the default rate of SOFR plus 9.75, and here we have SOFR plus 7.75. So it's not insignificant that we are able to pay a lower interest rate on that amount. So why do we need this $40 million, and why do we need it today?
The $54 million came in last week.
That's correct, Your Honor. Exactly. So the debtors had important freight obligations to pay. You know, we've really been playing catch up as much as possible, trying to keep those. We can't ship without freight. We can't move our products from warehouses, centers without those freight costs. So those were critical. There was payroll in there because although you'll hear from my partner, Mr. Hunter, about the various aspects of the wages, but the weekly rates are paid at the distribution center. So that was a payroll week for distribution centers, and so that funding needed to go out. And without that funding, we wouldn't have been able to file here because we couldn't be late. But we still have a hole to fill. And it's highlighted right there. So this is the budget that was filed with the DIP credit agreement, and it was actually filed just to help with reference. The docket number is filed at docket number 41. So when it was buried in all the thousands of pages, we put it here. So this is the hole that we need to fill this week. So not in the future. This is right now. And through this first week, we pay payroll and benefits of $42 million. That includes the funding of a $16 million warrant reserve, and I can talk about that in a moment. It includes rent payments for our landlords. It includes May rent, and it includes a portion of April sub rent as well. We'll talk about that a little bit more. If you want, like the freight is also in here. That continues to be a major cost throughout this process. We'll see, but that's provided for as well. All of these things together produce, although we do take in receipts from these sales, it produces still a deficit of $30 million. So you need the funding to occur so that we can ensure that we meet our obligation. To highlight a couple of other very important aspects of the DIP from the debtor's perspective, features that we've negotiated for that are contingent on sort of this process working as have set out. There are 3 reserves provided for in the DIP that are also our preserved path to a Chapter 11 plan. The first is a $15 million priority claims reserve. That ensures that the cost of doing business in Chapter 11 is you pay your administrative priority claims. The debtors are aware of this, and that's why this reserve was created. We negotiated this with the DIP lenders, and they're funding under certain conditions. Second is the warrant reserve. As I mentioned, this is being funded this week. This is foreign dollars, so these are dollars that occur as a result of sending or notices, and there are certain requirements for paying a set amount of wages in various states. New Jersey, as Your Honor is probably aware, has a new law in place that requires additional warrant. So we have a lot of what you might consider warrant payments in the regular payroll line of the budget, but then there's also the ones that get paid for more at the end, and that's what this reserve is for.
That reserve is based on your estimate of the liability, or I also on
That's correct, Your Honor. So although we send the WARN Act notices, we're in the process of sending them today, and the employees are aware of that. They have been part of those conversations. For those that do receive our notices, they are going out today. Parties do work through that time. So we still need employees in place to do all the important work of making sure that these sales go through, facilitating the going concern sales process that we are still very much pursuing, ensuring that we can the various obligations of employees, landlords. We sort of need the whole army behind us, and also the store employees. Obviously, we need them to be able to sell anything at the store.
I'm sure. I know you need the employees. I was just asking if that number is an estimate of your liability, giving effect to that you're going to put a lot of the people on, or that's like a high number that is being conservative and.
It may be conservative. There is actually, we would say that the total number is in some ways 33 million. So 17 million of payroll going out that some folks call working WARN. It's WARN notice dollars. You've been noticed. You continue to be paid through that period. Those dollars are provided for in the payroll line item of the budget. So 17 million is already just agreed paid out for. This additional 16 million is for items like additional severance weeks that come on top pursuant to New Jersey law, additional time. There's a very complicated calculation that we can provide, Your Honor. I'm probably not the right lawyer of the group to provide it, but this does represent what we believe to be the full liability and may a conservative estimate of that. And then additionally, there's the wind down reserve just to make sure that we can finalize the orderly wind down of the debtors if reach that circumstance.
So, Ms. Geyer, I'm just going to ask you something. I'm going to stop you for a second.
Yes, sir.
I just want to ask the question: how this is all working in practical, in the sense of you have this, as you called it, the $30 million hole to fill in the first week, and then there's a $15 million reserve, $16 million reserve, $5 million reserve, and there's a roll-up. Mm-hmm. This might be a little bit of a, I don't know if you can answer it quickly or not, but just for the benefit of myself, and I think for everyone around, because there's a lot of words that are going around here and a lot of documents, but it just in simple terms to understand how these reserves are going to be funded when there's only 15 plus 16 plus 5 is 36. So that you know, there, and I know that those are different items, but I'm just saying it's a lot of money.
You're that's absolutely right, Your Honor. Let me clarify. These are not all funded day one. So the WARN reserve is funded day one. The rest are funded through receipts coming in as we liquidate the inventory. So those are spread over time, and they'll eventually be fully reserved for and dollars bring in. So $40 million draw, single draw today, or rather tomorrow, assuming that we get approval today. So you get the $40 million in. The roll-up occurs right away. So it becomes a $240 million DIP obligation with the debtors. Then while we have the WARN reserve immediately funded, these other two reserves are funded over time, and then upon the satisfaction of certain conditions in the order, those are released, and all DIP liens, other liens are released, and so those dollars just become the debtors at that point.
Is there a line for the funding of the reserve in the forecast that you have there?
Yes, Your Honor. If you go to supplemental items, way down at the bottom, right above net cash flow, is a line that says supplemental items, and it is approximately $1 million a week. You can only see a little bit of it here, but the rest of it is funded, throughout and over time. Just briefly, there's also an adequate protection package available and provided for under the DIP financing, because it's also, of course, our consensual use of cash collateral. So we just wanted to show typical adequate protection package. And then this chart, which, there will be a quiz on later, but I certainly hope we don't want to go through. in detail. The DIP milestones are very similar to the ones that Mr. Sussberg already highlighted. So I'll just briefly share what our process looks like from here. This is the time that we have to finalize our plan, to pursue our going concern sale process, and either find our buyer or commence an orderly wind down through a Chapter 11 sale. So we have 120 days effectively to do that, and I think that's enough time to get it done. So with that, Your Honor, unless you have any questions about the details of the DIP papers that we filed, I do want to highlight that we did file a revised order, docket number 69, I believe, just reflecting certain resolutions with landlords, council representing various landlords, and also the Texas Taxing Authority.
So just when you went to that explanation with the supplemental items, which is the $1 million a week, essentially?
Yes, Your Honor.
And then right above that it says other RX flows. I just don't know what an RX flow is.
Excellent question, Your Honor. I know which line item you're talking about, and I don't know exactly what the substance of it
is. RX is a prescription.
Well, fortunately, those are not all the costs of my medication. I have a pretty good health plan.
But I'm being very frank. I don't know what that means.
I can get that answer in like 1 second.
Okay.
If you get. Okay.
Yeah. Right there. Sorry? Definitely not prescription. No, I know. I figured you guys were going to answer it.
Honor. Various other restructuring costs are reflected in that line item. They're not professional fees, they are other costs of this case process. So I think we need more detail than that, and I think we will actually have to get our clearance up here to answer the question.
Okay. All right.
Pause, Your Honor.
Okay.
The line item, so it includes U.S. trustee fees. That's expected, the restructuring outflow. In addition, utility deposits, so that's why there's that uptick in week 3. It reflects that deposit in place. And then also freight items also appear in that line item as well.
Number.
Yes.
The freight items is
Yes.
big number.
Exactly.
And so that, in other words, that's going to be, okay, so that's just going to be paid from the cash flow, in other words?
That's correct, Your Honor.
All right.
Great.
Those were my questions. Thank you, Ms. Gaia. I hope I
Thank you, Your Honor.
correctly.
Good afternoon, Your Honor.
Good afternoon.
David Hillman, Proskauer Rose, on behalf of 6th Street Specialty Lending as the DIP agent and FILO agent. May I be heard just to talk about the DIP and not spend too much time on how we got here, but just to offer, you heard from Mr. Sussberg, who walked through in about 30 minutes the company's perspective of how we landed here. I'd like to use 3 minutes.
Okay.
To just give you the perspective of the.
Take 4 or 5.
Okay, I won't go over that. So our perspective, you heard from Mr. Sussberg about the company having been around for 52 years. Sixth Street's relationship with the company is not even a year old. The initial loan that Sixth Street and the FILO lenders made was, as you heard, $375 million in August, and it was to provide liquidity for the company's turnaround plan that you heard Mr. Sussberg describe. The company used those loan proceeds in part to pay overdue vendors and to get vendor support going forward. Going into, as Mr. Sussberg talked about, the critical holiday season, the company was significantly off plan, and the poor results during the holiday season started a rapid downward spiral. So within a quarter after making that loan, the company's liquidity position was substantially off. I think the numbers are more than $530 million off their plan. During the next 4 months, the company, while in some extreme distress, did try the maneuvers that Mr. Sussberg outlined, and they weren't successful. And during that entire time, Sixth Street and the FILO lenders worked with the company to try to right the ship. This was a challenge. At all times, we worked with the company to try to avoid the collapse of an iconic brand, and we provided hundreds of millions of dollars to the company, which preserved jobs, and it supported payments to landlords, vendors, shippers, and suppliers. This is interesting. In 4 months, Sixth Street and the FILO lenders agreed to amend or waive their loan agreements 5 times. And you heard Mr. Sussberg talk about that support of the lenders, including by way of paving the way to provide $100 million in February, which allowed for the de-acceleration of the loan that you heard about. This created some additional liquidity to operate. But the company was hemorrhaging cash, and you heard about the 2 equity transactions. Last week, now I'm approaching into the dip here, the company approached Sixth Street about providing dip financing for an orderly liquidation. At that point, the company's financial situation was so dire, they needed money just to get into bankruptcy. You asked about when that loan was made. It was a 2-step process. The loan was funded 1 business day ago, Friday at 9:15 in the morning. Now, I think it's clear we had, I'll call it a pre-dip rescue loan on Friday, and here we are today, $54 million on Friday morning. And here we are Monday, 3:15 with another $40 million. So the FILO lenders would have much preferred to make a dip today, not one on Friday and not one today, for $94, $95 million. That wasn't an option. The company needed what I'm referring to as the rescue loans to make some critical payments. And the rescue loan nominally was made by the ABL lenders. But because of the over-advance that you saw on the chart that was put up in connection with the dip, for all intents and purposes, it was funded by Sixth Street and the FILO lenders because their recovery is last out. So that was our economic state that funded Friday. So when you think about this, we didn't want to make a loan on the eve of bankruptcy. We did it again to support the company. And so the second step of the process is the more traditional piece of this dip, the $40 million. So look, we wish that there was a different outcome, and I'm going to walk through the dip, and I want to tackle the questions that you asked Ms. Geyer so that there's no ambiguity or confusion for Your Honor. You asked about the funding of the reserves, and you got the numbers right. They're in the dip order. It's in paragraph 10, and they are funded. The priority reserve is funded roughly $900,000 a week from the proceeds of the liquidation of the inventory. And that's what the budget contemplates. There's a cadence to the funding of the reserve. All the reserves are funded in accordance with the budget. You heard about the Warren Reserve. I believe the budget contemplates that that's funded next week. And the other reserve, the wind down reserve, is filed later in the cadence of the budget. We talked about the roll up. Again, I think this is an important piece. We should look at the totality of the economic context. And when you look at the totality of the economic context, it's for all intents and purposes a $95 million dip with a $200 million roll-up. And yes, that is contemplated to happen at the interim order. So my job is to make sure that if there's any ambiguity in your mind about the dip or any of its terms, that I'm here to answer them directly and concretely. So anything that you have to ask, I want to be responsive.
Well, I mean, the question people have is, how that $200 billion impacts the rest of the stakeholders, how that changes, so that obviously for your client is not doing it. It's a business, and this is a tough situation, and I completely understand that. So I think that's where the people might have questions.
Right, and so the roll up was always part of the economic consideration for doing the transaction, for providing yet another round of additional capital. And importantly, the roll-up is subject to the challenge period. And that's specifically set forth in the order that's before Your Honor. So I think that's the sort of safety net to deal with this. This happens on the interim. And it is a inextricable component to the willingness to provide this company yet another round of additional capital, right? We stepped up in August to provide financing, stepped up in February to provide another $100 million, 5 amendments in 4 months. We have provided stabilizing capital and support for the company, and to do it yet again, this is simply the terms of the proposal holistically before the court, and that the parties have been able to reach at the negotiating table. The other piece that I would mention, there's the interest that I think you asked about on the roll-up. It's not paid in cash, it's PIKs. So that's another piece that provides additional liquidity to the company. Have I answered your question? Okay.
I think it's a payment in kind.
Yes. Yeah. So I appreciate you allowing me the time to share our perspective, and look forward to an opportunity to be before Your Honor and to work with the other stakeholders in the case. And any questions about this needs to be directed to me. I'm here and ready to answer those questions.
And I just want to say that the silo facility has, right, I guess the principal is $547 million. The ABL is $80 million ahead of it. That's like $620 million. Between the two of them, as I understand it, that is collateralized by maybe not every single asset of the debtors, but substantially all the assets of the debtors?
There are some assets that are not currently encumbered, some property and some real estate. And I believe there's also, when you identify the litany of claims, I think there are also $100 million of letters of credit outstanding as well.
All right. Thank you.
Thank you.
Thank you, sir. That was helpful.
Good afternoon, Your Honor. For the record, Marshall Huebner, David Polk, on behalf of J.P. Morgan as ABL agent. I will take about 2 minutes. So
okay.
I'm well shorter than Mr. Homan. First, let me begin by noting that Mr. Sutberg's lyrical and entirely appropriate opening was in some ways too modest, because he shared with this court the aspiration that people be able to go with their wives and mothers to Bed Bath for many decades to come. But yet he describes himself, of course, as a father and a husband who's done that, and as someone who took 4 girls to college and moved 3 of them into apartments and 2 of them through pregnancy, I could echo those stories of all the different bed baths in one's life. So I guess I'm in between the generations here. I have grandchildren as well. So just a couple of other quick things, Your Honor. Number one, in terms of the support of the lenders, and to be a little bit more precise about a couple of things, there were actually 5 amendments in the last 3 months as the debtors worked through trying to raise money. The ABL over advance that was done last Friday with the consent of the FILO lenders by the ABL lenders was $54 million and closed late morning. Your Honor, to be clear, I think it was ultimately corrected, but let's say it once and say it right. There's $83 million, I think 82.8 of outstanding loans and about $102 million of LCs. Those are the ABL obligations. It's those 2 things together. It's the letters of credit as well as the borrowing. Your Honor, Mr. Sussberg talked about a series of firsts. I'm going to talk about a professional first, certainly for me, and I've been doing this for a rather long time. The deceleration of the ABL facility is something that in more than 30 years of practice, I have never even, not only not seen, didn't even imagine was possible to get a 100% syndicate vote in a broadly syndicated ABL facility to put essentially the debtor back in the ability to borrow. And the debtors use that ability intensely, as they were supposed to and should have and did. Just so the court is aware, there were approximately 40 borrowings since the February reinstatement, essentially, of the facility that totaled $757.528 million. So in addition to having access to segments of the equity proceeds that were raised and the like, the reopening of the tap was another expression of support by the lenders to let the debtors explore. As you have heard today, they will continue to explore every possible available option to figure out how to do the best they can by the many stakeholders of this story and indeed iconic brand. You know, the only other thing I would mention, and with that I'm done, as I promised you, I have very little to say this morning, is that the DIP order, while it's called the DIP motion and the DIP order, as Ms. Geyer pointed out near the end of her presentation, also contains the adequate protection package for the secured lenders. It's not, I think, particularly analytically interesting. I don't imagine it's going to draw much attention from anybody. We are an ABL lender, and that is an extremely safe facility that has the first lien, as the court asked about and was answered, not only a blanket lien on virtually all assets, but particularly in a retail case, a blanket lien on all current assets, right? And so you're talking about inventory and receivables and cash and securities and net equity and LCs. So ABLs are designed to be low-cost facilities because they are very, very safe and they are very, very oversecured. And so I don't imagine that we will be interesting to anybody in this case. But should we end up interesting, obviously we're here to explain not only what the ABL lenders did, but they're, I think, quite extraordinary support of extraordinary efforts by a company to figure out how to do the best that it can.
But between, as I was saying before, between the ABL and the FILO, there's, whatever, $700 million that's out there, and that is but one way or another, however this all shook out in the Chapter 11 reorganization or wherever we would be, that $700 million was secured by virtually everything except the real estate and whatever else exceptions there are.
Yeah, and even the real estate, Your Honor, it was some of the real estate that was outside it. And just so the court knows, today is certainly not the day for this conversation. I don't think any day will be the day for this conversation. But so the court is aware, their presentation referred to an over advance of $193 million in February. I actually believe the exact number was 198.33, but that's okay. On that date, so the court knows, there was approximately $694 million outstanding. I believe that the collateral was very comfortably double that, even at the lowest possible point. When you add up all of the inventory, all of the receivables, the debtors own auction rate securities, they own extremely valuable intellectual property, as you might imagine, in many sort of precedent iconic retailer cases, Polaroid, Kodak, and the like. The IP alone fetched very, very substantial value. And so Your Honor is correct. And the current loan balance, when you add our, whatever it is, 185, to the 575-ish of the FILO, you measure that against virtually the company's entire asset base. And even back in February, I don't think there's any possible question. My memory is that the gross inventory alone was assessed at $1.072 billion on the date of the over advance when the borrowing base certificate was delivered, and that's even leaving aside hundreds of millions of dollars. Again, please don't hold me to this. I'm doing this from ancient, tired memory. I think the IP forced liquidation value was agreed at like 168. I mean, there's just another 100 here and another 40 there, and auction rate securities that were actually monetized after the February over advance date for tens of millions of dollars. So yes, I think that, you know, we'd be surprised if anyone did not share the view that there was over collateralization to a very substantial degree at all points, as an ABL facility is designed to have.
Great. Thank you.
Unless there are further questions, Your Honor, have a good afternoon.
Thank you. Ms. Steele?
Thank you, Your Honor. Good afternoon, Fran Steele on behalf of the U.S. Trustee. Your Honor, as you're aware, the interim order that was filed, and I'm showing, Your Honor, is well over 100 pages, holding it up for you. And as you can imagine, the attorneys involved had days, weeks, months to negotiate and look at this order. And we were given the order on Saturday, which we appreciate receiving in advance. But the fact of the matter is that the order was put on the docket yesterday, which gives most parties in interest 1 day to review this order. And the order contains various extraordinary provisions, including the roll-up. And the U.S. Trustee worked with counsel regarding many of the extraordinary provisions, and our changes were accepted, and they're reflected in this order. The remaining issue is the request for the roll-up today, 1 day after the case was filed. And we don't object to the roll-up per se, Your Honor. We object to the timing. We submit that the roll-up should not be granted on this first day, but instead should be on a second day hearing after a committee has had a chance to review. And we respectfully inform the court that the challenge period doesn't adequately give the committee a chance to totally review the roll-up. And on that basis, the U.S. Trustee objects to the roll-up, and we ask Your Honor not to grant the roll-up today, to push the roll-up provision to the second day hearing. And in the event Your Honor does grant the roll-up today, then we would ask that there be some provision in the order allowing the committee to actually review the roll-up provision and unwind the provision should it be warranted.
Well, didn't we just hear from counsel that one of the reasons that that it was critical, first of all, that it was a key component of the deal, and without it, there would not have been a deal. But didn't we just hear from them, I'm sorry, I don't remember which man it was, but yes, that it was, the challenge to that is allowed and it's preserved.
And does that challenge provide for the unwinding of the roll-up should the committee find that it's not proper and not warranted? Or does it just challenge the validity of the lien?
Well, I mean, if you're challenging the validity of the lien, or you're challenging the roll-up, or whatever you're challenging, there's a pretty significant person behind counsel there, and to me that means if the purpose of challenging it is to get it back. I don't know what else it is.
If that's what Your Honor is saying, that challenge encompasses that, then the U.S. Trustee would accept that representation. And if that's in the order, then we would not object today. But we just wanted to make sure, as Your Honor knows, the committee review is extremely important, and we want the committee to be able to review these provisions.
Okay. Absolutely.
Thank you, Your Honor. For the record, David Hellman for the FILO agent and DIP agent. So, paragraph 8 of the order says that upon entry of the interim order and subject to paragraph 43, the roll-up occurs. Paragraph 43 is the so-called challenge period. So the issue is the challenge period is, I would say, plain vanilla, garden variety things that a party withstanding can challenge, and it is priority. It is validity. If there's something defective with the debt that's rolled up, there is a remedy. But I think what we're hearing for the U.S. trustee is something different. The U.S. trustee wants to preserve the ability for someone to come back here at the final order and say, don't roll up valid debt, or roll up less valid debt. That is foreclosed. That decision, and this is the point that I don't think I made before that I think is worth emphasizing. The $40 million dip is a single draw term loan. It's out the door tomorrow. It's out the, maybe even out the door today. Okay? So if we're going to provide the benefit of our bargain, then the panoply of rights that we're expecting can't be yanked back from us after we've provided that capital. Now, the safety net is what the court has seen in innumerable cases before you of a challenge period, but it is not the freedom to come back and simply undo the roll-up unless they bring a challenge that challenges, among other things, the validity and priority of the debt. And there's a long list of the things typical, right down the middle of the fairway, challenge period. The relief that the U.S. trustee, with all due respect, is asking for is far broader and effectively would require the court to deny the roll-up. And I think I've been clear on this, and the debtors can supplement this point. There is no possibility of doing the $40 million financing without the roll-up. They are inextricably linked, and it's subject to the challenge period. And I think that is the protection that could give the court comfort to know that if someone to challenge the rolled-up debt for any one of the reasons in the paragraph 43, they have the ability to do so.
And isn't that the way it always goes? I mean, that's the way it is. It's a challenge. If the challenge doesn't happen in 1 minute, it has there's an adversary proceeding or a motion or something filed. And my guess is, I don't know, maybe I'm going out on a limb. I would say a challenge would be vigorously defended. So I think the issue about taking it back or I don't know, sounds like a disgorgement or forfeiture you're talking about. That's not my understanding of a challenge. So that is that I was, and even to Ms. Steele's comments and I guess objection is that the creditors committee is going to be appointed in about a week.
That's right.
Right, and they're going to get on this right away. They're going to get on it immediately, like happens in every case when there's this kind of thing at stake. And if they have an issue, they'll let you know about it, and then you'll see what it is. And if they want to challenge it, they'll challenge it. But they have to challenge it in accordance with due process and all those things. And it'll be probably a contested matter one way or another that would allow ultimately for that money to come back, but only after you win. Or not you, but but after the committee wins or whoever has standing wins.
And I appreciate Your Honor's color, and I think what we're saying is the same thing. That is, the unwind is not the remedy at the final order. It is the ability to bring a successful challenge under paragraph 43 of the DIP order to the debt, not to the roll-up. And if there's an issue with the debt as a result of a successful challenge, then there's an ability to deal with that.
Well, and then they're also saying the priority and validity. I think.
Yes, I'm sorry. Yes, but not the debt, not the roll-up. The roll-up is a today issue. The roll-up cannot be undone by simply raising an objection at the final hearing in 30 days. There is path under paragraph 43 to bring a challenge.
But the 40 million is not coming in otherwise, what I'm hearing.
And I understand that, Your Honor. And with those representations that the court stated regarding the challenge and the ability of the creditors committee, the U.S. trustee will withdraw its objection.
Oh, okay. Well, I'm glad to hear it. And I don't think I said anything different than what's in there. So
you clarified, Your Honor.
Well, because the color and clarification is so critical to the DIP lender's perspective, I think it would be important for me to unequivocally state that once the court enters this DIP order, the roll-up cannot be reviewed at the final order. The remedy for a creditors committee or a party with interest withstanding is to bring a challenge under paragraph 43 of the DIP order. Is that your understanding, Your Honor?
That could not be clearer, and I appreciate the candor and directness.
Thank you.
Dyer?
Your Honor, I think we heard that the United States trustee's objection was withdrawn, so we are now fully consensual. I'm not sure who accomplished it, but here we are. So,
do you still have something to address?
no, Your Honor, I came back to the podium because I was hoping to seek your approval and also, just to get on with the other items that we have after it, as we do have a busy day.
And I just want to say that then before you start, Ms. Dyer, is that I did review the papers, and the debtors are represented by some of the most sophisticated, knowledgeable, experienced professionals, not just legally, but financially and business-wise in every way. And if there was one thing that came through from the papers and even this last presentation, is that this two crystal clear things. This 40 million was not coming unless they got the protections in the order of the roll-up, as an example. And without the 40 million, this iconic brand was probably going to go into a fire sale, unorganized, very value appreciating liquidation immediately. And the business judgment in this case is far beyond me, and I can't question the recommendations and advice of all these extremely knowledgeable professionals. It's something that needed to be done, the only way it could be done, and is the only way that's going to give everyone on that Bed Bath and Beyond side the chance to make another thing happen that people didn't think could happen. And I hope that's the way it goes. But either way, there's a pathway to do it in an organized way. Without the facilities that we have here, that pathway was burning, and I don't think that's the proper result. So I'll approve the DIP financing order.
Thank you very much, Your Honor.
Your Honor? Have you heard? Yeah.
Sorry. Who is that? Mr. Meyer?
Yeah, this is Meyer, Kleinager, Bergman, and Fuentes.
There's something happened on my screen here. Okay, go ahead, sir.
Can you hear me okay?
Yes.
Great. Thank you.
Good to see you.
Thank you. It's hard when you're not in the courtroom, and I guess I'll start with that. Thank you for indulging me today to participate remotely. I just couldn't physically get there from Connecticut in time today. And I also want to say it's nice to see Mr. Sussberg without the full arm sling on that he had last week in court. It looks like he is. It's there.
Still has it.
Still here.
He was wearing it but he was wearing it at the podium last week. So there's some improvement.
Progress. He showed it to me.
As I mentioned, we represent a number of investment funds and institutional investors who own the unsecured bonds of the company. The unsecured bonds are, as you've seen today, $1 billion, and the largest part of the largest segment of the company's finance debt. We're here to, we want to work collaboratively with the debtor. We want to maximize value. We want to be constructive to get to a resolution that works for all stakeholders. We do have some concerns about the process, as you would imagine, but primarily, with respect to cost and the timing of the process, we don't want to rush a process that's serving only the secured lenders' agenda. Not saying that's the case now, but it is something that we want to discuss with the debtors in terms of where they've been and how they want to get to where they want to go. Josh did want no objections today on an interim basis, obviously, given that you've already ruled as well. But we do we do reserve rights to the final hearing. In particular, would note that we may have issue with certain incremental collateral or liens on avoidance action going to the DIP. But at the end of the day, our clients, like you've heard today, believe in this iconic brand, and in particular the valuable asset in BBBY Baby, valuable NOLs, and various other pockets of value that we've heard Mr. Huebner speak to today, that we hope will lead to distributions well beyond the secured creditors in this case. So we look forward to working with the court and the debtors' representatives to find the best possible outcome here for the states and their stakeholders, and we reserve our rights for the final hearing.
All rights reserved, and if past this prologue, Mr. Meyer, it seems like there's been a lot of hard-fought but good faith negotiations between the parties that allowed things to happen. When things didn't seem like they could happen, when deadlines were passing, and my hope is that it continues going forward. And it's not just my hope, it's my belief that that's the way things will go.
Share your hope. Thank you.
Thank you, sir. All right, so there's still no objection.
Thank you, Your Honor. I thought I was going to have to invoke the enshrined courtroom rule of no takebacks, but I'm glad that we did not reach that. Your Honor, if we've closed the DIP chapter, I might move toward the next item on the agenda, which is the bidding procedures motion.
Okay, let's go. Bidding procedures.
Bidding procedures.
Oh,
and just one.
I'm being handed a revised order.
That's correct, Your Honor. You're being handed a revised order that has been submitted to Chambers. It is not on file yet, to my knowledge, but we wanted, in order to have what is the fully agreed form of order in your hands while we went through it. But just to take a step back for one moment, the original motion was filed at docket number 29. It contained all of the documents, so you didn't have to go hunting and through the rest of the docket for the declarations and such. But what you'll see in in the Lazard declaration, Mr. Chris's declaration, is a long process that has been ongoing for some time, seeking for strategic investors, concerned buyers. There were financing searches in there as well. So really where we are now is a continuation of that 6-month process, except now we get to do it on a national stage. We get to do it with everyone aware that Bed Bath & Beyond and BBBY Baby are for sale. They're available to the highest bidder, and we want those bidders to come forward, and we are prepared to work with them as quickly as we need to document that transaction in whatever form it takes. So obviously we are looking for, first and foremost, a going concern buyer for this company. We have not only an iconic brand to protect, but we also have 14,000 employees that we want to be able to keep as many of those jobs intact as possible. That said, I share everyone's experiences with Bed Bath, and I want to be able to take my daughter college shopping there too. I want to take my sons there college shopping if we're fortunate enough for them to make it to college. The daughter definitely. We'll see about the boys. And so, to the extent of
I'm counsel for son and
I knew that he would retain excellent counsel, so that is concerning for my future then. So on this, there are a lot of documents attached here, and there's a whole suite of, there are stalking horse bidding protections, there's a Form APA, There is the form and notice of auction. There are notice of procedures for the assumption and assignment of those contracts and leases attached. Should we find that going concern buyer? That's because we cannot afford delay in having all of that in place should someone come knocking on our door. So we want to make sure that those items are in place, and we have very specific milestones to meet. And if it's not a going concern buyer, then maybe it's these iconic brands, and certainly these iconic brands have a lot of value and will continue to this day. We know that brands like Toys R Us, the actual stores didn't make it through the restructuring process, but the name did, and so it's now reviving, and that's at the very least the story we want to be able to tell here for Bed Bath & Beyond and buybuy BABY. So with that, Your Honor, I think the most important aspects of this are the tight timeline. So we would have an auction. We have a bid deadline of May 28th. If a party wants to serve as our stalking horse bidder, that's May 22nd. So not a lot of time from now. Those are dictated by the DIP required milestones. So these are not flexible end dates, although we do have built-in flexibility in the motion to dates around. At the end of the day, our DIP budget, our DIP order says what it says, and we have to have that sale hearing in order approved on June 7th in order to get that approved. We've added in a couple of extra dates into the schedule, so adequate assurance packages delivered by May 29th, the day after the bid deadline, to ensure that landlords have adequate time to review those packages. We have moved the objection deadline to 2 days before the sale hearing to June 5th instead of June. So June 7th would be the sale hearing, June 5th being the objection deadline. So we've made a few changes around the edges, but the absolute dates have not changed. It's that June 7th end date, that's 45 days completion date under the DIP milestones, and we will use every bit of that time to ensure that we get the best value possible for the company and or its brand. One thing I do want to flag is that this motion does not cover one-off sale, one-off lease assumption and assignments, one-off lease termination agreements. Those would be pursuant to a separate motion that we are getting on file as soon as humanly possible. And so you won't see that in these documents, but just for the going out, those are not covered here.
Those are things that are circulating, or those are things that you're talking about now?
Exactly. Exactly. We do have A&G Realty as sort of the restructuring real estate advisors involved in this process as well. So they're out there soliciting and looking for potential parties that may be interested in assumption and assignment of certain leases, or with particular landlords may want to enter into those individual termination agreements as we exit the stores over time through going out of business sales. But for right now, this is our main primary absolute focus, but we will be doing that sort of simultaneously to ensure that we have maximized all value and resources that we have to monetize. So there are a couple of declarations attached to this motion that I just want to flag all together at docket number 29. So I just want to ensure that those get into the record. There is the Lazard declaration. This occurs also served as a declarant for this motion, as well as Elise Freitas. She is the party that reviewed the consumer data privacy provision to sort of get out in front of any concerns where if we have consumer data involved here. It's to review the policy that just says we're not asking for relief around it. It merely says a consumer privacy ombudsman is not required here simply because we've done all this review, and in terms of she's done this in many cases. In her opinion, this data and what the bounds would be to make it part of a sale process is sort of laid out in there, and why we don't really need a consumer privacy ombudsman here.
Yes, Your Honor. We've preliminarily reviewed the privacy policy, and we've had some preliminary discussions, and we don't believe that a privacy ombudsman would be necessary based on the specific language that allows the company to enter into a sale and give this information to the prospective purchaser. So as we stand today, we don't believe that we need it.
Okay, thank you. Yeah.
With that, Your Honor, I do have the red lines in front of me. If there are any specific questions that you have or would like to go over, I'm happy to do so.
The bid protections, the expense reimbursement, and the breakup fee. The way I understand it is that is also going to be the subject of negotiation and back and forth as to the stalking horse, and then this is a little bit of an unusual situation. How that works going forward in terms of the substantiation of the fee. Yeah.
Yes, Your Honor. There are bid protections requested in this motion order. The reason why they're requested here as opposed to at a sale hearing is simply because we don't have much time in the schedule to come back and see if we can get that. If a going concern buyer comes forward and they've put together a package that says, this is going to be a fantastic stocking horse bidder, or not just going concern, but any package that we think should serve as a stocking horse bidder, we don't want to disrupt that process by coming back. So we've requested a reasonable bid projection, but we will continue to negotiate those. We are not automatically handing those out by any means.
Okay, and then by then there'll be a committee, I think, and so maybe chime in as well. They're a consultation party, right?
Yes, absolutely, Your Honor. And they have that was one of the points requested by the United States trustee, was to make sure that the committee, when appointed, would be a consultation party and have all of the same notice rights and involvement, and so they have been incorporated as well. So, yes.
Great. All right. I obviously have not. I think it is on the docket at 3:24 today. Is that on the docket?
Fantastic. That's fantastic.
I'd like to see.
I know. I told you. I went back to my desk for 1 second, submitted it, came back. It's very quick.
Well, but I obviously haven't had a chance. And I don't know if the most comments from the trustee or.
That's correct, Your Honor. So, majority United States trustee and also a couple of landlord tweaks just around the timeline in particular. The United States trustee made sure that the committee was involved as a notice party throughout. Those are the key points.
All right. So maybe just as long as those parties have it, and you represent to me that they've signed off on changes that you sound like you agreed to already, then again it's a different. It's not going to say just but it's a different situation because it looks like you've had a semi-wind down process going on for quite some time, and a sale process in a sense going on for a long time, and there isn't a long timeline on on trying to get it done. So I think these are circumstances in which you have to make adjustments and not have the usual procedure, because the procedure doesn't really fit this time. And I appreciate that you work with the U.S. Trustee's Office and the landlord getting it done. So I'm sure I'm fine. I'm sure I'm going to be okay.
Thank you very much.
I don't want to keep everybody here while I flip through the red line. I don't know.
Yes, and apologies for submitting it on the docket so late in the day. We try to make it so that everyone can get their comments in and get heard, and I think at least everyone could represent if necessary that they are signed off. I think we do have landlord representation in the courtroom today. If you'd like to hear from them,
yeah, that'd be fine.
And you know what? We didn't do that with the DIP order. Is that in final form?
Yes, Your Honor.
It is in final form.
Yes, that was the submitted final order.
Okay.
Final form of interim order.
Great. Come on up.
Good afternoon, Your Honor. Robert Lee Hing, Kelly Dry and Warren. Your Honor, we represent approximately 16 landlords at over 80 locations at this point, including Oak Street Capital, the headquarters landlord, 11 other locations, Site Centers, Kite Realty Group, Brookfield, a number of other landlords, Your Honor. Your Honor, these procedures are far from perfect, and they certainly are unusual. But we absolutely understand the situation the company's in. We can't promise you that we won't need some of your help if it does turn out that there is a going concern buyer and there's adequate assurance issues, and we need some time to assess those. But with the changes that Debtors Counsel was willing to make and the lenders, and we understand there's a big team and there's a lot going on, it's a very tight, compressed process, Your Honor. And even with the adjustments that they've made, it may be very difficult for our clients to get the information, adequate assurance information, assess it, and know whether or not they have to object. But given the realities of the situation and the movements that were made, we were willing to move forward with this process, and specifically on understanding that this is for a going concern bid, something that may save the company, and that the process for doing one-off lease assignments, et cetera, would be subject to a separate set of procedures. So we really appreciate the work of the Debtors Counsel, the debtors team, and everybody else involved in getting back to us quickly and promptly. It's certainly far from perfect, Your Honor, but at this point, we were signed off. I also worked in coordination with Laurel Rogland from Ballard Spar, Scott Fleischer from Damon Barkley. They're also here. They can get up if needed, but they were also involved in the process, and we certainly appreciate their help in helping us get comments to counsel for the debtors, and great response from the Kirkland and the Coleshots teams, Your Honor.
Well, I'm glad to hear that. I'm not surprised to hear it, but I'm glad to hear it. And I appreciate your working with those things, and I'm certainly here to help where I can. I try to be reasonable, and I try to give people a fair shot at doing what they need to do and having enough time to do what they need to do. We are working with the compressed time frame here. And the way I'm seeing this, sir, is in a way, this is setting up some guidelines for sales that are to be determined, that's not even really here yet. It's almost like the motion is going to be when the actual bids come in and people, and it comes before the court, and you reserve your rights, everybody reserves their rights, and we'll deal with it as best we can.
Thank you, Your Honor. Happy to answer any other questions you may have.
No, I have no more questions. That's good. Thank
you very much.
Appreciate it.
Yes, Your Honor. Fran Steele on behalf of the U.S. trustee. As counsel said, we did provide comments. We asked for certain provisions to be incorporated, which they were, certain deleted. And so based on that, we have no objection to the form of order, Your Honor.
Great. Does anyone else wish to be heard? Okay, having heard no response, that the bid procedures order as revised is also approved.
Thank you very much, Your Honor. I appreciate your time today. I'm going to cede the podium to my partner, Derek Hunter.
Okay, thank you.
Good afternoon, Your Honor.
Good afternoon.
Derek Hunter from Kirkland Ellis on behalf of the debtors. I'll see if I can't pick up the pace of the agenda items a little bit here.
Are you saying it was slow before, or was it me?
No. Hopefully these are less controversial. The next one being the cash management motion. That's agenda item 3, docket number 18, Your Honor. By this motion, we're seeking to continue to operate our cash management system in the ordinary course. It looks a lot like a cash management system you've probably seen in other retail cases. Store level deposit accounts, there are collection accounts, they're swept daily, and we have 14 disbursement accounts. We also make intercompany transfers in the ordinary course. We're not seeking to make intercompany transfers to any non-debtors during the cases. We pay standard bank fees and processing fees and the like. We don't have a red line to hand up. The U.S. Trustee's office has been great working late and over the weekend, and so their comments are already incorporated. They may have statements they want on 345B, I understand, but the changes are in the order as I understand it. On the business forms, we're going to print the DIP label on new checks, but otherwise exhaust existing checks. And then on 345B, we've agreed to a 30-day extension or suspension of that requirement, and we'll work through it with the U.S. Trustee, and we'll try to work something out, I think, by the time of the final order for that issue.
In the normal course, the U.S. Trustee's office asks for the DIP designation to be on the accounts, but maybe.
We did agree with that, Your Honor.
Yeah, so, and really, everyone knows that Bed Bath & Beyond is a DIP at this point, so maybe not a DIP,
yeah.
but better.
Yes, I think that theme will come up a little bit later, Your Honor. I think Ms. Etlin would chastise me if I did not reiterate that payroll is this week, and so it's critical we get access to our bank accounts opened up, and so with cash management here and wages next, obviously critical for us to be able to make payroll this week as we expect to.
All right.
I'll see the podium.
If Your Honor would just indulge me just a moment. We have no objection to the cash management order. We resolved our objection with the debtor. The order provides for a limited waiver of Section 345, providing for a 30-day review by the U.S. trustee. And recent bank failures highlight the importance of the debtor's compliance with Section 345 for the benefit of all the stakeholders. And as Your Honor is aware, Section 345 places an obligation on the debtor in possession to require protections for its monies from institutions which hold such monies. And the U.S. trustee, in its supervisory role, assists with this protection by its entry into uniform depository agreements, those are UDAs, which obligate the depository to maintain collateral of deposits which exceeds the FDIC limits. And here, as a result of the importance of protections of the debtor's funds and the requirements of Section 345, the order does provide a limited waiver of Section 345 and an opportunity for the U.S. trustee to review. So, Your Honor, we're hopeful that the debtors will act promptly to ensure full compliance with Section 345, and we reserve our right to be heard at the final hearing.
Okay.
Thank
Well,
you.
And again, I appreciate you working together with the debtor and counsel to get it done. So
Thank you, Your Honor.
Thank you, Ms. Steele. All right, and I have reviewed that order. I can't say I read every single word in there because
Understood.
But I tried to read as much as I could, and there's a lot of words again, but it doesn't seem like it's anything unusual or inappropriate. So I'll approve the order, especially with the consent of the United States Trustee's Office.
Thank you, Your Honor.
Thank you, Your Honor. Next item on the agenda is our wages motion, item number 4 at docket number 11. Again, another one where we shared with the U.S. trustee and worked through their issues in advance. This is a standard wages motion, Your Honor, seeking to pay ordinary course amounts, amounts that could come due post-petition as well. We have 14,000 employees, as we talked about. Over 12,000 of those are store-level employees. They're hearing a lot in the news, and it's critical to be able to reinforce that they're going to get paid for their work, post Chapter 11 filing. I'm happy to, I would flag no amounts above the statutory cap. We're not seeking relief for that. There's nothing that implicates 503C here, so we think it's a pretty.
Even after the final order, no amount?
We don't expect there to be any amounts. I will come back to you if there is, but we don't expect there to be even on a final basis, but certainly not today.
Right. So there's really two questions I had. One was whether on the final order basis you're looking for in excess of the 507 caps, and you just said you may be.
We do not expect to.
But yeah.
But yes.
Yeah. And the second one was whether I'm just not 100% clear on it, but whether you're also seeking to pay expenses, amounts that were due before the period that even are, maybe several months old.
No, well, generally, Your Honor, we're seeking to continue ordinary course. So,
ordinary course.
Exactly.
Okay. All right. That's what I wanted to know. Thank you.
Great. And unless you have any further questions or anyone in the courtroom, we'd ask that you enter the wages order.
No objection, Your Honor.
All right. That is also approved.
Thank you.
Thank you.
Moving along. Next one is at the store closing motion. That's it. Item number 5, docket 28. As you heard from my colleagues, Mr. Sussberg and Ms. Geyer, while we're continuing to market our business, we do intend to immediately commence liquidating our stores. In our business judgment, we do need to begin that process in an effort to maximize value. So this really is critical, Your Honor. I do think it looks like other store closing motions you may have seen in the past. We're seeking to assume a consulting agreement with Hilco and others we're seeking to close, begin the process for all of our stores. It's wave 5 of our closing process, which I think you heard has been going on for some time now out of court. And we're seeking authority to pay customary bonuses to our store level employees to complete the process and making modifications to our customer programs. This is one that typically the landlord bar cares about. In particular, they reached out soon after the order was filed. Again, they were great working with us, getting us comments last night, hours after the motion was filed. We've worked through that. I think we have resolution on their issues through some new language in the orders, which I don't believe you have, but I can hand up in a second if you'd like to flip through. Before I do, just two things that I promised a certain counsel I'd say on the record. One is that it is important to certain landlords counsel that we work through side letters with their particular landlord to govern the GOB process. We have obviously no issues with that, and we're going to start that process expeditiously, and we plan to work through it in good faith with them. It's typically not something you can get done in a day, and so they don't have the certainty that's necessarily locked in now, but they're willing to support the interim orders. I understand based on the representation that we'll work with them quickly and in good faith to get the side letters for those that want it. And second, Your Honor, there is a provision in the interim order that requires certain parties to surrender property if it is property of the debtors. I think that's standard in these types of orders, but of course, there could be a debate about what is the debtor's interest in property? Does the landlord think they have an interest in property? I think the landlords, their rights are reserved on that front. If they find that there's some issue there, they can come back to you on it. So I just want to make those couple statements on the record. I do have a red line. If I may approach, I can give it to Your Honor.
Okay. So, Ms. Steele, this reflects your comments as well?
It does, Your Honor, except I do have one comment that I'd like to put on the record, one objection. But other than that, it does reflect all of our comments.
Okay.
And so what I'd suggest is that I don't believe it's really a language issue, so I'm happy to answer questions, but I'd let Ms. Steele kind of, talk about what her issue, and then I'm happy to address it.
Thank you. Fran Steele on behalf of the U.S. Trustee. Your Honor, our only objection is that the order provides that you have 30 days to return goods to the stores, but only 14 days to use your gift card. And we would suggest to the court that those days should be the same, that the gift card should be extended to the 30 days as when you can return something, because it seems unfair to the consumer to go into the store on day 16 to return something and have in their pocket a gift card only to get to the register to find out that they can return something, but that they can't use the gift card. And we would suggest that it's just more practical for those days to be the same. And based on that, we would object to that provision.
I understand what you're saying, but I guess two things. Isn't that kind of classic business judgment? And also, isn't that classic business judgment as to whether they might think it's better to get somebody in the store with a gift card so they go buy other things like they used to do and extend that period?
I agree, Your Honor,
but I can't. I don't feel I can force the debtor to do that. I think that's a business judgment.
True, and we've asked the debtor to extend the time for the gift cards, even if it perhaps goes out one further week. But even with the limited time, the case was just filed yesterday, and I don't know. I mean, I couldn't figure it out, but I don't even know if they have until the full weekend, next weekend, or does it cut off on Saturday? It just seems like a very limited amount of time to use those gift cards. And we would suggest that it should be, if it's not extended to 30 days, perhaps 21, just allowing a little more time for the gift cards.
And Your Honor,
Hey,
this is
Mr. Hunter.
Ms. Cordry. If I could speak to this point?
Oh, yes.
From the National Association of Attorneys General, Karen Cordry. These orders, yes, these are very standard orders. We spent a lot of time starting in the Great Recession negotiating the terms of these orders, and they've practically become, I think, black letter law almost at this point. But the point about gift cards was one of the most heavily negotiated and fought over issues in many, many, many of these cases. I don't recall any of them being as short as 14 days. I think there's some real notice issues to customers. And one of my other questions would be, if you do start limiting it to that kind of time period, what notice are customers going to be given? How much information is going to go out to them to tell them that these cards they were promised they could use forever are now going to be no good after only 14 days? And of course, the 14 highest priced days of this sale. You know, we have litigated over that, and I think the states might be willing to come back in and push the issue further on that point. So that is definitely one of the points that we have a concern with in the order. Also related to that is the question about latent defects. We have had language in other orders that are much more clear about the fact that people can, speaking about this point about returning items, that people could return items if they buy it and it has a latent defect in it. I would like to suggest that that language could perhaps be tweaked slightly. Two other points I was concerned about that seem like they're okay is, one is the question, I just want to emphasize that sign walkers and so forth, that there could be safety issues in that, so that I just want to make sure that the debtor is aware that the states would retain that right under the health and safety governmental regulation kind of piece of it. And the last piece was the question about personally identifiable information. The motion at one point said, yes, we're going to make sure there's no information passed on, but at another point said we're going to use reasonably, commercially reasonable efforts. But I do think the final order is clear that they will destroy the information. None of it will be passed on with registers and so forth. So I do come back to just basically those 2 points, the gift cards and the latent defects that I think could be dealt with. And then I would go back to the states and say, you know, it fits within our black letter law. But I think right now those two provisions are somewhat less clear than what we have used in the past.
Patrick, do you want to respond?
Yes, Your Honor. So I think if I hear right on the last two, the sign walker issue and the privacy information, it sounds like maybe those are final order issues. I do think the order is clear that health and safety laws, you know, we have to comply with those. Right. We heard about our expert that submitted a declaration in connection with bidding procedures on privacy. And so I think we've actually put information out on that front on a broader basis. And so the debtors are taking that very seriously. So that's what I'd say on those two. Backing up to latent defects, the order has clear language that the debtors will comply with all state and federal laws relating to warranties or latent defects. I'm happy, though, to engage with Ms. Cordry on a final order if they could be clearer. But that's obviously the intent, and so if it's a language issue, we have no problem there.
Did you hear that, Ms. Cordry?
Yes, and we do have some language that I can pass on to them that I do think is a little clearer, because people might not know what a latent defect is, but the way we've used it in some other orders does spell out what the problem is. But yes, I'll be happy to pass that on to him.
Okay. I read it and I thought I saw the vision about latent defects, and maybe it's not clear exactly what a latent defect is, but work out that language real quickly. That would be great. Okay,
we will do that.
All right.
And then on the gift card issue, I totally understand where the U.S. trustee is coming from. Your Honor, this is an economic issue. I think you pointed out it's a business judgment issue. I think it's a good point from a notice perspective. I don't think anyone is surprised or doesn't know that Bed Bath is here. Frankly, our recent troubles and challenges have been very well publicized. Recent filings have said point blank, if something doesn't happen, we will file for bankruptcy. We are considering bankruptcy. It's been very clear. So I don't think the consumer was not on notice that there was risk in this area. And of course, it's a little different to file and make it very clear you have 14 days. We understand that. But we have a noticing agent. We're doing broad notice on top of, I think, the fact that this is very mainstream at this point. And I would just emphasize again, it's economic. It's part of a hard negotiation about the DIP budget, what we were going to fund, what we weren't. And, it costs $10 million a week for gift card redemption. So it's a material number that, in the context of a lot of issues, a lot of things that we did get covered, through the DIP, Ms. Geyer walked through it, specific reserves to make sure we can do the right thing in this case. This is one where we think 14 days was the right balance between all those competing interests, and that's why we think it's appropriate, Your Honor.
And again, our point would be that if you are going to have that short of a period, which is again short, and that's very different from knowing they're in bankruptcy. I may know that you're in bankruptcy, but unless you are specifically telling me in those notice provisions, perhaps emailing to all those customers that you have all those information that you send out emails on, unless I'm getting notice, it's telling me that my gift card is no good after 10 days, 14 days, I'm sure. That's a very different thing from knowing that there's a bankruptcy. And I would want to be sure that that is emphasized, that that needs to be part of the noticing provisions.
On the notice front, the liquidator is going to be issuing a press release that has these details. So it's going to be a literal press release to the world, and these details will be on there.
On the website?
It's on the website. I checked this morning.
And emails to customers, can an email be sent to all your customer base?
I don't know if we have that kind of information. There's a.
Do. My wife gets those emails all the time.
I don't know if she'll be happy about more.
And it may not be everyone who has a gift card, but everyone who is one of your customers should be able to get that notice.
I mean, in a way, couldn't you frame it as a positive almost? Gift cards expire in 14 days, so come in quickly? I don't know.
No, Your Honor, we're doing everything we can to publicize the liquidation sale and emphasize these provisions. If there's supplemental things we can do, we're happy to go back and look at it. We are noticing our customers far and wide on the impacts of liquidation, what their customer programs, what this means with respect to the customer programs. And I think they're well aware. And if we're not already emailing all customers that we have email addresses for, we will do that.
Okay, did you hear that, Ms. Quiggy?
I hear that, and the states will consider whether that's sufficient or whether they want to object to a final order on still these same issues, because there are some other points that are out there as well. Thank you.
All right.
Your Honor, may I?
Yes, please.
I'll be very brief, Your Honor. Charles Dale of Proskauer Rose with Mr. Hillman. I represent 6th Street Specialty Lending. Judge, we spent a lot of time calibrating the interests of stakeholders that had pre-petition priority claims, just like consumers. You heard today about money that will be spent to pay freight vendors, taxing authorities. A substantial amount of money will be devoted to employees, including employees who may have claims under the WARN Act. Your Honor, this is an 8-figure liability that we've provided for, and we've calibrated what consumers ought to get. And I think it's safe to say, given the media coverage of this case, Judge, there's not a consumer in America or several other countries that doesn't know Bed Bath is in bankruptcy and they ought to use their gift cards. Even Mr. Sussberg's mother-in-law called him to get advice on that.
I would say that I think as the coupon was so popular and effective. Also, I think Bed Bath & Beyond has become effective with that, because my wife does tell me, we got the coupon and I was going to, go to get whatever it was. But so I think that's an easy thing to send to people, and I think people do pay attention to that. And I didn't realize the number was that big. I had no idea that the number was that big. And just anecdotally, I think there's a big difference between notice of a bankruptcy and notice of how long you have to redeem a gift card. I agree with that point. But on the notice issue, anecdotally, when I came in today, the guard said to me, "I hear you got Bed Bath & Beyond." And I said, "I do." He said, 3 days to return, 3 days to get your 20%. So people are aware, and I think if you put that, especially if you put it on the email, maybe if it can be done, all the marketing people in a positive way, maybe that would be.
And Your Honor, while I was on the side, I found out that if you were a customer of Bed Bath, you've already received this. The company's actually already sent it out. The company's already sent out an email with these deadlines.
Okay. I would say that Your Honor, I would say that the website does not have that on there yet. It does not appear. So if it could be added to that front page of the website, that would be very helpful to people as well, I think.
It's in the FAQs related to Chapter 11. I clicked through it today, but we'll if there's a way to make it more prominent, we'll work on that. But I do know it's on the website.
Well, trust me, it's not on the front of the website, because I'm looking at it right now. So Okay, thank you. Thank you very much, Your Honor.
Thank you.
Your Honor, the U.S. trustee understands the comments. We're disappointed for those customers that go in on day 15 or take their gift cards when they go to return things, but we understand it's their business judgment. But we're hopeful this doesn't set a precedent in further cases that the gift card return policy will be so short.
Yeah, the only precedent is that I think there's a business judgment precedent that and this is unique to these circumstances that they have this compressed timeline and all that. And I just can't, I don't think I'm permitted to substitute my judgment for theirs on this point.
And I understand that. I just wanted to voice our concern.
It's a legitimate concern. You and Ms. Cordry voiced it very well. And it seems like someone else wants to voice a concern.
Good afternoon, Your Honor. Scott Fleischer, Barclay Damon, on behalf of a number of the landlords, as was referenced earlier today. Just a narrow issue to change the subject off of gift cards here. One aspect of the sale guidelines, right, which cover these store closing sales, allows the debtors to use the verbiage "going out of business" on their large exterior signs in certain shopping centers now. So we thought that that was not really the best way to introduce the public to these sort of new and improved store closing sales. And for the landlord's parochial interest, we don't want a giant sign that says "going out of business" when there doesn't have to be. So especially now with the posture of the case being that there is still a possibility of a sale out there, whether in part or in whole, who knows, it didn't seem appropriate to have "going out of business" out there right now. And I understand this is probably something the debtors don't want either. I would imagine this was probably something that was that turned on the finances of the sales, and they probably think they can, maybe the lenders think they can get some more value out of it if it says "going out of business." But it seems like there should be perhaps a date when we can pivot from something that says "store closing," which is accurate now, to "going out of business" down the road, such as past the bid deadline, if there's no going concern, buyer that comes available. So.
And you're how many stores do you represent?
Still getting a count. So far, let's see, looks like 5 groups of landlords. We have RPT Realty, DLC Management, Inland Commercial Real Estate Services, Rivercrest Realty Associates, Westfield, and possibly others. Still gathering the list. Somewhere in the double digits. I don't know how high it's gotten so far.
All right. All right. Well, Mr. Hunter, do you want to respond?
Yes.
I thought it did say things like, you could say things like in the general area of going out of business.
Yes, the order does provide, I think, customary latitude to advertise these sales as the liquidators and the company sees fit. It's a business judgment issue. And so, but of course it relates to costs and the sales being effective, but, the advertisements are cost money. We've planned for these going out of business sales. We've been doing them already. And at the end of the day, while we are, as Mr. Sussberg puts it, running out every ground ball, and we hope that there's a value maximizing transaction here, because the company's business judgment is to begin store liquidation sales immediately, and what that goes along with. And whether every store says going out of business or not, I don't know. I leave that to the company and Hilco, but they're going to pursue it promptly in the way that they see to maximize value. And that's really all we're trying to do at the end of the day. Of course, if we thought it made sense to wait around for weeks without, going out of business signs on the stores, that's what we would do. But the practical reality is that's just not where we are right now. And we want to maximize value regardless of what happens. And by we think doing that is, requires us to have this flexibility, which is customary, Your Honor.
All right. And there's nothing that prevents you from speaking with debtors or Hilco or whatever, and Mr. Fleischer and trying to work that out. Maybe if it's a cost issue and you want it, you can help them defray the cost somehow or another. I'm just trying to offer solutions.
That's an interesting ask, Your Honor. I think we'll have to think about a cost problem. again, I think it was more of it's a combination of there just being a notice issue almost to the public, right? That is not necessarily going out of business. We all hope that it's not going out of business. So to have those signs up there, it just doesn't seem like the best way to start. And again, they do have that flexibility, and we can talk about whether there should be a carve out of some kind, perhaps. But it did seem like at least, if not a bid deadline issue, a final order issue, to have actual going out of business. It's very common in these orders that on the interim, you can't say going out of business. You could say store closing, sale on everything. And we have, plenty of samples with Kirkland and others. With those orders, it's usually triggered by an actual shift to an entire GOB through a separate order or a final order on store closing.
But, and I appreciate what you're saying, and what you're saying makes sense, but I turn to the same thing that I said to Ms. Steele, is that how do if the experts say this is how they want to do it to maximize the sales, how do I say that's not the right way to do it? I don't know how. I don't think I have that authority, frankly, you can do a side letter. We just talked about the side letter.
I certainly will.
Yeah.
I certainly will. We do them all the time. I'm very confident we'll be able to reach agreement on a letter. We had discussed this particular issue, and we resolved many of our other issues through the order that you'll see in a red line on here on bid procedures and DIP. So this was just that last piece we wanted to get through. So we'll look to revisit this perhaps at another time.
All right. I appreciate it, and I just, like I say, I don't feel it appropriate to substitute my judgment for the experts, and I'm gonna leave it to their good judgment as to how that issue gets resolved. And
Understood, Your Honor.
hopefully you can come to an accommodation.
Thank you very much.
Thank you, Mr. Fleischer.
Your Honor, with that, we did submit, I handed up a red line. I do believe it's resolved with all parties other than those issues we just talked about. So I'm happy to flip through the specific changes if you like. Otherwise, I do think it's resolved, and we would ask that you enter the order.
I had a question about the additional goods. Is there some kind of guideline on that, or is it just that whatever additional goods there are can be brought in?
Yeah, it's light goods of similar quality, I believe is the wording. It's something along those lines.
A lot of goods of similar quality.
Yeah.
Right? That's a broad universe.
It's the benefit of a Bed Bath & Beyond, Your Honor. So it can't be completely unrelated. It can't degrade the sale process or the business. It's meant to go along with similar products that are already sold. And I think we have consistent language with other going out of business sales as it relates to that.
So the answer is there is no limit. It's just that constraint.
You mean a quantity limit?
Yeah.
Oh, no, I don't think there is. You can put as many of those as the liquidator and the company think makes sense and facilitates the sale.
And the debtor gets 7.5% of that?
Exactly, Your Honor.
All right. Okay. I don't, it's 4:30, and I don't want to keep all these people here if we don't have to. I didn't go through these specific changes. I will go through them. I have it right here, and I'm sure they're fine, as everyone has agreed to them, except for the points that were raised about about the latent defects, and so that would go in this order, right?
Yes, there's language already in the order. I think the point was Ms. Corddry thought it was insufficient. So we're happy to look at her language quickly. Maybe what it makes sense to do is one, probably making a few tweaks. We'll submit it to Your Honor's chambers after the hearing once we've agreed on that.
Okay.
Yes, Your Honor, I'm getting ready to send them the language right now, so they will see that on the latent defects.
Sending you language.
Okay.
All righty.
Great.
Thank you.
So we would just ask that if we, when we're agreed with Ms. Corddry and submit an order that it can be
submit
entered.
it and tell me that's what happened, and if not, you'll tell me what the disagreement is, and I'll just decide it right there.
Okay. Thank you, Your Honor. With that, my part's done here. I'll turn it over to my colleague, Mr. Fiedler.
Okay.
Good afternoon, Your Honor. For the record, Ross Fiedler of Kirkland & Ellis on behalf of the debtors. In the same spirit as Mr. Hunter, I'll try to be quick. The next item on the agenda is the lien holder motion. This was filed at docket number 22. By this motion, we're seeking authorization to make payments to folks who have a pre-petition claim for goods or services delivered in which such claimants may assert potential liens against the debtors. These folks consist mainly of freight vendors and third-party warehousemen. And as was made clear in the presentation, it's imperative that the company be able to efficiently and expeditiously route merchandise from its distribution centers to the stores. I understand there are no comments from the U.S. trustee, so unless Your Honor has any comments, we respectfully request entry of the order.
Right, so the one thing that was unusual about this to me was that it was to pay pre-petition secured claims, and it wasn't to pay any other, critical vendors, and I don't see that motion here at all.
That's a good thing, Your Honor.
Yeah, no, but it's just different. It's different. It's just different. And,
Yeah.
so I understand it's just different, and that was what that's what popped out to me. As was demonstrated by counsel for the lenders, all these things were gone over with a fine-tooth comb. You can see it. You can see it in the words and in what is being said here today. So I don't have any issues with that, and I will approve the order.
Thank you, Your Honor. Next is agenda item 7. This is the surety and insurance bond motion. This is standard motion. We're seeking interim relief to continue the debtor's ordinary course insurance and surety bond program. We have approximately 50 insurance policies, 10 surety bonds outstanding. We understand we're largely consensual on the motion. We haven't received any further comments from the U.S. trustee. So if Your Honor has any questions, I'd be happy to answer them.
No, we want you to have insurance. So I'm in favor of that. So, as is the U.S.
Yes,
trustee.
Your Honor.
So that'll be approved.
Thank you, Your Honor. Next is agenda item 8, filed at docket number 12. This is the taxes motion. Again, very standard. We're seeking authorization to pay sales and use taxes, as well as certain regulatory assessments and other permitting fees. So obviously, these are critical to continue operating the business. If Your Honor has any questions, I'd be happy to answer those, but we are resolved on the issues.
No, I'm not sure I saw exactly where the funding for all these payments came from, but I guess you make them if you can, and I know you have to pay the taxes as well, so I'll approve that also.
Okay, great, Your Honor. That's it for me. So now I'll turn over to my colleague, Mr. Sterrett.
Okay, thank you.
Good afternoon, Your Honor. Charlie Sterrett of Kirkland & Ellis on behalf of the debtors.
Good afternoon.
I'm going to try to set the record for the quickest pace here on the Kirkland side.
No problem.
I'll be taking us through the balance of the agenda this afternoon.
Okay, great.
We'll start with the utilities motion filed at docket number 21. Seeks customary utilities relief and affixes an adequate assurance amount for the debtors at half of a month's utilities expense based on the run rate pre-petition, less any amounts currently on deposit with the utilities. Those are offset. We're fully resolved with all parties on this order, including the U.S. trustee. We took one comment in the version of order we'll be submitting to the court later this afternoon from a landlord, and it's purely reservation of rights type language. And so, with that, I'd like to ask the court if you'd prefer we submit all of our orders once more at the end of this hearing this evening for you to review and sign, or should we go only with those that have changed?
That's a good point, because it does get confusing for Mr. Filgueres. There he is on when some of them are final and some of them aren't. That's probably a very good idea. So why don't you? The only thing that means is that it's 4:30 now, and I'm not sure. Is it critical that they be entered today, or is tomorrow morning also? I actually have motions tomorrow morning, but you'll let me know.
Your Honor, I think there are a few that it's critical that we get entered today so that the payroll can get processed. That would be cash management, wages, the DIP, and joint administration. The rest, no problem.
Cash management, wages, DIP, and joint administration. Well, of those, we didn't do joint administration and the wages we did, so just, well, those four, right, will be
Yes.
done.
Thank you, Your Honor.
Okay, Mr. Figueres?
No problem.
All right, but still with that same process, and if we could get a few more entered, we'll do that as well.
Thank you, Your Honor. We can endeavor to make everyone's lives a little easier if we can.
Okay.
And absent any objections from the courtroom, we request your entry of the utilities order.
Yeah, no, I saw what, the application seemed very reasonable and the deposits are there. And it's an interim order like a lot of these are, so I'm happy to enter the order.
Thank you, Your Honor. Next is the NOL motion filed at docket number 23. Through this order, the debtors are seeking approval of procedures for certain transfers of common and preferred stock. The debtors have considerable tax attributes that are valuable, and in a case where value is cut so thin and we're focused on efficiency and preserving value of the estates, this is an incredibly important motion at this juncture. And all we're seeking to do is provide control to the estates and the debtors in terms of understanding what transfers are being made and giving an opportunity to object to any that would threaten the tax attributes. We're fully resolved with all parties in interest that have raised concerns, and the U.S. trustees language is incorporated into the order that's with the court. So absent any questions, we'd request your entry of the NOL order.
On this one, this one actually bleeds over into another one about the waiving the requirement of the list of equity security holders, which it sounds like you're handling. And I understand the part about common shareholders and all that, but like if, for example, in this one, is a substantial shareholder is an entity that has beneficial ownership of 4.5%, and I was wondering, then in order to send them this notice, you have to know that there's someone who has 4.5%, right?
That's right, Your Honor. Well, however, I'll state that we are noticing this to all known registered equity holders, common and preferred, to the extent we have the information necessary to do so. Our proposed claims and noticing agent, Kroll, is working with AST, American Stock Transfer, to get as much noticing information for common equity holders as possible. So we are trying to notice as much as we can, and this contemplates 4.5% holders of common and preferred, but it also is anybody who's interested in owning 4.5% of common. So
right. But like I said, I was kind of focused on the other one, on the one where you were waiving the list of equity holders, and I understand it again as to the common stock. I'm just wondering why you wouldn't want to, if you know it, and it seems like you know it, you wouldn't want to just specifically. Why you wouldn't be able to specifically list the equity holders of more than 4.5%, and I'm just not sure why it is that a problem, or is it to list those people that have.
We're happy to do so. We're happy to list equity holders.
I mean, I think people, if there's one thing that sometimes lawyers and other people look at is like who owns this, and I think I don't think it's that hard to do. So and I don't want to put an undue burden on. I just want to, especially people that are subject to this, why not notice them and put them on the list?
We're happy to.
All
absolutely.
Right. Great, thank you.
Great. So absent any further questions, we'd respectfully request your entry of the NOL order.
Yeah, I think we might have just covered two with one.
I'll take it. Yeah, great. Absolutely. We'll move on then to the joint administration order filed at docket number 5. We have 74 affiliated entities, and we're seeking routine relief to administer these complex cases under the publicly traded name of the name of the publicly traded parent company, Bed Bath & Beyond Inc.
Yes, Your Honor, and the U.S. trustee has no objection, and the debtor did place language in the order that we requested that the monthly operating reports under the new guidelines are filed in each case, and that was agreed to and put into the order.
Okay. Yeah, well, I mean, certainly this is a good case to be jointly administered, and you addressed that concern. So it would be not a good case to not have jointly administered. So that's a pretty easy one.
We agree wholeheartedly. Thank you, Your Honor. We'll move on to the case management motion, which is filed at docket number 7. We're aware of the 2009 general order in place in the District of New Jersey. However, a lot of time has passed since 2009, and we seek with our case management procedures to move things into the 2020s here.
That's a little bit of a shot, but
Made respectfully, of course.
right, okay. Got it.
And so these are.
I'm gonna have to talk to the chief judge about that one.
And these are routine procedures and are seeking to ease the administrative burden on the court and the parties in terms of setting the table for the administration of these cases. And so happy to discuss, and we've been thinking about scheduling, and we're happy to do so now or at the end, or separately through discussing with chambers, but that's what would be accomplished as part of this motion. So absent any questions, we'd request your entry of the case management order.
When the U.S. trustees okay with this one?
Yes, Your Honor, no objection.
I think it's a good thing to